morning, everyone. Today is Monday, January 26, 2026. We are live again from Princeton, New Jersey. What we have overnight and weekend is that stock futures are a little changed as traders assess political risk and await big tech earnings. IWM is bouncing from 0.618 fib to the 0.5. QQQ is at the 3-month, 2-month, 1-month setup box of 623 and 621. Energies and gold commodities are on a rally right now. Gold just opened up again higher at 468. Tesla, Nvidia, QQQ, energies and tech commodities.
Which mega cap has more to prove and which matters most to the markets. Joining us now, Dan Niles, founder and portfolio manager of Niles Investment Management. Dan, great to have you with us.
My pleasure.
You are most excited about Apple, but it seems like they have to deliver a lot in order for you to be vindicated here. Bigger form factor, so an AI-enabled iPhone.
Yeah, and with Apple, it's more of a call for this year, not this quarter. I mean, obviously into this quarter, everybody's concerned about memory prices and what that does to forward margins. But I think services, will be surprisingly good, and that has very strong margins. And so you may get a bit of an
gold
offset
is just
there.
going up and up and up and up
Fine.
and up, huh?
People
That's
are
crazy.
nervous, obviously, about the guidance, but the real thing is, if you think about
gold
this
is over
entire year
5,000
and
for
where
the first
Apple's
time
come from,
in its
they're
fucking
arguably
life.
two years late on AI, and you haven't had a really good phone in a while, and you're finally going to get a foldable iPhone at the end of this year, and it's going to be having an AI-enabled Siri. And if you look at the past, when you had the iPhone 6, for example, and you moved from a 4-inch screen to a 5.5-inch screen, revenues went from growing 7% in fiscal 14 to 28% in fiscal 15. And don't forget, Samsung's had a foldable phone since 2019. So Apple, as usual, is pretty late.
Good morning, everyone.
But that's what I think drives, actually, for the first time,
let's get ready for the
market
open.
A pretty solid upgrade cycle.
Is it a certainty in your view that Apple's margins get impacted by the high price of memory? I mean, you know, we see the memory stocks screaming higher, basically, every day it seems.
Yeah.
So is that a foregone conclusion that those who consume those memory chips that need them will pass that cost on?
Yeah, I mean, Apple's going to get affected, but remember, Apple's buyers are also wealthier buyers. And so Apple will try to pass those costs forward. And so I'm sure the gross margins, operating margins will have a little bit of downward pressure, but that's why the stock's where it is. I think if you're thinking about the entire year, what you should
Tom Lee, as I said, is with me now as we turn back to the markets. He is a CNBC contributor, of course, Fundstrat Global Advisors. So it's good to see you.
Great to see you, Scott.
It's been a turbulent week.
It has.
Is it portend something that's going to come forward here for us?
Well, part of it is, of course, as you know, we're in earnings season and markets tend to be volatile around earnings. I'd say that some of the high-profile declines, like Intel, look bad over a one-day period, but Intel was $17 a year ago. So to me, it doesn't surprise me that you could see some of those stocks have done really well get punished a little bit on earnings.
I mean, this is a hard one to say it's representative of anything. I mean, you know, the company's obviously been challenged. They have the government backstop in there, and the stock was up a ton going into the print. As we turn, speaking of the print, the prints that matter next week, the mega caps, which you still love, but not quite as much?
I mean, we still like the Mag 7 and the mega caps because they're great earnings stories and they have a lot of visibility. But as you know, our top picks this year in terms of sector is energy and basic materials. But as far as earnings stories go, yeah, I think next week's critical because you got most of the Mag 7 reporting.
Tom, you're crushing that so far with that call. Energy and materials are the two top sectors. Yeah. Why were you leaning that direction as the year began?
You know, we were betting a bit of mean reversion taking place in 2026. One of the things we identified in our 2026 outlook in early December was that energy and materials underperformed over the last 5 years at a level that in the last 50 years have marked turning points higher. So we were betting that so much of the bad news was baked in that they could have okay fundamental years, but the stocks could do really well.
I feel like you were on the right path as it pertains to small caps and the Russell just a little early.
Yeah.
I mean, remember, let's remind people, last year you told me up here that we were going to have a 50% gain in the Russell.
Yeah.
Now, obviously, we didn't have that, but the Russell is almost outperforming everything else over the past year, and in 1 month, it's up 5%.
Yeah.
That going to continue?
Yeah. One of the things we talked about a lot about last year was that when small caps turn, it tends to be a multi-year. In fact, it could be up to a 12-year period. So the last turning point for small caps, and on a relative price to sales last year or price to book, they were at the exact same point they were in 2001. That was a launch point for 12 years of relative outperformance. So I think small caps benefit from a Fed turning dovish, possible M&A wave coming, an ISM turning back above 50, and then catching up to where EM, because EM did really well last year, and small caps usually track that. It didn't.
Fed turning dovish, you know, we have a meeting next week, in case you didn't know, and not expected to do anything. So maybe not as dovish as people thought several months ago. And by the way, as we look at prediction markets, as we think about who might be the next Fed chair, BlackRock's Rick Rieder is now the leading contender in prediction markets. There's Kalshi. We, of course, have a partnership with them. 52% leaning towards Rick Rieder. We shall see. Do you care how much you think about who the next might be?
I mean, it's important because it reflects the market. Market needs to respect who the new Fed chair is. Rick Rieder is somebody that markets really do respect. So, as you know, the Fed has to communicate not only with the Whitehouse, but also with the bond market. And I think Rick Rieder's experience in the markets world makes him very credible.
But you're not expecting anything next week, right?
I'm not, but I'm also expecting the Fed to reiterate that they are
going bullish,
focused on no longer fighting inflation, but looking at the job market. That's a Fed put on the economy. To me, that's a dovish tilt. And as long as they're not fighting inflation, to me, that's a dovish Fed.
And that's why you think the equal weight S&P
The market might be
4%
super
so
bullish
far
right here
this year,
soon. Or I mean,
compared
it might
to
be
the
for
S&P,
now
which
because
is
of
up
energy
1%,
and
and the
gold.
NASDAQ,
This
which is
shit
only
is
up
super
1.5%.
fucking
Yeah.
spiked up.
I think so, because as you know, not only is the Fed no longer is trying to establish inflation credibility, which is hawkish, QT has ended, which to me is the same as a version of QE starting. So we are facing a dovish Fed. Even if there aren't cuts,
this is a bullish open, not a bearish open for sure.
I'm not sure everybody sees every appearance that you have, and people generally think you skew bullish, which you obviously do. That said, you're still looking for what you've said could be a bear market in the middle of the year. Do you want to explain one more time why, even in the midst of this bullishness we hear from you, you still think stocks could have a bit of a rocky road at some point?
Yeah, I think 2026 has the same contours as last year. So in 2026, I think there's a good fundamental earnings story, earnings growth accelerating. But we have two transitions to deal with. One is the Fed, a new Fed. The market always tests a new Fed.
Oh, it's crazy how they're killing gold, though.
Confirmation, let's say that starts
every day.
In March, a new Fed.
Every day the thing's going up fucking 4%. Like, I don't even know how that's possible humanly. But
the second is, of course, policy. The White House is much more deliberate this year in picking winners and losers.
Today. That's crazy.
And there's some uncertainty around the tariffs.
I wonder what's going to happen with this shit this week, too.
I
really wonder.
The
Nvidia
so
is squeezing higher, and bulls are in control here on Nvidia, too. SPX bulls are in control.
Could create a drawdown that feels like a bear market, but that's from higher levels as well.
Shit is just a bullish open for now. On SPY and QQQ and gold. gap above. Will it close? Nobody knows. It's just a spiked up open and a lot of things are going on. Spiked up open and a lot of things. Oh my god, POC is going up north. QQQ is at the top of the purple box here.
After a tepid start to the year, which names have the most to prove? It was a tepid start, but also they've been going nowhere, sideways since October. So the setup, arguably, is a pretty good one.
Yeah, I heard you and Mike talking about that. I think it is interesting. Today kind of felt like the day that MAGA fought back, and the prep into next week is I'd take Microsoft for 300. Melissa, off the board there, because I just think it's the one that has been the biggest disappointment to me, both on the charts, but really ultimately in terms of where I think expectations were. It was one of the big winners in the AI trade. It was one of the big winners, certainly in the margin accretion. Azure is a big part of this story. I think the numbers are going to be good. I think you're well protected on the downside. Copilot, I think there's some dynamics there that are very mixed, frankly. But I think the valuation is back to a place where people can own it. I don't think this thing's going to get away from you. I really don't. I think, and if I look at, again, just the charts and allocations, and there does seem to be a lot of heaviness into Mag 7 stocks. If you want to be a technical person who sees that you have a 50 crossing over 200, otherwise known as a bear cross, a death cross, whatever you want. The price action today was good, but it hasn't been good. I think this is the most defensive, though, of all of them.
Yeah, I mean, it has, even on the day where we bounced, the Greenland sort of, tumble, and then we bounced back higher, Microsoft didn't follow along there. Yeah. So the price action was really terrible, even just this week.
Well, I think if you look at the outperformance of the Russell is talking to the perceived overvaluation of the Mag 7 names. So Microsoft is probably expensive to itself and to the market. Having said that, people like buying what they know. So I heard you ask the question of Katie, the technician, Katie Stockton, earlier. Is it a zero-sum game? Does what caused the Russell to outperform, if that reverses, does it reverse for the Russell? I think it sort of does, right? Because if you saw the Russell run out of gas, and you saw
everything is pushing north except IWM
so
now.
I do think that people are going to take a look. Russell valuation trades at around 15 times. Mag 7 trades at around 30 times, 35 times. I think they're going to take a look and maybe go with the Russell.
Oh, interesting. Yourself, would you rather, on the topic,
I didn't realize that. I think I heard two in there.
We're talking about Mag 7. Yeah. But, we'll stick with Microsoft at least. We have seen, this crush in IGV, Bonwin, and
935 is rejecting to 940, creating a cycle at the roof triangle. There's no confirmation
rejection. But with the crush overall of valuations in IGV, how much will that pull Microsoft down no matter what?
Well, I think it trades around 26, 27 times forward. So I would argue that there isn't a ton of crush. Like there is some premium that is built in and will be sustained within Microsoft. So it's not like this thing trades 34, 35 times forward. That would give me a lot more pause and concern. Listen, this thing still has a significant flywheel. Now, I understand the AI CapEx is going to come under scrutiny, and clearly I think the top front and center thing is going to be Azure growth. You don't want to see that start to decelerate. When we've seen pullbacks previously, it's been because of that, and the fact that we still haven't seen AI monetization within enterprise the same way we have seen within the retail user. So I actually think there's a lot to like going into it. I own it into the print. I would likely be adding into earnings. Like you said earlier in the show, I think the bar is set relatively low, and I'd be much more concerned if I had seen this stock run up 15, 20% into earnings. I do think the bar is high. Clearly, the market wants to see follow-through from AI, but I think a lot of that tailwind has.
So the shit is follow-through. SPX is getting a bullish follow-through.
Look at this,
gapped up again today.
It seems like there's a great concern surrounding Meta going into earnings specifically. The quarter should be good, but what will they say about their spend? That seems to be still
near all-time highs. Again, the market is
it's interesting that you mentioned that, because if you take a look at the options market of all four of these stocks, that's the one where the options market
seems to be
least certain and is expecting the biggest moves, more than 6% in Meta. But if you just take a look at the sentiment, so when we're talking about sentiment in the options market, we're talking about call buyers versus call sellers, put buyers versus put sellers. It's actually Apple and Tesla that seems to have the most dubious interpretation of what's going to be happening next week on earnings. Microsoft flow on balance was actually bullish today. And, you know, kind of to Bonawyn's point, I mean, it does trade at a premium to the market. It deserves to, by the way. I mean, it is growing on the top line, the bottom line, and free cash flow growth, all exceeding that of the S&P overall.
I can't even send the bigger picture in the group chat.
You know, and also the options markets are not really that expensive going into Microsoft's print either. So I think call buyers are probably, you know, in the right spot.
Damn. That is fast money traders talk ahead with big tech earnings from 2 days ago with 30,000 views. They talk with that big schmack and then putting a fucking alert at the end saying nothing we say.
Our next guest says the models suggest these trends could continue. Joining me now is Tim Hayes, Chief Global Investment Strategist at Ned Davis Research. Tim, it's good to see you.
Thanks, Mike.
Talk about your broad framework coming into this year. I mean, we're coming off of three
Bullish
strong
for now.
years for the
Market
equity
is
markets. Obviously, the trends are good, but you suggest maybe it's a maturing bull market. So what's the basic bottom line for you?
Well, it's a mature bull market in that most bull markets don't last this long. In fact, this bull market, if you go back to history all the way to 1900, it's lasted twice as long as the median. In fact, it's the 9th longest bull market. So it's gotten pretty mature. It's also, when you have that long of a bull market, it enables sentiment to get very optimistic. So the market's gotten very complacent. Underneath the surface, the breadth has been very weak. We haven't had that kind of strong momentum that you want to see to kind of give you that another leg higher. So I think the market's pretty vulnerable right here, and we'll see how it does next week.
And in terms of the global picture, it would seem as if breadth, at least in terms of the number of markets that are performing well, is looking pretty good. So where would you emphasize?
Well, yeah, that's especially when you think about emerging markets. That's where we've seen very good breadth. And really, if you think about what happened about a year ago, two kind of consistent developments happened. One was, well, the inauguration of Trump, and then the other was when the DeepSeek AI program was announced. And that was really, it became a turning point for EM. And after that point, the US started to really underperform, worried about the tariff impact. They had the Liberation Day. You had the taco trade comeback, but that lasted about 2 months, and the US stalled out. Throughout that time, emerging markets did very well. They held their own and actually really started to accelerate. And you really saw things separate around the end of October when Meta announced its earnings, and that sort of became the beginning of a big problem for big cap tech.
Gold is trying to turn down.
Continue to benefit the relatively attractive valuations of the tech stocks in EM, not just DeepSeek, but throughout that area. And we pointed out how the median PE of the top EM stocks has been so much lower than the median PE of the U.S.
bigger
stocks. So that together with also another trend that's helped EM is that EM currencies have come back. It's really helped markets like Brazil have participated, South Africa benefiting from the commodities and materials emphasis in that market. And so it has been very broad. It's not just, it's really been Pacific, benefiting from the tech theme, Taiwan, Korea, as well as markets that are benefiting from the materials comeback here with the metals doing as well as they.
For Taiwan and Korea, that's heavily leveraged to semiconductors. And so does the U.S. semiconductor trade have to work? Does the U.S. AI trade have to work on some level in order for those markets to continue?
Well, I think what we've seen, which is interesting, if you look at the tech sector for EM, it's been making new highs. It's up 20% over the last 21 days. And meanwhile, the EM's been the weakest, the tech sector's been the weakest in the U.S. So I think what we can, it's not necessarily that people are getting out of tech. It's really more about transitioning into better valued tech, which you'll find outside of the U.S. I think that's kind of what we're going to continue to see.
You guys sort of have the mantra of, don't fight the tape and don't fight the Fed. So the tape is maybe a little bit,
everyone's thinking, I think. But I mean, IWM is literally bouncing from 0.6 fucking something.
Well, certainly the Fed is one of the positives. In fact, we're being that we do follow that. Don't fight
some sort of setup happening at the minimum.
We're maintaining a modest overweight to equity. We haven't yet, we're not yet saying it's time to get out. The market's kind of trying to work its way higher, and let's see either we get a renewed momentum once we get the earnings coming out soon, or we're going to get more disappointment after two very good earnings seasons. That, I think the market's expectations are that we're going to have another good earnings season. If that doesn't happen, well, that becomes sort of a driver of continued selling.
Tesla is the only thing going back down. I wanted this shit to happen on NVIDIA. I thought fucking Tesla was going to go back up and then NVIDIA was going to go back down like that. But, man, it is holding NVIDIA at the minimum. Semi everything into this week.
Let's get a technician's take on this 3-month stall out. Joining us now is Fairlead Strategies founder and managing partner, Katie Stockton. Katie, good to see you. So this flattening out period after a very strong run, what's
this
your
little
read
purple
on it?
box
Obviously,
on
plenty
SPY
going on,
going all-time high,
of
QQQ about 4 times now.
Yeah,
big time,
really
big picture, like over 4
sector.
months,
so
and they're calling it.
Late October, we have seen
What are they calling it? Loss of intermediate tech momentum has been weathered really
and of course,
well.
That's yielded a loss of intermediate term momentum.
Losses? What the fuck? We're at 4,000 gold though. This is first time in human history. We have
really up until that October peak.
Bullish,
the loss of intermediate term momentum,
SPX,
I would argue, has been weathered really very well. We've even seen higher lows since that November low. So it hasn't been dramatic downside, really more just a consolidation phase where very close to all-time highs, in fact, for the major indices.
Shit went up like $4,
but it is certainly a
$3
change in character of the market. So it shows how important these large cap tech names are to the upside.
For sure. And what's your call on whether, in fact, they will resume any kind of leadership? There was a little bit of a hint of that today. We've seen a couple of these phases in the last couple of years where, for a while, let's say the NASDAQ 100 will underperform the equal weight S&P by even 20 percentage points and then rebound.
Wow.
Right. I think it is a corrective phase that should at least culminate in an oversold bounce. We already saw that in the last couple of days from the mega caps. The mega cap complex is starting to report earnings next week. And as you probably well know, they're largely oversold coming into these earnings reports. Apple came down to that 243 support level.
I wish it gets super warm to that. I feel like so trapped. Like,
Meta came down to some support based on the cloud model that was quite important and has gapped off of that support. And even Microsoft today showing signs of life after holding around 450. So these are key support levels and oversold indications that we have near them. So I do think that we could at least narrowly to the mega caps see a brief phase of outperformance or a recovery rally in relative terms that could perhaps get the major indices out of this consolidation phase, but perhaps also maybe just temporarily, because the loss of intermediate term momentum has led to downticks in our monthly gauges that tell us that Q1 will probably see a significant correction. So we have a hint of that from our longer term gauges. And with that in mind, we're going to continue to watch support levels as
popping up bullish right now.
S&P, we're watching about 67.20. And for the NASDAQ 100 index, we continue to watch about 25,000. Those levels are both based on our cloud model on a short-term basis.
Above last
and honestly,
week,
they're not
so
very
bear
strong
trap
support
everybody
levels.
on almost
so if we
everything.
come at them with downside
Gold
momentum,
especially.
perhaps on the back of this relief rally that we're expecting,
This thing
that
is
could be problematic, meaning
4,000.
indicative of a significant corrective phase.
So even if temporarily
this is the only bullshit.
Tech comes back and has a bounce,
bullshit.
Katie, does that mean necessarily that the
I'm
things
getting
that
burnt
had
on the
benefited
video.
from tech's sort of malaise will fall? I mean, financials, small caps, what does it mean for that broadening out trade?
Crazy.
It's a really good question because we do in the Russell 2000 index have some signs of short-term upside exhaustion. I think it's a great example of where the relative performance has come from year to date, and that includes selected areas within financials as well. So I think that would be a natural thing to see at least consolidation perhaps as the focus turns back to tech and back to the mega caps. Let those financials that have run up and the small caps that have run up digest their gains in either a consolidation phase or a pullback. And then perhaps that becomes the start of an opportunity to add exposure, because we do think the rotations that we've seen year to date are pretty meaningful. The Russell versus the S&P 500 has reversed a downtrend line in the ratio going back to early 2023. And it suggests that the phase of outperformance.
I was worried that the market's going to do some like no direction chop around here, but like it's just showing bullish. So honestly, I don't even know. It's just gap filled at the minimum. There has been set up, and now there is like 2 gaps. 1, 2. And there's a QQQ gap down here since 2 days ago. It just went higher on, so but 615, 10 points lower. Market showing bullish. Just it looks fucking crazy. What setup? What direction? What? Where? I'm just trying to find out, I guess. I'm just trying to find out now. Now that it did, I'm just trying to find out. What the fuck is this shit?
Markets are going to be focusing on the Fed's 2-day policy meeting this week. For insights on what to expect,
wait and see from the Fed.
Former Fed vice chairman and a CNBC contributor. Before we even go there, my friend, help us understand what you think is going on. We keep looking at these markets. You heard Steve talking about, is it one of the Kevins now? Now we're talking about Kevin Warsh, Rick Reeder. Where do you land, and how important is it or not at this point?
Well, obviously, who's ultimately chosen is important. As Steve said, only one person knows, and he's sort of floating hints. And look, the sudden rise in Rick here, I think, wonderful person, well qualified, but not very experienced just yet in this space. So I think this is a reflection of this breaking news and who seems to be hot at the moment. I still think when everything settles down, it's probably one of the Kevins, and given the concern about independence, probably a slight lean to Kevin Warsh. But I go back to what I said at the very beginning. Only one person knows, and the rest of us are speculating.
Kevin
I do think
Bassett.
the sudden rise in Rick, again, qualified person, Wall Street
Kevin
favorite.
Bassett.
But I really think it's unlikely that he'll be the first one across the finish line. But time will tell.
Roger, we've talked a long time about whether we'd have a shadow Fed chair or whether we have a shadow Fed chair already in many respects that just doesn't have a name yet. Does it matter who the individual is at this point in terms of the way the markets are thinking about this?
I don't think so. Look, I think the main
little
thing is
algo
that
range
4
happening
people
at
here,
morning
all of
open,
whom are credible
9:40.
to the market, and I think that's the most important question. The big anxiety would be that the president might bring in someone out of what we describe as left field, so to speak, someone who created a lot of concern. But these 4 names, I think, are all well within the range of acceptable, and I think that's really what the market's looking for, and it's one of the reasons why I think Treasury markets in general have been pretty well behaved. There's an expectation that at the end of the day, it will be a sensible person who understands the importance of the Fed.
What do you think we're going to hear this week?
From the Fed itself?
Yep.
I think this is a stand pat week for sure. Today's data on durable goods that Rick Santelli reported earlier shows a strength in the economy. The labor market numbers were one can look and find whatever you want there. Unemployment rate came down a little bit. We still are in a low higher, low fire. So I think overall the Fed just wants to stand pat. They feel they've got time to wait and see. And then as I've listened to the commentary from policymakers, again, some of the divides that were in the minutes still exist. So this feels like a wait and see market or wait and see meeting. And we should all be listening to see if there's any hint or a bias towards a future action.
And then as you see the rest of the year play out, again, this goes back to who you think is in that role, or maybe it doesn't matter who's in that role.
When is the Fed meeting? Wednesday? Thursday?
How many cuts do you think we'll have by the end of the year?
I think I think inflation is still running a little hot, as I've said a few times. Well, it strikes me as limiting the number of cuts. So whoever comes in, I think maybe this year we'll see one more cut. And the market might be pricing a bit more than that.
There truly is no cycle right now.
I see,
at least downward,
underlying
they're going
strength
a little
in the
bit higher, a
economy.
little bit higher.
A lot of unevenness for sure.
Barely any cycle.
But
they're
nothing
creating
that
at
would
least bullish
force
liquidity
the
or
Fed
something.
to be overly aggressive, given where they're starting, which is roughly at neutral territory right now.
What is your expectation for the actual economy? And the reason I ask is, we were in Davos last weekend. It was just, the wild sort of variation in terms of views. We talked to Peter Orszag at one point. I think he thought inflation could actually get up to 4%. others who think it's really come down, is going to continue to come down.
Because I had like one or two people message me yesterday and just not to say, hey, I want to be added back into the group. Are you going to add me back into the group? But like I literally just asked them to be, active in the YouTube. But they won't be active in the YouTube. So I mean, I don't know what to ask. You know what I mean?
Shockingly
because you won't do what I ask. So.
Look,
You're just trying to be here so that you could be in the WhatsApp group and then also channel hop here and there so that you could be over there and then be in the WhatsApp
what we've
group for
observed
whatever.
is, headlines move the market one day and then 2 days later back to normal. So I think traders and others should be looking at the underlying.
WhatsApp
and the
group is
underlying
only for
economy in the
WhatsApp,
US, I think, is relatively solid.
People that are active on WhatsApp, I guess, but people that were here on YouTube to watch to begin with that are here.
A lot harder than for those who have a big
we've been
exposure
saying this shit from day one, not even just
but
now.
we're also at the very
so
beginning
clearly
of
you
what I
weren't
think
here.
will be a very positive AI story for long
enough
periods
to
of time.
understand.
And I think that's what most people are looking at.
So
and I expect over time, the strength of the market will broaden out. So we're no longer looking at 5 or 6 or 7 or 8 names. So count me, I would say, constructive. I do not think inflation is going to hit the 4% number, but I also think it's unlikely to be at 2% by the end of the year. Indeed, the Fed itself doesn't think it'll be at 2% by the end of the year. So more work to be done there. Consequently, I think a cautious Fed, and by the time we are, this time next year, we will look back on a 26 that was roughly the same as 25. Strong equity markets, an economy that looks like it's doing well. Labor market that may be softening somewhat, but not falling out of bed.
You have to understand, like, you people that are not here be coming in the WhatsApp, be posting some crazy ass shit in the most volatile, most crazy ass, most important moments, and then you're like, oh, blah, blah, blah. Like, I literally told you from day one, we don't do that, and we need distraction when it's the most craziest. So, if you don't respect that type of thing, then you have no respect for what we've been asking and the rules that we put in there, right? It's just, yeah. Can't really be, yeah.
Let's get a technician.
U.S. Rare Earth.
Rare Earths announcing a collaboration with the U.S. government and a $1.5 billion in private funding. The government's going to provide the company with
something with energy and
$1.3 billion in terms of a loan and proposed $277 million in federal funding for a total of $1.6 billion in U.S. government funding. In exchange, the company is going to be issuing to the Department of Commerce 16.1 million shares of common stock and about 17.6
all these people gotta do is be WhatsApp in the YouTube chat and say hello here and there and be like, oh, I'm a human being, right? But like, no, all they want to do is just literally be here 5 minutes out of a couple of hours in this day and say, hey, good morning, and then be like, not even say good morning. I'm sorry for everyone that said good morning. I didn't even say good morning back, but like, they just want to be in the group for whatever. Like,
private industry,
you gotta understand that's what you want.
That it believes are national security related. This is one of those. Of course, it also raises questions just about what people have described as state-sponsored capitalism. Becky.
Yeah, I go back and forth on it. I mean, on the one hand, you don't want to see the government involved in some of these things, but when it comes to national security, things like semiconductors, I think there's almost bipartisan support
so bullish
for a lot
right
of those
now.
efforts at this
$5 up
point,
from market open.
We let ourselves get into a position where we are overly reliant on companies that are in countries that may not be our allies at this point.
$3 up.
Look, I think the big over-under is 5 years from now, 10 years from now, will we look back at these investments and describe them the way they, will we look at them as profitable investments, or will they look like Solyndra? And it's so interesting to me that in this moment, there was, or I should say years ago with Solyndra, for example, there was so much consternation. And that was put in the context, by the way, right or wrong, of a national security of sorts, or at least sort of a national strategy.
National interest. I don't know that was national security. I think
around
that was
EVs.
National interest.
Well, the question is
whether you believe climate change is a national threat.
Anything above bullish, but like they might pull back.
And whether EVs unto themselves or even vehicles should be considered national security related. Meaning, if we don't have a automobile industry in this country, is that a national security threat?
Yeah.
I mean, it's very interesting to decide which industries we think are considered national security
market open,
and which aren't.
Although, look, we look at these things so much differently post-COVID because of the supply chain. It really focused on the supply chain issues and how we had allowed ourselves to rely so heavily on so many other countries. I think it would be hard-pressed to, let's just say, the semiconductor industry. I don't love the way the CHIPS Act set things up. I don't love how they doled out some of the money, but I think it's hard to not argue. I think it's hard to argue that we should not be in a position of trying to have foundries here in this country, particularly when you look at how heavily reliant we are on Taiwan and what China has been saying about their plans for Taiwan down the road, too. All of a sudden, you realize the 20 or 30 years that we spent trying to say, we can do this more efficiently if it's not done here, if it's made other places where it's cheaper, more effective. We can do this for cheaper or more efficiently. All of a sudden, you kind of reframe some of those things and think maybe that's not the best way to go about every decision we make.
I actually think I think about.
Okay, so if you have been watching regularly Dancing Diva and you are one of the person that messaged me, it says that you were here on the 16th of January and then the 20th and the 22nd and the 23rd and the 26th. So this is your 4th or 5th stream here, right? People have been here for 200, 400 streams. That's a cap. People have been here for more than 100 streams. You have to understand, you have not been here. So if you're going to be here, type, so that people can know, I can know you're here, and you could join later on.
Slightly differently, but maybe we would be in agreement about this.
You ain't going to join the group to post weird things like what? A ladder strategy, right? You weren't the first person that did that in our group either. Well, we're not doing that when you just started coming here 3 or 4 days ago, 3 or 4 streams ago.
To me, the issue isn't whether we should be trying to favor
people
these
watch, people go.
Ways. The question is
that's
how
not
we
my
favor
problem.
These so historically,
let's have some respect. Let's have some respect for people that at least stay and try their best for what they want to do.
In businesses, which to a large degree create all sorts of perverse
incentives
long term down the line.
Not even for me, man.
Historically, by
people around.
Creating tax incentives. That's been done.
That's
for
what
decades.
I'm trying to protect. Respect for people
kinds
around.
Of incentives. There are lots of ways to provide for industries that we think this country needs.
692.63.
Whether we should be
HOD at 955. There's a divergence at the roof, and they're rejecting.
Relate to those and how this all.
There's a divergence on
they're complex issues. They've been yelling at me for the last.
And they're rejecting.
Let's
see what happens.
Discussions. Obviously, it's a continuing theme that we're
Not
following
that
at this
clear
point.
of a rejection direction happening, but I mean, still something happening. Cycle is happening. Setup up is there. Setup down is there too, but they're just creating cycling. That's what I see.
Hey, there he is, CBOE, pre-bell playbook.
Tesla, Apple, Meta, Microsoft to lead earnings amid volatile metals and natural gas rally. So, yeah, clearly what's happening.
On this week. Obviously, you
Energies and gas bullish still.
Names going out.
Tesla, Apple, Meta, Microsoft coming up.
Apple. What do they all have in common? They're all off their highs, right? They all show some room between their recent all-time highs and where the stocks are trading now. A company like Apple, they're actually oversold on a relative strength basis. So there could be some interesting plays there. But we're going to get a look this week at earnings from U.S. consumer stocks like Visa, MasterCard, American Express. That'll give us a better look at the U.S. consumer. Boeing and Caterpillar, 2 big industrial names coming out with earnings. And then just a lot of high-profile names filled in there. Starbucks, UPS. So that'll be something for everyone this week in terms of earnings. Obviously, the major headlines will be in those 4 of the Magnificent 7 names. So we'll certainly watch those. But a lot more than that, something for everyone this week in terms of large cap tech earnings, as well as, I think just as important, a really good look at the U.S. consumer, Nicole.
Yes, absolutely. So much coming in. I mean, when the Fed meeting starts tomorrow, you know, we'll have so much about Fed independence, Jay Powell under the microscope, and then we'll get the final chat here on the afternoon on Wednesday. What are your thoughts?
Yeah, I think the overall Fed meeting itself and the decision, about a 97% chance that they're not going to move, and no one expects them to move. But it gets real interesting once the press conference starts and Jerome Powell walks up to the microphone. Think about the range of topics he could talk about. You mentioned Fed independence, the Lisa Cook trial. He could talk about overall interest rates going forward. He could talk about things that are going on with the Trump administration. So this could be one of those press conferences where once the Q&A starts, it could be all over the board, Nicole. So watch for that seeping in. You mentioned the dollar and the Japanese.
Look at the pre-market
moving it looks like they're a precursor for some intervention.
What if this shit hovers up? This shit could hover up.
Japanese bank. So that could be really interesting throughout the week. And then you've got
that's why I worry a little bit.
The movement on the dollar based on that, and then the dollar
volume is all the way up top.
To the moving gold that you're seeing. So many stories to start the week. We can't keep up with all of them, Nicole. There's a lot
pullback yet. There's a divergence at the roof.
The gold and silver story has been going on. People are still running.
It's terrifying as fuck. I mean, it looks like it should drop, but like, look at QQQ MACD holding too. It's barely any volume.
You know who? Stephen Orr actually said he was short silver on Friday. I think he was getting out of the silver trade. But gold is still very much viewed as a safe haven and hitting new highs, right?
Yeah, exactly right. And like I mentioned, the lower U.S. dollar is not hurting the precious metals. There's that macro relationship there. Lower dollar leads to higher metals.
I guess there's cycle creating to decide whether they want to show lower or not. But I'm just not feeling that much confident about lower. There's a divergence at the roof too. It's just.
To start the day. So
it almost feels like candle showing. I don't want to be a part of candle showing.
So yeah, they're all connected, and right now gold over $5,000. Right now gold sitting at
gold. 5,000. 5,000. Come on, 5K gold.
Up $85.
5K gold. And the video 180 is getting toasted.
It's my cheat sheet. Okay, let's talk about
unless they do somehow a 4% drop again this week. I'm fucking toasted on the video.
Some deaths, fatalities. We've always got to note that, unfortunately. With some thoughts, we're going to watch for the economic impacts too, right?
The market trying to go bullish again. QQQ especially. 10 a.m. rejected. 10 a.m. bouncing into 10:05. This shit is hard. The market is almost coming in with BS cycles in the morning. Even if it rejects here, I'm going to be scared. Even if it goes higher, I'm going to be scared because of the divergence at the roof.
So, yeah, the bitter cold really affecting
something crazy happening.
Towns
morning
like
cycle.
Like Nashville, Tennessee.
How do I know if they reject and then this is real or not because of the divergence at the roof? How do I know if they want to clear the roof or not? But
I think the most important thing
all
is
I can see is just what they're creating.
Cold weathers have dipped. So yeah, really, the cold is.
The market is creating what we are creating.
It's a record. In terms of temperatures and how far south some of those temperatures have dipped.
Good morning, Oscar. Good morning, Dill. Good morning, Rod. Good morning, B. Termer. Good morning, Edison.
Yeah, I mean, you mentioned Tennessee. I know Texas was terrible. Pennsylvania. I mean, there's thousands. I want to say million, but I'm not going to say it because I'm not sure. But I think it was 800,000.
If they're rejecting, they for sure ain't going jack shit nowhere. If they are rejecting, they for sure aren't going nowhere yet. Just not a single inch of BOC. 6 cents.
Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, start off of a new week on Wall Street, last week of the month. We got a lot on the docket coming up. How are you approaching this week? What's capturing your attention?
is like scary as shit. Losing control.
To you. Hopefully you're staying warm out there in New York. But I think it's
maybe another quick ass pop and then fucking something. But yeah, that's what I feel like. I don't feel like a drop is coming. I feel like a fucking quicker pop is coming.
We were able to recover that at the end of the week, as well as the 20-day moving average by a couple of points, 2 points, 3 points or so. What you would like to see this week is
I feel like SPY and IWM will.
I believe that if you're looking at the setup from a fundamental standpoint, we have the Mag 7 earnings that are
candles. Nothing's going on.
A couple of those Mag 7 names like
10.05
Apple
bounced.
that have actually sold off pretty aggressively here over the last month and a half or so, and we might be seeing a base form. And if we do actually get better than expected earnings announcements as well as guidance moving forward, they could be the stocks that actually do lead us here. That rotation.
Maybe they're actually creating a cycle confirmation on QQQ. That's just
on Friday. Getting into technology and communication services as well as discretionary was something that was a little bit more meaningful for me, at least. And that, I think, once again, that kind of sets us up for potentially trying to test that 7,000 level. I'm not sure if we're going to be able to hold that, but a rotation this week because of the earnings seems like it's potentially likely.
Bears are coming.
Interesting. All right, we'll come back to the levels you're paying attention
I have to say bears are
today,
coming. This is the 3/3 though, so if it reverts here at 10.05, 10.10, I would not. I mean 10.10 or 10.15.
Watching here in terms of the momentum and what's fueling it.
It would be the 3/3 if it happens.
Yeah, I think the silver trade is definitely a speculator driven trade, especially when you're kind of looking at the intraday action here moving to the upside. If you're looking at the commitment of traders report, you actually did not see a
IWM is going lower.
Long position taking place last week, and I think that's going to be.
I think this is some sort of setup happening. IWM bounced from the 0.6
items taking place for the United States
1.8 to the 0.5 above, and then now dropping below.
That might be a tailwind for now, but maybe a headwind moving forward. So silver continues to rise to the upside. Geopolitical risk that's taking place. We also have the situation where
3/3 bearish time is 10.10.
Down about 0.3%, but overnight the dollar's down.
This may go lower, but this is 10.10, 10.15 showing 3/3 since 9:55, 10 a.m. now with the divergence
a lot of physical commodities, especially the metals, a little bit higher as well. So not a trade to.
They went jack shit nowhere and then dropping a little bit bigger. With two candles, but these candles are humongous compared to the candles that we've been having. So
still intact in some respects. I think that's reflected in gold, and I think for silver, it's just a higher beta trade that's easier
smaller
to
cycle
upside, and I think that's what we're seeing in that market.
Is bearish, was bearish, bigger cycle is creating. So I gotta be a little bit careful here with what I am watching and saying out from what comes.
Yeah, I think the gold move is more, central bank buying. They continue to increase their balance sheets pretty much across the board, from China to the United States to you name it, Bank of England. They all continue to buy a significant amount of gold. Also India as well. And so I think that's a little bit more traditional. Silver is more of a mix between an industrial and precious metal. So 50% of the silver demand is actually industrial. And there's a case to be made that we have a structural deficit within silver, and that's been the case for the last 3 to 5 years or so.
Bulls are trying to get algo range off 940, algo range off 10.
So I think the silver move is kind of reflecting maybe global expansion when it comes to economic
look at where the algo ranges are perfectly. Top of 940, bottom of 10.
It's easier to kind of ramp up to the upside once a lot of short traders get kind of
there is some sort of support building on algo something here.
That we're watching in USA
I don't know if it's a support, but it's building a cycle with the algo something here. I don't know.
In the pre-market.
QQ trying to go bearish. IWM trying to bounce.
Yeah, so it does appear
crazy. Time is 10, 12, 10, 15 is here in 40 seconds, and QQQ is going lower.
$1.6 billion debt and equity package. There's also going to be an additional $1 billion in private investment to be announced alongside that deal as well. This is to obviously bolster domestic production when it comes to U.S. rare earths.
It looks so sus.
Really the mining.
It looks the most sussiest possibly could.
Minerals that can be extracted from the United States, but it's also processing.
Time is 10, 15, and 15 seconds.
Not only trying to bolster the
I can't even call this shit bearish because SPY and IWM's bounce trying, so unless this shit drops through,
that's in Oklahoma, so that's really where this
I don't know.
Taking place here.
It's looking
what
crazy.
Is something that is very interesting. Cantor Fitzgerald
wild.
is going to be higher to support the funding rounds here. Be mindful, Brandon Lucknick is the chairman of the board there, and then his other son, Kyle Lucknick, is the executive vice chairman. So kind of an interesting dynamic when you're looking at who's going to be raising those dollars. But at the end of the day, we continue to see the expansion in rare earth
Bulls are here big time on SPY. Look at that. Bulls are fucking here big time. They want to clear the divergence in one candle too. So that's maybe a trap on QQQ building.
With regard to the Lutnicks, especially given that the Commerce Secretary is
HOD on gold too, 2.3% now.
Something to obviously stay across here. It seems to follow
maybe that is a bear trap a little bit.
When we think about, for instance, Intel, MP Materials, and
at least until the divergence clears, maybe.
This is about shoring up strength in certain areas. Is that how you would see this, KG?
Yeah, I think the government side of it is rather than trying to subsidize these businesses outright with either actual physical dollars or tax credits, things of that nature, the United States obviously gets an equity stake, and then they would benefit as the company benefits
near
to
the
upside as well. Others can look at this and say this is a little bit too much intervention from the United States government and picking and choosing winners within any industry, if it's rare earth industry or if it's EV or what have you. So kind of a mix when you're kind of looking at the perspectives, but I think from the administration standpoint, it's just a different way in order for the U.S. to get exposure and also benefit and see success for both of these companies as well as the United States.
Okay. All right. Let's get back to your levels that you're looking out for today on the S&P 500. What are your targets? Or what are you watching?
Yeah, to the upside. Yeah, to the upside, 69.45. There's a split between the 69.40 and 69.50 calls, so going in the midpoint right there. And then to the downside, 68.50. A little bit more bearish positioning to start off this morning, Diane, so keep your eye out on that.
All right.
Damn,
Green, our senior
they
markets
cooked that bearish position at market open, huh? KG sent some bearish positioning at market open, and this bitch just went straight north. Since market open. What the fuck? Oh my god. Oh, hell no.
Warming up to Kimberly more and more after what I...
Yeah, hell no. I'd rather have nothing on than listen to the fucking that.
Welcome back. As AI continues to transform industries across the globe, the world's largest semiconductor company is racing to keep up. I sat down with the CEO of...
This shit literally coming in fucking repeat mode, dude.
Markets whipsawed this week as President Trump's comments at Davos sent investors scrambling to reassess their economic outlooks. Charles Schwab chief investment strategist Liz Ann Saunders in a recent article warned that we're entering an era of, quote, instability, where volatility, rotating leadership, and uneven growth may be the new normal. Liz Ann Saunders joins me now. Hey, Liz Ann, great to see you again.
Hi, Jack. Nice to see you, too.
So help us prepare for this era of instability. What are the implications for investors?
So I think it helps to explain what we're often hearing about the K-shaped nature of the economy, about bifurcations in the equity market and rapid-fire sector rotations. And I think it's just instability is just a better descriptor, I think, than uncertain. The environment's always uncertain, but that almost suggests sort of a linear tracking. We're just waiting for the next data point. I think with geopolitics, as we have learned, with monetary policy, with fiscal policy, with tariff-related policy, it just comes at us from lots of different angles, and it just means things can turn on a dime really quickly from a volatility perspective.
I said at 10:03 in the WhatsApp group, I'm a little worried market's going to stay bullish due to energy and commodities for now. This purple box set up on QQQ, so maybe we need some patience until the action shows them more clearly. But did say I'm in the gold put 3 days
I
out,
think
but
they
like
have
that's
put
fucking
themselves in a
crazy.
timeout
SPY and
akin to what they
QQQ
did
is
about a
chop.
year
Like this is
ago
what I was
when
expecting
they
though. Like it's
halted,
just
at least
somehow chopping,
temporarily,
fucking
the
hovering
easing
up here.
cycle. I think that's the best bet.
It's showing
But
north
it wouldn't
crazy.
surprise me to
Holy
see
shit! Now
dissents again,
time
possibly
is
in both
10:20.
directions. That's what we saw at the last meeting. And what we're also seeing, which is not going to come
This
in the
doesn't look like a
January
lot, but it's a
FOMC
lot.
meeting, but every other meeting
We
we
are
get
near
the
all-time highs again.
updated so-called dots plots.
This is near all-time
The
highs
estimate
again.
by all the members as to where they
By
think the
30
Fed funds
points,
rate is going to be,
6,950,
the
we
summary
just
of
rallied
economic
50 points up.
projections, and what we're seeing there
This
is
is
just
not a little.
a
This is a
wider
lot.
range of
IWM is back at a
expectations.
0.5
And I think
fib.
that is something that will continue to be sort of the
That's
name
a
of
lot.
the game this year.
That's
just
a lot.
a wider
We're showing back
set of
all-time highs this week
perspectives
again.
from the members
That's what I'm
within
showing.
the
That's what I'm
FOMC.
saying.
Yeah,
Like,
that dispersion reflects
50 points we could do that because we're literally 20,
you
30
were one of the
points away
first
from
people
all-time
to
highs now.
predict this concept of rolling recessions, which I think is also part of the same story. Can you tell us where is the recession now? What's doing well? What's doing not so well?
Well, unfortunately, manufacturing, which rolled into its own recession a number of years ago, really hasn't pulled itself out. It's struggling to try to do so. And if we use the ISM manufacturing index as a proxy, still below 50, which is the dividing line between expansion and contraction. But alongside these rolling recessions, we've had rolling expansions. And in the case of manufacturing, we have the much larger weight in the economy that comes from services.
10-10 bounce to
and
10-20
services
for now.
has continued to maintain strength. So it's served
Divergence
as
at
an
the roof
offset
cleared.
to the
Right,
weakness in
divergence at
areas
the
like
HOD is
manufacturing.
cleared.
Housing is still trying to pull itself out of its own recession. We just haven't had
Setup
systemic
was north
weakness
for
that
now
brings
in
the
the morning.
economy down all at once. We just have these cycles where you have pockets of weakness and strength that roll through the economy
Bulls
as
are
opposed to
here
happening
into
in a linear
10-20.
fashion.
This is the
Which
3-third, and divergence just cleared at the
diversification
high of the
in
day.
economy. You know, the manufacturing
They
story
could
hasn't
break the
really
roof
been
again,
told.
though, even if they reject, but this is
shed
showing
nearly
north.
70,000 manufacturing jobs last year.
All these bears are getting
I'm
trapped
asking you
from 10 to 955 to 1010.
Coming
Coming in nasty to
most
market.
of our lives, we've
Coming
seen
in
bond
fucking
yields
nasty to
falling
market.
and stock market basically
Can't lie.
rising. That
This shit
story
is
has been
bullish.
upended in the
Can't
last
lie.
few years.
It's coming
You've been
in
looking at
fucking
that
nasty.
and thinking about what
It
might
is.
come next.
Using
Give us
the
your best
divergence
guess.
at the roof.
So depending on what rolling time period you look at, we've been back and forth between a positive correlation between bond yields and stock prices and a negative. And I think the market is trying to figure out what the backdrop looks like. And the backdrop that's important is for the 30 years or so from the mid-60s to the mid-90s, most of the time bond yields and stock prices moved in the opposite direction because bond yields were keying off inflation more so than growth in that era. So higher yields, higher inflation, not great for the equity market, vice versa. From the mid-90s until the early part of the pandemic, it was the complete opposite because bond yields were keying off the growth side of the equation. So higher growth, higher bond yields, and higher growth without the attendant grave concerns about inflation, that's sort of nirvana for the equity market. We've been kind of bouncing between those sort of two regimes. And I think if we get to an environment where bond yields are keying off of growth, then we can see that positive correlation. But if inflation becomes a driver of bond yields, that's a little bit trickier background for the equity market.
Thank you for that. And I'm going to put words in your mouth. Tell me if I'm wrong. In this environment, you like the old GARP, growth at a reasonable price approach to investing?
This shit is chomping on puts
so
for
we're
now.
Very factor focused,
SPY.
so investing based on characteristics as opposed to monoliths, either at the sector level or at the style level. And I think it's a backdrop where you want to have the combination. You want to look for positive earnings revisions, positive earnings surprises, but you want to focus on the value side, particularly balance sheet strength. That's really key.
IWM is also showing that from Friday because it went down all day without the market going down.
Thank you, Jack.
Welcome back. Your morning movie this morning is NVIDIA and CoreWeave. Take a look at these stocks. CoreWeave right now up almost 10%. NVIDIA flat as NVIDIA is deepening its bet on AI infrastructure with CoreWeave, investing another $2 billion in CoreWeave by purchasing Class A common stock worth $87.20 a share. The deal also marks NVIDIA's first...
Hey, you see what I'm saying, bro? As soon as the candles goes against whatever the individual is thinking, right, the individual is instantly gone from the channel or gone from the group because they don't give a fuck about what's going on because it's completely against what they want happening, right? So those type of people be DMing me like crazy saying, oh, I'm here, I want back in. Bro, you gotta prove it. Hey, this market and this life ain't no bullshit. You gotta prove yourself.
Standalone CPU launch.
Sorry to say.
A direct challenge to Intel and AMD as the company pushes to power the next phase of AI growth. Markets this morning are mixed. Take a look. Investors are bracing for a heavy week of earnings while tracking developments around energy prices and global growth. The Dow Industrials are up 8 points, but the Nasdaq down 47. Natural gas prices have been surging, up 17%, above $6 for the first time since 2022, as a massive winter storm is driving up demand for heating oil. Yields right now. Take a look at where yields are pulling back this morning. The Federal Reserve is kicking off its first meeting of the year tomorrow morning. Widely expected that the Fed will hold rates steady after 3 straight rate cuts. The yield on the 10-year now at 4.22%. Inflation remains above the Fed's target, even as the president has reined in inflation, and the job market is cooling. Lots of worry about AI efficiencies replacing jobs. Markets watching the Fed Chair Jay Powell's comments, of course, around Fed independence, future rate cuts. We will get that on Wednesday as they wait for President Trump's decision on the next chairman of the Federal Reserve. Joining me now is Macro Mavens President Stephanie Pomboy. Stephanie, great to see you. And I want to start with what you have been talking about for so long. You've been recommending that the audience buy hard assets, things like gold and silver. We're seeing another day of record highs for the price of gold. Gold surging past $5,100.
This shit is on something.
$5,100 an ounce, driven by strong ETF inflows as well into gold. Central bank buying, rate cut expectations. How do you see the situation today for hard assets, including gold?
Well, thanks for having me. Yes, the backdrop for hard assets, I think, continues to be incredibly favorable. In fact, we haven't really seen a lot of what I view as the fundamental case for the precious metals, which is surprising. They start to move in anticipation of several macro events like expansionary monetary and fiscal policy or a kind of risk-off scenario. But you don't see a move this parabolic before you start to get traction on those themes. So it is really interesting. It's a little unnerving, I will confess, as someone who's been bullish. I didn't expect that we would get to this level this quickly. So I'm sure that we'll get spanked hard sometime soon. But again, I think the long-term, the bigger picture for the metals is very bullish. And I would say, just kind of on a little bit of a tangent, that what's happening in Japan is really playing a major role in what's happening here with the precious metals in terms of their out-of-control issue with JGB yields soaring. At the same time, their currency is depreciating, which is a very unusual dynamic to see rates going up and the currency weakening. And so it looks like the MOF is going to have to come in and intervene directly, which is, again, just more of this currency debasement theme that has been driving the precious metals for the last year.
Yes, silver also skyrocketing above $100 for the first time. Silver's at 109 right now. Scott Bessent, the Treasury Secretary, told us that some of this was
rejection
Japan.
Trying.
When I interviewed him last week on stage,
I want to see if confirmation builds.
He was worried about all the spending and the policies there, sending yields, interest rates skyrocketing in Japan and spiking our rates as well. Stephanie, if I want to buy gold and I want to make sure that I have exposure, do I want to buy the metal, gold, or do I want to buy some ETFs? There are plenty of ETFs out there that have gold as well as gold mining. Do I want to buy an ETF that has gold as the metal as well as the miners in it? What do you think?
Well, the miners have been undervalued relative to the price of gold for a long time. They moved spectacularly last year, but they're still undervalued relative to the price of the bullion. And you can position that through the ETFs, like GDX, which is the basic gold miner index, and then there's a junior miners index as well, if you want to get a little more speculative. But I would caution people, these miners, they move very sharply in both directions. So if gold pulls back, I would expect the miners will get hit, in that pullback. So, again, I think the long-term picture is extremely favorable and continues to be bullish, but I am mindful that given the run we've seen so far, you're probably ripe for a pullback.
IWM.
As for gold ETFs for the bullion, you want to make sure that whatever ETF you own is actually redeemable in physical. Otherwise, you're not accomplishing anything. You're just owning another form of paper claim, which isn't really giving you anything. You want to make sure that the ETF is redeemable in physical, and there are a few ETFs that actually do that.
Ryan, we're getting the
November
durable
here.
goods out better than expected,
There's
up
no
5.3%.
cycle confirmation rejection.
4.5%.
This could be 1/3, 2/3, 3/3 cook and bounce to HOD again on IWM, or it goes lower.
All other issues which are consuming our conversation, the economy is doing quite well and expected to continue growing.
We just broke the HOD, cleared the divergence at the roof. Some sort of pullback is possible.
Economy is actually coming back because if you
but
look at
it's just how much low.
It's really been
trading
services.
it now. This is 2/3 going into 3/3. This is 3/3 happening.
Revenge travel. Everyone was doing something that was service oriented, but what you're starting to see the Dow
10:30
transports, which is the old Dow theory, are at an all-time record highs, along with the Dow Industrial Average, which says manufacturers are up, but also the shippers are up, which says to me that the goods economy is starting to heat up. And I think that's one of the reasons why you're seeing GDP growth the last quarter tracking at 5.4%, which is just phenomenal.
Yeah, for sure. Stephanie, your thoughts on how sustainable
Literally
this
a 2-minute trade.
is
Holy fuck.
In terms of both hard assets and stocks going up at the same time?
Come on. Gold, you can do it.
Well, I think what's interesting is that we're in an environment where clearly policy is going to be run hot. You know, obviously we've got the tax refund season coming, so we're going to get
what the fuck happens.
sort of
pull back a little bit.
I
just don't want to play in the 3/3. This
at the
is
same
1/3,
time, the
2/3,
pressure is
3/3
mounting for the Fed to cut rates, and they're already re-expanding the balance sheet, even though they're not calling it QE. Call it
if it
whatever
drops
you want.
below VWAP.
If
it drops below POC with a big-ass candle. But I mean,
hotter inflation, which obviously is favorable for the precious metals.
50-50 at this point.
In
it's showing
nominal
super
terms,
bearish,
it
so
will
it's
be
maybe
supportive of
60-40.
stocks.
That's
However,
going to bounce,
you need to look at that relative to the depreciation of the currency. In real terms,
the
as
3/3
was the
for
case
sure.
last year, stocks will be losing value. So that's why I continue to pound the table on
I was
hard
in 693 SPY puts and I left.
We'll leave it
so
there. Great call, Stephanie. Good to see you.
I don't
Stephanie
really
Pomboy.
care
Stay
about
with us. We'll be right back.
short-term moves right now. I care about fucking big-term moves. I want low-key. I need 180 soon. On the video, it's fucked. It's so fucked. 10:30. Still in the middle of pulling back. It's just looking terrifying in every single moment. It's just for 5 minutes. It's just going from 2/3 into 3/3, and then the risk gets crazier because it's playing in the 3/3. So it's just yeah.
Got a quick trivia question for you. Who said this? It's not the strongest of the species that survives, nor the most intelligent, but the one most adaptable to change. Charles Schultz, Charles Payne, or maybe Charles Darwin?
These motherfuckers bringing out Charles Darwin, bro.
Shit. I want to bring in now Niles Investment Management founder and portfolio manager, Dan Niles. And Dan, you say the key, though, really is to remain intellectually
market is
flexible
building a cycle
and
deciding whether it wants to go lower. MACD volume is bearish. They just cleared the roof, so maybe they do fucking flush here a little bit or reject a little bit. But I mean,
in times like
this is also 3/3 most likely.
It's really that which is kind of the touchstone going forward. So I think if you look at the beginning of this year, you've had a couple of things, right? In December, the Fed started QE light. So, you know, that's very stimulative to the markets after selling bonds off their balance sheet prior to that. Then in Q1, you know, you've got the big, beautiful bill, which will help tax refunds for consumers being about 100 to 150 billion more than normal, helping corporations with R&D tax credits and CapEx. And then you've got a new Fed chair coming in May who's going to want to cut rates by at least 100 basis points. And I think we've seen President Trump sort of starts off in an extreme position and then typically walks that back to get what he wants. And I think I'm hopeful that the situation in Greenland is going to be more along those lines versus something that ends up with something worse.
But it's interesting because today is sort of a microcosm of what you say, an example of why you say 2026 is going to be a choppy year, but maybe stronger in the beginning as these things come on and then a little bit more questionable
trying to create
later
a cycle and bounce at 10:30.
So having said that, let's just talk about where the opportunities are, because we've got 5 stock picks from you, and you want to start with Boeing. It feels like you've got a common thread. Some big, well-known names that the shares of stocks have struggled a little bit. With Boeing, you like the backlog, but they've had a big backlog for some time and a free cash flow. What exactly is different now?
Well, the big difference is, if you remember, when you had that second fatal plane crash in 2019, their ability to self-certify their own planes was taken away. And in September of last year, they got a limited capability to do that. So you should see their production of planes this year being more than 2018 for the first time. And as a result of that, you should see their cash flow go from about -2 billion last year to low single-digit billions this year and get to close to 10 billion by the end of the decade, which, by the way, is not a high bar to clear, because if you go back to 2018, they did about 14 billion in cash flow that year. So I think that's the difference. That's why it turns.
About 10 years ago or so, I used to have a list, 4 stocks, you never sell them. Boeing was on the list, and so is Nike. Nike was on the list too. You like Nike here again? They've got a new CEO.
Did not break the floor in IWM.
Press multiples. And again, it's another stock. We're going to bring up the chart as well so the audience can see that it's had these attempts, to sort of do well. And I guess the spark, what would be the spark to kind of turn this one around?
Well, there are really 2 sparks. One is remember what caused the problem for Nike in the first place. You brought in the former CEO of eBay, and he basically took Nike away from its roots and said, you know what, we're just going to focus on going direct.
Market is holding.
Then they brought back this veteran from Nike's past, who was a 32-year veteran, Elliott Hill, who started off as an intern at Nike. And he said, look, we're going back to our roots. I mean, what are our roots? We're going to focus on strong retail presence, not just direct. We're going to focus on sports, and we're going to focus on innovation. And now he's been there for a little over a year. And in my mind, it takes generally about 1 year to 2 years to see, for big companies like Nike, see these changes in philosophy start to take effect. And in the US, you actually saw revenues go from down about 11% year over year 2 quarters ago to actually up 9% in this most recent quarter. I think you're going to see Europe turn around next. Then you're going to finally see China, which is the most difficult for them, turn around after that. And the good news is you've got a very low valuation on an EV to sales basis, which is the lowest in a decade outside of the tariff-driven lows of last year. And so you have a nice margin of safety, which I also like. And to your point on Boeing and Nike, right, this goes back to the intellectual flexibility. If you said, well, you never want to sell them, you got absolutely destroyed over the last several years owning these names. But now I think it's the time to go, you know what, I think we have catalysts for change, and you want to adapt to that.
And I also like the idea that you like the downside, right? You're considering that the risk management part of it. I just want to pick up on Apple. It's got a different chart. Obviously it's gone up, hasn't kept up with its Mag 7 peers recently. But you're saying, hey, they're going to be in the AI game. Of course, they've always had the luxury of waiting, right? They're such a big company. They don't have to always be first, but they always figure it out.
Yeah, and I think more important than even the AI game is the fact that the big upgrade cycles in the past has been when you've increased the screen size or changed the form factor. So if you go back to the iPhone 6, for example, you had 7% revenue growth in the full year before that. You came into, and that's when you moved from the 4-inch screen to the 5.5-inch screen on the iPhone 6. The next year, you went from 7% growth to 28% growth as people upgraded and wanted that bigger screen. This year, for the first time, you're going to get a foldable phone. Samsung's had a foldable phone since 2019. So this is very, very late for Apple, but you combine the foldable screen size.
I'm very surprised my car never went out
either.
either.
Which are 2 years late, and I think you're going to see a very strong upgrade cycle, which will offset some of the concerns people have had recently about things like memory prices or services growth.
Dan, we don't have time for MPIG. PI, we'll cover that next time you're on the show. No, because I really appreciate the nuanced way that you go through these names, because everyone throws these symbols out, but understanding exactly why to own them and what the risk and upsides are is what we're trying to do on this show anyway. So thanks a lot, man. Happy New Year. All right, folks, my next guest wants to remind everyone that headlines fade faster than fundamentals. So let's bring in Muriel Siebert and Company, their Chief Investment Officer, Mark Malik. And Mark, why is this so important to you that people, investors, understand this?
There's so much headline risk now. We hear so much going on these days, and I think people are losing focus on what's really, really important.
Right.
We just talked about a bunch of these stocks that I say they're not fallen angels, they're resting angels. We've talked about that before. I think people are missing the point.
But even this week, right? I mean, you think about the headlines and what happened in Greenland and Davos, and the market sells off Tuesday, and here we are, we're right back. And people following headlines are not making money. They're getting whipsawed.
Yeah, I mean, look, the second we see these headlines come out, what do? We open up our books. Is my thesis still standing? And the fact of the matter is that none of these headlines impact the long-term opportunities that we're investing in right now.
Let's go with some more of your hot takes here. So coming into the year, you think the markets and I guess investors were just simply too comfortable. Maybe need to be shaken up every now and then.
Yeah, I mean, if you take a look at the VIX, you saw the VIX was extremely low for
15 or something.
for long periods of time. Well, clearly there's a bit of risk.
I think a rejection is building here.
You need that VIX to come up a little
VWAP
bit to
and
get that upside
POC breaks on the
opportunity.
5-minute candle or higher,
in both directions.
I would say it's
and
bearish
so
in the
unfortunately,
330.
when you see the VIX stay very low for long periods of time, it's usually like a coiled snake, and like a slight bump in the road could really send things flying.
We just sort of kind of let's bring that back for a second. We just kind of talked about the political headlines, volatility. You know, when you talk volatility, sometimes people become afraid, but it's a natural part of the market, right? I mean, if you want long-term success, you have to learn how to deal with that.
Sure. I mean, look, volatility is the cost we pay for upside, right? You can't take the two apart. If you're picking your stocks properly, you're riding the upward part of volatility, but it's very painful if you're not paying attention and you take it on the downside.
Systemic risk is overstated. What part of systemic risk is overstated?
Well, look, a lot of the systematic risk that we're hearing right now is this headline risk, like this noise, right? So again, we want to focus on the idiosyncratic challenges. So you want to look at the companies right now. And there are so many big growth opportunities right now that are being sort of held back by maybe the tides moving up and down.
I'm short on
so when the
SPX
tides
right
sort
now.
of even out a little bit, you're going to be in the right boat, and that's why you want to focus.
Another one of the hot takes is earnings. Say, hey, it's time to refocus on them. Here's the thing, the bar is high. S&P will likely report double-digit earnings growth for the 5th straight quarter. So there's two ways of looking at that. A lot of folks on Wall Street say, well, it can't last, and they're looking past this. And some are saying this is justification for being long.
Yeah, I mean, look, we've been saying it can't last for how long now? But again, if we dig into the numbers and we look at the companies that are behind those indexes and we look at the growth stories, they're very, very real. And we talked about sharpening pencils earlier. Man, my pencil's about this big at this point. Because I just keep sharpening and sharpening and sharpening. But the fact of the matter is the numbers are there. It supports the growth, the expansion of margins. Now we're talking about that plays right into the multiple expansion story.
So let's talk about again these AI plays. It's interesting. I like your AI plays, but how you framed it. You like Micron as the engine, Taiwan Semiconductor as the toll booth. And they're building out more and more plants.
IWM going lower here. IWM bearish.
And Broadcom has been the networking king. I just want to zero back to Micron for a moment, because now people are saying, considering the amount of growth that they have, that they could be, this stock, even though it looks phenomenal, could be the next NVIDIA. It's cheap by a lot of traditional valuation metrics.
Yeah, I mean, this one's a sleeper. This was a misunderstood stock for a long period of time because there's so much glitz coming from Jensen Huang and his leather jacket. We sort of missed this, right? Because Micron, they make memory chips, right? But they don't make every kind of memory chip, right? They make the ones that are most important right now for AI. Once we realize that, I got to say, a lot of people sort of open their eyes, and now you see them fully sold through the end of the year. We're talking about that gives them a little bit of price control at this point. So we're talking about expanding margins. They are doing everything right. They're in the right place right now. None of this can happen without Micron.
Without the engine. 10 seconds, Intel after the bell. It's had a huge run. Again, out of almost nowhere. Is this real or is it, just hype?
Well, I'd love to see it be real.
Maybe we'll learn more today?
We have to learn more today, but at this point, I'm concerned it has a bit of a run and it's got a lot of backfilling to do in terms of when it fits into this group.
I got you. All right, maybe there'll be a slot there tomorrow morning.
We hope so.
Mark, thank you so much.
Thank you.
Time is 10:40. Let's break VWAP. Real fucking quick. No. Let's break fucking VWAP. Oh my god, IWM just going down the gutter. 10:45.
There's your setup as we get up and running for, as I mentioned, what is going to be a very consequential week here with respect to the macro and the micro and the Mag 7. So let's get to Kevin Green.
CRV, I'm out.
Happy Monday. Just talk us through some of your takeaways in this first
4.1K, I'm out.
trading.
Yeah, we are seeing market breadth actually expanding here.
$600, $645 profit on SPX.
Flows on the volume front here. Last time that I checked, we only had one sector that was in the red at this point in time. Kind of changing here a tad bit. We are seeing industrials as well as energy kind of turning into the red here.
1/3, 2/3, and I just played the fucking 3/3. That was
and I think
beautiful.
from a technical standpoint,
It
we
looked
do have
crazy
to
bullish
because
because
it
of QQQ into
at the end of this week.
confirmation roof
You
at
are seeing some
1040.
options flows on the SPX. That does kind of point to maybe some positive price action for the S&P 500 over the next couple of trading sessions here. So I think that's actually a positive. And you are seeing a little bit of a rotation back into the Mag 7 names. Microsoft performing really well here today. Had a really strong day on Friday. And some other companies, NVIDIA, once again catching a little bit of a bid. We'll talk about that story in a second here. So I would not be surprised if we actually see the Mag 7 stocks, communication services, and technology actually outperform
3/3 building too.
rather than this broadening trade. And
1/3, 2/3, 3/3. We are now in.
Really outperforming.
Right,
if the
so
shit
we've got
drops,
underwater just fractionally here, but you know,
bears
nothing
in
big
control.
in
But
the
I
world
mean,
of Nvidia. But we've got
this is the
CoreWeave heading in
3/3.
the other direction in double digits. We've just had
This
both
is
the
playground.
CEOs obviously talking.
I have no
Mike
fucking
Bluetrader's
clue
been here on the floor of the New
what
York
the
Stock
fuck is
Exchange,
going
and
on
in
what
fact,
right
I've got a
now.
chance
It's
to speak
just
with him. He's very
setup
excited.
was
Obviously,
0.6
this,
something,
is all about the
618 to above
infrastructure here.
0.5,
Just talk us through
0.5
the
to
significance of
0.618,
this
and the
story
market
with
wants to
respect
decide if
CoreWeave
it
and
wants to
Nvidia
lose
this
it or
morning,
not.
and what it could mean for the broader market.
Yeah, I think it keeps the AI story alive, at least for now. Once again, some of this kind of funding.
1045 coming in with a bounce at 1045.
Taking place.
Let's see what happens with this bounce.
Maybe they're going to do the same here today. Who knows? But Nvidia is going to invest around $2 billion into CoreWeave at around $87.20 a share. This is also going to result in CoreWeave leveraging some of Nvidia's CPUs as well as storage platforms just in general.
1045 is bouncing for one candle, but I mean, you would technically have to count this as a bounce until it doesn't. So until the low at 1045 breaks, all bears, all puts are fucking destroyed from the bottom of 1045, 3/3. Until it breaks, you can't say this is bearish. If it breaks, then you can say all bulls are trapped, but I mean, still, it's crazy fucking risk in the 3/3 now.
This funding type of mechanism that we are seeing in the AI space coming to fruition again, like we did see when it came to Oracle about a month ago, maybe that does cause a little bit of volatility.
Oh, my eyes.
Okay, and as we say, we do have plenty of headlines surrounding NVIDIA as well. Jensen Huang this morning talking from China, where he, of course, is meeting with some of the companies over there.
IWM coming in with the perfect fucking 3/3 bounce, too.
Well, we're going to be talking about that throughout the rest of the program. But let's switch gears to what else is moving in these
That's
markets
actually crazy
this morning,
to see.
and that is rare earths and critical minerals. I'm seeing USAR up in 18%.
2 minutes just fucking
right
destroys
now
everything.
off the back of
2
this
minutes.
US equity stake. Talk us through the significance of this story, because everybody had been wanting to know, KG, which one was going to be next on the US's watch list, I suppose, or equity stake list. And here we are this morning talking about yet another company. So just talk us through what this means.
Yeah, and there's not that many companies that actually do have U.S. mining exposure.
How crazy this shit is.
In the United States.
One,
so
2 minutes is literally back to halfway where it dropped off.
We'll see if that actually does take place over the coming weeks, if not months. But the United States is going to be taking a 10% stake in USA Rare Earth. This is going to be around a $1.6 billion deal, a debt and equity package. This is also going to coincide with an additional $1 billion of private investment. It seems like Cantor Fitzgerald's going to be the one that kind of leads that effort, and we'll see if this actually does create a little bit more enthusiasm when it comes to the rare earth space just in general. It seems like they're doing that right now. You'll also notice a lot of these companies are mid cap or very low float, so it doesn't really take much to move these stocks to the upside. And there has been a lot of positive activity around the options front in this name over the last week and a half. Obviously, we are now seeing a little bit of follow through. So some optimism that domestic production.
So our first poll of the day. Is this shit bullish in your eyes? Is this shit bearish in your eyes? Or is this nothing in your eyes?
Whoever's going to have the processing capabilities are going to be able to push margins in their business.
Yeah, look, it's not going to happen overnight, but it's a start, and this is all, of course, to do with national security, trying to reduce some of that reliance on China and take on some of that hegemony as well. And speaking of, let's switch gears to the commodities patch. Obviously, we've seen gold ripping this morning, punching through 5,000, as I mentioned. We've got silver at 111 right now. Copper is soaring as well. I'm just looking across the oil patch. Nat gas is up over $6, obviously to do with the cold weather. Just talk us through some of the price action, how much of this has got to do with respect to the precious metals and what we're seeing in the moves in the currencies as well.
I think it all is related. Outside of the copper move, for copper, there's a Chilean mine that their workers are going on strike. So that's also going to impact the supply of copper ore here in 2026. So that's really why copper is actually moving higher. In fact, if you look at the fundamentals for copper and the inventory levels, they're starting to ramp up fairly aggressively here in the United States. When you're looking at silver as well as gold, obviously continuing to move to the upside, geopolitical risk. I think there's also this dollar move that, this is a very aggressive move to the downside when you're looking at the Dixie. It was down about 2.2% last week. We're down another, 0.5% this morning here, getting very close to some key areas or some key lows here. If we break through these lows of, let's say, 96, 95 and a half or so, then you start talking about the 90 level. Now, it just depends on the how fast we actually get to that level, if it's really a concern. I know you're going to have a conversation later when it comes to this yen, US dollar kind of pair trade that's also kind of breaking down here. But you can look at this structural breakdown, this flag pattern within the Dixie here, where we kind of broke this key area of support, and now we're going to be testing another one. We'll see if this one's going to be able to hold here, but not a really good look. But this could also be conducive for equity, or not equities, but also commodities as a whole, physical ones moving higher as the dollar moves lower.
What the fuck?
Not good for Japanese exporters, as we witnessed last night on the Nikkei 225, but certainly could be good news, as you say, for some of those commodities moving to the upside this morning. Hey, KG, really appreciate it. Thanks for getting us across some of those stories for us this morning.
What the fuck just happened? There was like a $50 fucking spike candle on the 1 minute candle on QQQ just now. What the fuck?
I do want to talk to you about what's going on with the precious metals, because, I mean, the run has already been incredible. And now we have this breaking of $5,000. How significant do you think that level was, and what happens now?
Well, first of all, I think the most biggest takeaway from the gold market is that it has been a very reliable mirror in that it shows all the potential cracks. And at 5,000, what it's really saying is, are those cracks going to become more like fissures, right? And so you've mentioned some of the cracks already, obviously geopolitical situation being
this shit makes no sense.
But on the other hand, we also have the silver market, right? And so essentially that gold to silver ratio is showing yet another potential crack that many people aren't talking about, which is, are we going from the prediction of disinflation into more of a super cycle of hyperinflation? Because all of a sudden, even with all the economic growth that's projected, the demand on commodities is also going to continue to grow. So I don't see gold or silver going down. That doesn't mean we can't have a correction. Would I be first buying at 5,000? Probably very expensive to do so. But with predictions of 6,000, 8,000 and beyond, we don't really know. What we do know, this should be a little bit alarming to people about what's going on.
Well, and the flip side of that, and maybe the flip side of the alarm over that is also the dollar, right? Which is going down. So are we, as we continue to see metals move up, does that definitely mean that we're going to continue to see the dollar move down?
Well, we've certainly seen the metals go up while the dollar was actually trying to consolidate and even have a little bit of a pop. So this recent downward move in the dollar is certainly another concern. We aren't at points yet where we need to start to panic about it, but now DXY just broke down under
Psychologically
97,
speaking, that's
and
some
there's a lot of
scary,
different
dangerous
reasons
shit
for
going
why
on.
the dollar is selling off.
HOD
I
is
think the
happening
biggest
on
concern we have
QQQ
to
into
have,
1050.
not only our own purchasing power and this whole inflationary potential, but also what does it mean
Psychologically
for our
speaking, that's some
relationships
scary shit.
geopolitically with foreign countries who may not necessarily want to support our dollar. And so I think the best way to look at all of this backdrop is we got to look at the glass half full and half empty. And the half full part, Julie, is that everything that's going on with the administration, with the deglobalization and the onshoring and the muscling that we have to get more materials into this country, plus demand that people pay us, or either that or we're going to produce in this country, could be good. But we also know that there's a lot of things that could go wrong. And that's why we're seeing the dollar fall and the metals really continue to have a lot of support. So the question is what happens to the overall market? That's right now, I think, a little bit under question because the market is strong.
Right. And, the sort of, as all of this stuff has been unfolding really over the past year, whether it's tariff threats or the Greenland situation, most investors who are bulls say to me, earnings are fine, right? And that's really the thing that's going to matter in this market. Is that how you see it also? I mean, especially since we're going into a week that is going to be blockbuster earnings, between large cap tech and just a very busy week for earnings.
Well, I think the earnings, to me, have always been sort of backwards looking in a sense. Because it's reporting what it did in the quarter before. So the question is what happens in the following quarter. And there's going to be things that are going to affect certain earnings and things that don't affect other companies. Obviously, interest rates, that's going to be a big topic this week with the Fed, is going to be part of it. Economic statistics, consumer confidence, which comes out tomorrow. So the earnings are not necessarily, to me, what's the most important thing. It's going to be the reaction. And I think we can just start with Netflix, right? The earnings were fine. But the reaction
just like
was
terrifying
negative.
bullish today, man. I don't know what else to call it.
Because they're going to be looking at capex and how much more money can be spent without the consumer participating in getting those companies
just
to
fucking
grow.
ranges and goes
And
higher.
then I think there'll be other companies that might do well. I think of the earnings coming out this week, I'm mostly interested in Meta and Microsoft, probably somewhat technical, but also because those have not necessarily been participating in the big run that we saw as we were coming into this year, like we saw in some of the other stocks, like Google, for example. So it'll be interesting to see. But the whole tech area is not really been my major focus right now. Anyway, I mean, we own Micron because the memory's gotten hot, but like, God, that thing's gone parabolic. I think we're seeing a big shift, rotation in this market right now.
And it's interesting that you talk about that, Mish, because we've seen like little kind of attempts at that rotation.
AI, artificial intelligence,
Real or sustainable, right? But
how did one candle have 2.5 trillion volume? Artificial intelligence.
Technical signs that you can read underlying the market that tell you that this one is a little more here to stay.
Well, first of all, we have seen already small caps outperform this year the NASDAQ. That's a new thing. We haven't seen that before. So we have to really not only see the small caps continue to do
Dude,
well,
last week,
but we have to
they
see
burnt
some
the
of those
fuck
other
out of calls
inside
inputs.
sectors
Like, look at what happened last week. They were just chopping up and down, like up, down, using connection of Thursday and Friday, just fucking burn everything, and then now they're burning all puts. They're cooking all calls too. Like, there's so many calls heading to H all-time high. Not fucking going lower
for the economy
yet.
to continue to grow.
I don't
Whether
know.
that optimism remains, of course, we
They
don't
are
know.
smoking.
But at this point, the also areas we have to look at in terms of
I don't know what the fuck this candle is going all the way to 0.14. Like what? Something cooking.
Now all of a sudden, all these biotech companies are starting to perk up.
Psychologically speaking, like that's the most terrifying shit to see as a bull or a bear. I'm not gonna lie. That's I don't know. That's fucking weird.
We are rotating out of some retail names and smaller tech names into more biotech names. So this is all very interesting to me. We want to see small caps, IWM stay in the game. We want to see it get back over 267 and not fail the January lows. And if that happens, then we can continue to see that rotation. But again, with all the caveats that the mirror of our dear gold is showing constantly in your mind, you have to be really vigilant this year in terms of your own investing.
Well, and I'm curious, if we're talking about rotation, what does that imply for your positioning in big cap tech, right? If the rotation has been sort of out of those into some of these other groups, does that mean you're lightening the big tech you do have? Does it mean you're just kind of staying away from it right now? How are you thinking about that?
Well, we've lightened already. I mean, we came into this year with a lot of different positions. Right now, in terms of the big tech, the only ones that we're holding really is Google, Alphabet, and also Micron. I personally, from a discretionary standpoint, like I said, I'm looking more at the quantum space with Microsoft. And also,
it's that computer from fucking Terminator, bro.
Someone
said, Edison said, what was that glitch on QQQ, LMAO? And I said, artificial intelligence. All right, it's that artificial intelligence we've been talking about these days. Artificial intelligence.
But Tesla, another one. I mean,
that motherfucking artificial
all
intelligence,
have a great
bro.
future longer term.
And Grok's got
but if
sued,
you're
you guys
just
heard?
getting in now, this to me would not be the place that's most exciting.
Interesting. All right, take a look at those biotechs maybe instead. Mish, good to see you. Thank you so much. Appreciate it.
Natural shit happening. I mean, ever since that candle, there was a difference in power too. QQQ broke the HOD and SPY, then not. That kind of means that this candle fucking because you gotta imagine everybody in the world looking at this candle up or down, like it freaks the fuck out of bulls and bears, and then it goes higher and breaks HOD. There's something cooking here. That's what I'm thinking. There's something fucking cooking here. Something unnatural. Artificial intelligence. Alright, it's cooking. Shit, it's algo ranging probably like crazy.
Give us your read on the U.S. economy right now, because the economic data seem to suggest that it's holding on pretty well. It's solid, and
alright, let's see if projection's trying. I wanted to short, but I did not. I'm a little busy right now, so. Projections trying. Yes, just some sort of God candle came in.
My time at the Fed, the U.S. economy's in a good place, and it is. It's been remarkably
fake ass God candle came in, but it's psychological, so you gotta think about it. It's real because it's psychological, but it's fake because how the fuck is QQQ going from 626 to 0.014? Like that's impossible. So it's just psychological, but like who the fuck has the power to do that? On what scale? On what market? And what fucking platform? And how on trading view only? Or what is the question? Artificial intelligence. Let's get some laughing emojis in chat, folks, if you believe, alright? Believe. Best believe, alright, because it's happening.
Indeed, I think you summarized it well. The economy's in a pretty good place.
It's in a pretty good place, certainly based on
what
the economic indicators. Yet, when you look at the anecdotal and here,
how the fuck is this shit possible? How other?
From airlines to P&G to
I don't know. That's the only fucking reason that makes sense.
A lot of it's focused on uncertainty.
Shit is nuts.
And caution on what they're calling low consumer confidence.
Shows up on the 15th too. That's the most craziest part. This shows up on everything. So how the fuck are they gonna fucking get rid of this?
I think both can be.
It shows up on the 1 hour. This is so crazy. It shows up on everything. Oh my god, it's crazy, bro. I don't know. I don't know. That's the most terrifying shit ever, though. Going forward. What the fuck is that, right? What the fuck is that? It shows up on the 1 hour. It probably shows up on the 4 hour. I don't know.
And I think uncertainty is more relevant, and this may well be.
Somebody please. This CNBC is probably going to come out with news at the end of the day explaining that one.
Interesting differences in the economy.
Explain that one.
All right, let's turn now to the Federal Reserve, Rich. President Trump saying, of course, that he has finished interviewing candidates to serve.
But we're laughing now, but we're gonna be crying in like a fucking, like a day, because we don't know what the fuck this shit means. So this comes out and says some weird thing happened. Oh, technical glitch all around the world.
Of leadership over the past decade or so. Chairman Greenspan ran a
I've never
very
seen this before in
centralized,
my
he was a
life
much
going
different
that
leader.
low, so
Ben Bernanke went much
maybe
more
like 20
consensus.
points,
We didn't
yeah.
have Janet Yellen in for very long. We're learning a lot over what Chairman Powell is doing. And we can handle that. The Fed is an independent body. Different leadership styles are to be expected, and we've seen success from different ones. I'm not quite sure what President Trump is looking for in the new one, but we do know that he very much values loyalty, and that's probably part of the decision.
Rich, how do you size up the remaining front-running candidates, and how do you think President Trump is going to size them up?
Well, of course, only President Trump knows where he's going to land. What I would say is I know all of them well. It does appear as though Kevin Hassett and the president have decided that perhaps his best role is to stay as the National Economic Council director. So that leaves Governor Waller, Kevin Warsh, and Rick Reeder. I know each of them well. I think each of them would be an effective Fed chair, but they bring different strengths and backgrounds to the role. Chris Waller is a world-class macroeconomist. He's also a good forecaster and good communicator. In the case of Kevin Warsh was a Fed governor. He's had very thoughtful and interesting things to say about changing the Fed as an institution, and in particular thoughts on the balance sheet. And then finally, Rick Reeder is a very respected, legendary investor in financial markets, and obviously would bring a lot of connectivity to the bond market. So
market coming in a little bit dangerous.
To the table, it's really going to be the call of President Trump, and we'll see where he ends up.
At this point, would any of those picks surprise the bond market?
It's like no direction, chopping up today.
I think right now it's pretty even in the betting.
A little bit scary.
I guess right now what would be a surprise. Well, there'd be two surprises.
Going forward.
One would be if Kevin Hassett decides and the president decide they do want him at the Fed after a week ago saying no. And then, of course, there is some probability that Scott Bessent does.
I mean, let's think about it logically, right? What setup is there, right? In the morning, there was setup at divergence at the roof, right? Since 9:45 to 10:10 to 10:20. They cleared the divergence at the roof at 10:20. 10:20 rejected from 10:20 to 10:30. 10:30 bounced to 10:30 to 10:35. 10:35 rejected from 10:35 into 10:45, creating a 1/3, 2/3, 3/3. After that, at 10:45, they bounced. At 10:50, they came in with a God candle. Fucking AI, artificial intelligence, Terminator, fucking 14 candle. Like, what the fuck is that supposed to mean? You know what I mean? Like, when that candle came in at 10:50, it changed everything. Psychologically speaking, everybody in the world looking at that shit, and they're like trying to, decipher it or understand it. And they don't understand it because it makes no fucking sense in the real fucking world. But it doesn't even matter if it's happening in the real world, because what's happening in the real world, because it's the candle just happened psychologically, and it's there, and everyone sees it, that it's now it's part of the system, it's part of the cycle, and now it's like since 10:50, right? It's been 15 minutes, and we are now directionless, hovering in the fucking void with BOC shifting. So I guess market's waiting for a setup. You get what I'm saying? Like, that's the thought process that I'm coming to. But also, this shit is scary, because anything could happen, making it bullish or bearish with the system, with the cycle, turning things, or it could do jack shit and just stay here like it has been. But this is the thing that it's doing. It's doing it fast. It's the fucking thing that's doing ever since the rejection here and the bounce up now, and I don't know. This is 10:55. This shit is cooking bulls, cooking bears.
Confident in Federal Reserve independence this week.
Divergence cleared.
I'm confident.
Right? This is the most craziest shit ever. 10:55. There's a roof divergence now.
In terms of the way the Fed is set up. And I've also said, including when I've done shows on Bloomberg, that I think an important factor that supports Fed independence is the financial markets and the bond market. And in particular, politicians who want low interest rates would not be getting
Yeah,
low
of course,
interest rates
Weeble
if the
chart is
markets
okay, but
lost
ain't nobody in the
confidence in the
world uses
Fed's
Weeble,
inflation
bro. Everybody in the world
credibility.
looking at
So,
TradingView.
so I am confident that Fed independence will continue and be robust.
And that is something that Jay Powell is extremely concerned about, clearly, given the DOJ's subpoenas and investigation into his remarks. How does the Fed chair address the subpoenas in the post-decision Q&A on Wednesday? Because I feel like it threatens to take over the entire proceedings.
He will be asked that. I think he will have a crisp answer when he's asked it initially, and I think he'll stick to that.
Guys, let's get the like on the live stream up. Thank you so much for being here. Please smack the like on the live stream and make sure to hit the subscribe button if you are here for the first time. What we do on this channel is best analyze the intraday stock market using cyclical analysis, time confirmation, fundamental analysis, and setups to find the real directions, the trend directions, and the traps, and what is really going on behind the scenes of the candles. So, if you like that, you are at the right place. The bears are pushing lower right here. Time is 11:10. It's been 15 minutes from this HOD test as well. The real question is, right, what time is this candle? 10:48. So 10:48. This is the most weirdest shit ever, right? The real question is whether 10:45 breaks or 10:55 breaks, right? That's the biggest question here. Let's see.
Let's talk about those tech earnings. Mandeep Singh of Bloomberg Intelligence joins us now with a preview of this week's results and a sneak peek of next week as well, with Alphabet and Amazon on deck in early February. Mandeep, welcome to
Gold
the program.
is fucking
HOD
all-time high running today.
Look, I mean, for me, it's
above
always
4,000.
about cloud growth when it comes to the hyperscalers. And last quarter, we saw Microsoft hit
everything cooking upwards,
for their Azure
cooking.
business. And it was aided by, AI. That's where all the CapEx dollars are going. So you want to see that cloud momentum carry on. Even Alphabet saw 35% growth in their cloud segment.
NVIDIA,
so
Tesla.
that to me is the real sort of ROI indicator when it comes to these CapEx investments. The other thing to keep an eye is there was a pushback last quarter on Oracle in terms of, their debt really reaching a point where a market felt it was reaching a limit. It exceeded their operational cash
coming
flow.
with a abnormal push up. Crazy wild.
Company that would be put in that sort of basket this quarter, and especially someone like Meta, which plans to spend over $100 billion in capex with no cloud business. I would be curious to see how market reacts to them raising capex. I mean, obviously their top line growth has been super strong, but that would be of interest for me in terms of the pushback that market may have, on companies really spending more on capex.
Mandeep, I'm right there with you. I think that's got to be an important one to look for, particularly given what we saw in the final few months of last year. And what we saw from these guys, the amount they're spending. Mandeep, I saw an estimate, a number that came from JP Morgan Asset Management. Michael Sembler's put this out, that 40% plus of the GDP growth that came in the first 3 quarters of last year.
Cycles are very small.
From the spending of tech companies,
very tight.
Boosting capex. Mandeep, ridiculous numbers. Do you think with Meta alone, they're an isolated case of weakness, or are you seeing other examples of that in the space?
Look, I mean, all the neo cloud guys, they're
it's crazy how QQQ is coiling up now.
You are spending so much
SPY is coiling at the floor. I mean, IWM is coiling at the floor. SPY is coiling.
Amazon as well. Any company that is now spending
QQQ coiling up. SPY is coiling at the roof, trying to go lower. IWM is trying to go lower.
How long will
so
this
weird.
last, and then
what the
what
shit?
Is the recovery
Am I the only one that sees this?
That investors can hope for.
Maybe.
And if you don't have that visibility, which was the case
Bears
with
are here.
Oracle, that's where
That's
you
what I
start
see.
to see pushback. So I do think the neoclouds would also face that kind of scrutiny, and that's why this
1045 needs to break on a higher candle.
Significance, because now you have that NVIDIA buffer in terms of, okay, you have some cash that you're getting from NVIDIA to spend on.
Mandeep, appreciate your take as always, sir. Thank you. More from Mandeep through the week. Mandeep Singh there of Bloomberg Intelligence. To build on this conversation, Mama Q of PSP Growth joins us now for more. Mama, welcome back to the program.
It is so bullish on QQQ though. This is so abnormal, but I would say if 1045 breaks somehow and this shit flips, then short term it could turn a little bit confirmation-y.
Big week for tech earnings. Investors are focused
But
on who is at the center of the AI
what a fucking
workload.
squeeze on
We're
NVIDIA.
shifting now
Since
from
last
AI in
week
terms
I've
of
been in
building and training a
NVIDIA
model
since
to
last
inference, which is actually using it in practice. So if you're sitting at the core of AI infrastructure, like we saw with CoreWeave this morning, then you're in a great spot.
I'm hurt
we're
on
even
the
seeing
video.
this not just in the public markets, but in the private
Damn!
markets. There are a lot of inference market leaders out there, like Together, FAO, Fireworks, Space 10, that are seeing record revenue growth. So the companies that are positioned at the center of the AI wave in terms of running and execution will be well positioned. If your strategy is not necessarily at the core of those, if you're still figuring out your AI strategy, then investors are going to have scrutiny over you in terms of where all that investment is going.
These NVIDIA bulls fucking just 1/5 me, bro. Almost from the top. This world's so crazy. Literally January 20th. Huh. Look at this fucking triple spike down 1, 2, 3 and fucking just burn everything. Like what the fuck? This is so fucked. This is actually so fucked. What the fuck is that candle? POC. Epic algo range graded at 1110. Alright guys, we're about to do our second poll of the day. What the fuck is this shit?
We're back on Morning Trade Line.
Holy. I want to see the market open, to be honest. She, I guess we'll watch this.
Trade Live. Let's focus on Meta.
All right, guys, is this price action making you feel bullish or bearish in your opinion, based on candles alone?
Redburn upgraded the stock today, though. More on that in a moment. But here's where some major mega cap tech names are trading to start the week, and what is going to be a very big week with some of those Mag 7 names reporting here. We've got Nvidia lower off the back of what we're hearing around CoreWeave. Jensen Huang currently in China. But Meta is higher by almost 2%. Alphabet is 1.5% higher, and Microsoft is 0.9% higher. So we're very much seeing leadership back in the driver's seat today, as we have seen some of these stocks coming off quite considerably, as we just mentioned, over the last couple of months or so. So let's focus on this for the morning trade. Joining us now is Marley Caden for a closer look. So we've had this Redburn upgrade now, just a few days, of course, before earnings. It seems like we've come a long way from that sort of capex indigestion that we were seeing post-report card last time, Marley. What are your takeaways from this analyst call? What's got into what they've said here?
Well, they're saying that there's a potential buying opportunity here. They see some upside in Meta ahead of those earnings you mentioned, which are on Wednesday. Shares are trading almost 2% higher following this note. Now, they've upgraded them to a buy from a neutral. New price target is $900, up from $740. Now, that's about a 36% upside from where we closed on Friday. Right now, trading about $669. They are scheduled to report their earnings on Wednesday. Now, analysts say that the shares could move down.
I was feeling bearish earlier, and now I want to vote bearish. But I mean, I will vote bearish, but like
so more than $100 lower than where we are.
This is the most crazy shit ever. I'm not gonna lie. This is something weird though. I just don't like what's going on here in the higher time frame because there is nothing going on now.
That those near-term costs could depress 2026 earnings estimates, and that their imminent guidance is, quote, set to leave estimates factoring
you better come out with news saying some shit about that because
from AI. But that disconnect that they see between the current stock price and Meta's long-term value is potentially outweighs any near-term risk. So they're saying if we do see that weakness following the fourth quarter report, if we do see a dip, they say that this may be an ideal moment to either begin to add a position or to add a position. It creates an opportunity, they say, for investors to capitalize on any resulting
if 1045 breaks here with the squeeze lower, then bears are in control.
Has increasingly been upping its capex to build data centers, which are critical to staying competitive in AI. But as far as upside growth from AI right now, Meta doesn't have a great deal of it. So the analysts saying that Zuckerberg committing to investing at least $600 billion in the U.S. towards building data centers could have a very short-term downside, but he actually sees that downward potential move as an opportunity for investors who are willing to be patient with Meta and stay with them long-term, because he thinks in the long term it is a really strong play.
I think willing to be patient is sort of the operative line here, isn't it, Marley? Particularly with what we've seen in this stock.
I'm holding 30 fucking SPY puts right here.
Since the last earnings report. But obviously the story with Meta has been that this AI journey is going to be very expensive, and whether they have the sort of fiscal discipline, or I should say,
time is 11:20.
The muscle as far as what they're doing with their money, like the Googles, the Amazons, and obviously the Microsofts have in the world, and also the AI partnership to sort of more advanced partnerships is going to be the big question moving forward. But yeah, there seems to be a lot more sort of conviction coming from the street right now. I remember it was Jeffries last week, I actually think, it reiterated with a buy rating as well. Very encouraged by the fact that obviously they're moving money out of things that aren't working. They're trying to build up this whole AI story. And obviously, with respect to the nuclear tie-ups as well.
They're going. One more candle, please.
Commentary and anything that sort of sticks out to you about this one as we look ahead to earnings.
So pretty overwhelmingly bullish in terms of the overall sentiment from the sell side as we come into earnings. The majority, north of 75%, have either the equivalent of a buy or a strong buy rating. I only see one sell or underperform rating right now. We've got about 10% in hold right now.
Oh my God.
Price target's about 831.93. Although I wouldn't be surprised if we see a few more price target adjustments today, tomorrow, even perhaps Wednesday in advance of those earnings. But the street high right now is 1117. That's the highest. The low is 685. So even the lowest target on the street, Sam, is still north of where we're trading
trading right now, and we're trading right now higher on the day. So overwhelmingly bullish sentiment. I guess the question is, how long-term of a play does this particular analyst think it is? Sort of seems to be how high their price target is.
Yeah, and then obviously with respect to some of these earnings this week, I mean, it's one thing to throw out those double-digit eye-watering CapEx numbers, but obviously the street has started to question, hey, look, we want proof of all that spend. I guess we'll have to wait and see with respect to some of the reactions post-earnings. Marley, really appreciate it. Thanks for getting us across Meta this morning. I'll speak to you later on. Coming
coming in with a bitch made bounce. Oh my. What a 2-minute fucking, it's changing everything now. For bulls and bears too. There's people switching sides on this shit too. Candle's fucking crazy now.
I think the market is going to be having a hard time transitioning from this really momentum, multiple-driven upside that we've, for all intents and purposes, seen since the fourth quarter of 2022 when the current bull cycle started. Our work shows historically that earnings-driven markets are still positive, but they're not as positive as multiple-driven markets. I think that's why this week is such a huge week, because we see some of the biggest tech companies come out with earnings, number one. Number two, we've had tremendous performance.
Last line of defense for bears here.
Week or 2 weeks from the small mid-cap area, which we've been talking about for a couple of years. We were pretty early, but at the end of the day, we think a broadening out of the market to more small mid-caps is actually quite positive for the longer-term breadth and positive nature of the overall secular bull market that we continue to call for.
Paul, NASDAQ up 18%.
Shit is fucking hard.
S&P up 13% 1 year. Dow up 11% 1 year. I believe that's double-digit performance.
That's double-digit performance. Brian, Thomas is calling out some solid returns for U.S. equities, but and you think about 2025 and even the start here of 2026, rest of world, other markets have done a lot better outside.
The guy that messaged me last night, I said, "Oh, be active on YouTube. Doesn't even seem like you're active." And he said, "Was watching this morning, all good, already got in and out, done for the day." Some shy on. I highly doubt that, bro. But all respects to you. All will be well, man.
The U.S. How do you
this
think about
this
the
WhatsApp
US
group for sure, though, is for
world?
people that are active.
Great question,
not
Paul.
people that are just
2025 was a snapback year, principally because I think a lot of political side of things in the fear trade leaving the United States. Then you also had the currency weakening, and then you've had the currency strengthening in other areas. And we do think that the value proposition, certainly of Europe and some emerging markets, was an attractive play. And then you talk about our brethren in Canada, which how Canada had its greatest net outperformance on a local currency basis since 1990 relative to the U.S., mostly because of gold. But even though gold gets a lot of headlines, the banks in Canada
shit is
really
literally within 5 minutes. I have to decide because it's bear trap trying to the ultimate.
They had been quite frankly,
HOD on QQQ when we are on POC.
So I think the Canada trade is going to be tougher this year. I think in terms of the other markets, I think it's going to be tougher. I think we're going to have a little bit more balanced across all markets, especially given the fact that now we need to see fundamental growth going forward for emerging markets and going forward for Europe. And it's not just going to be all about the materials and the energy side.
I look, Brian, at the makeup here. I want you to talk to people in their 401k, like me, that stumbled into decent returns over the last number of years. Should they reallocate? Should they rebalance? Or is it just static? Keep it the way it is. Patience forward.
Up.
Patience forward has always been our line. We're not the smartest person on this call right now, by the way, or on this broadcast.
And I know Michael Barr just entered the room.
Yeah, well, there you go. But at the end of the day, we have a report coming out today on our website under our new moniker called BESTSPY Briefs, and we talk about the importance of remaining longer term invested. If you miss the best days in the market and you try to trade the market out since 1990, the average annual return is 8.6%. But when you miss the best days of the market, which typically, oh, by the way, follow the worst days in the market, your annual compound annual growth rate in terms of your portfolio is 4.5%. So just it sounds mundane, but be invested. But what we think is you want to broaden out what you're owning, Tom, in your 401k. Let's call it more value, more small mid cap, more dividend growth. Not at the expense of selling the Mag 7. We still think you need to have some exposure in tech, and we're equal weight tech in our work. But at the end of the day, you want to be invested U.S. stocks. Now is not the time to run away based on fear or rhetoric, and especially with respect to what's going on in terms of politics.
Brian, how about the bond market here? The 2-year Treasury is yielding 3.60 here. That's a nice living there for a lot of folks. But should we be taking some credit risk above and beyond that?
We think bonds still remain an important part of anyone's longer-term portfolio. I think the bond market has really been kind of a forgotten asset. Right. We're thinking and talking more about private equity. I like the bond market here, especially around this zone. And we've been talking now for the last 2 or 3 years that this 350 to 450 range.
Vinny, we went over this like 4 or 5 times, bro, and you on the same thing over and over again, saying the same thing over and over again every single time.
I really think that's an area
you were removed with the non-active people because you were not active in the WhatsApp group. I get you are active in the YouTube chat, but I'm sorry. No one did nothing here except people that are inactive in the WhatsApp group. No one asked them to not say anything. No one asked them to not be active. No one asked them to use the WhatsApp group at 7, 8 p.m., right when everyone else is using it at midday, and then never come on for 8 days, and then come on for 1 day and be like, hello, good morning, and then not say anything because no one's saying anything. No one asked them to do anything. They're just making it up.
On this interweb thing, this www
it's just
thing.
Useless shit.
It's going to be crazy in Minnesota Sports Radio today.
Who cares?
Because, we're a bunch of masochists.
Nobody uses the WhatsApp group. Nobody uses the WhatsApp group.
People are going to be mad that Seattle isn't
well, WhatsApp group, people are using it.
Darnold's been able to do.
Then it's for people that are using it. It's not that hard. It's literally the same shit. And I've told you to message me, but you never message me, so it's not my fault. I don't know if I should leave these IM. Slowly getting squeezed on my level. 693 is my put basically, and they're doing this shit right on my level. This abnormal fucking weird ass cycle, so. QQQ is a HOD. Abnormal or not, it's happening. Things are at this algo range. So weird. Gold barely going to. What's the allure of the WhatsApp? Nothing. There's no allure of the WhatsApp, man. People just want to be in it, and they're like, "Oh, I'm in the WhatsApp group now. my life is gonna change and that I can channel hop and that everything's gonna be the same. And it's just, yeah, everything won't. But people that use the WhatsApp group to understand something deeper and that want to change their lives and that are using the WhatsApp group, that's a completely different story. And respects to people that are, but those that don't have no respects to people that are. So I have no respect to people that don't respect the things that are respectful in that degree. I have no care. Why? Because it takes something deeper than just trying to be like, oh, I care, than to care. So, HOD on QQQ. Bulls are in control. This is some bullshit on SPY, but it is some bullish shit, not some bearish shit. I mean, this candle is psychologically being used to go cooked. That's what it is, to be honest. But shit, dude. I'm playing with fire too, to be honest. Playing with 33rd and went lower than 1045. It's just trapped. So that's like greedy shit. Greedy fucking cycle shit playing, not gonna lie. And look at gold. I think gold's gonna go gap fill in a day or two. I'm in gold for 4K into, let's see, 29th, so Thursday. I've been in since the morning. I have not left since the fucking squeeze. I'm a little bit scared on gold, but you have to understand in the higher time frame, gold futures, this is 5,000. This is the first time it has ever been at 5,000. That's why I was saying at 10:08 or some shit in the WhatsApp group, man, if you go look, I said, hey, I think today they may come up with some bullshit, and it's SPY and QQQ I'm expecting. I literally said at 10:03, I'm a little bit worried the market will stay hovered bullish due to energy and commodities for now, or this purple box setup on QQQ bullshit. This is literally what they're doing all day. I did not expect this crazy ass candle, but I mean, you have to understand there's something deeper going on. Something deeper is just nasty, but something deeper is going on. I'm afraid I'm cooked. Yeah, I'm already cooked on the video, but I'm afraid they're not gonna release it halfway on the video at least. But if they go to 180 by Friday at the minimum, or Thursday, I'm halfway released. Well, like, shit's fucked. I've been digging the video. That's the most fucked up part too. And now, yeah, I shouldn't have fucked around with SPY, but I'm in fucking SPY. I'm in gold and Nvidia. I'm fucked. So not a good day. I got fucked from the video last week. Not a good day. Last week, Thursday and Friday, they were cooking everybody too, so not a good day. Like, what the shit is this? Down, up, down, up, down, up. Like, it's just terrible. Terrible. Shit ass. Just the perfect way to eat all fucking swing trading motherfucking greeting shit though. Not gonna lie for the market. Someone said sure, but I feel Discord is better as you've been saying no one posts anything but still can do poll. And I messaged back, people post, it's just not you or people like you. People funny as fuck. Yeah, whatever it is you want to believe, man, to believe, but it is in your own head. Whatever believe you want to believe, do believe, but it's in your own head. That's deep as shit. 11:35, 11:20. Perfectly theta holding, testing. This shit is trash. That's just reversal on QQQ. Damn. Man. What a shit show too on the video. It's so damn high up. From 180 in the video, $7 up. Shit's literally gone. And people be DMing me the most bullshit shit ever, bro. No offense, but stop DMing me about Discord, man. Like, man, Discord me messaged me saying you can have people, you could give people the permission to mute people on Discord. Like, what the fuck are you worried about? Like, what are you on about, bro? You were the one that posted some weird ass fucking ladder shit in our group, and I said, get the fuck out of here. You are not the first person to do that. Stop with this bullshit. You're blocked. I don't take messages from people, man. Get some fucking self-respect for yourself. What the fuck is going on here?
Meantime,
Right?
gold and
You
silver
fucked up by
settling
posting
at
some
new
weird ass
highs
shit in
once
the
again
group.
today. Gold getting within
You should
10
not
bucks
have.
of the
You already
$5,000
know you
mark.
should not have.
Silver now north of
What the
100.
fuck you talking about?
And
Move
Treasury
on.
yields falling across the board. India's holding of U.S. debt
You probably
falling to
blocked
lows
from the other
as the
group
country
because they
looks
don't
to
allow that
support
shit
its
over
own
there either.
currency and diversify its reserves. So what do these moves say about U.S. assets? And remember, the theme at Davos
So
this
weird.
past week was European officials, non-U.S. officials, officials from other countries saying, we want to diversify away, that there's a new world order here. We can't rely on the old rules anymore.
There's no question that if you were, if gold was significantly lower
Your
levels,
Furu
you came
Guruji's
out of
one
Davos
fucking
and
click
said,
away,
I need to
man.
go buy gold.
For real.
Gold's not at lower levels. Gold's at much higher levels. And so news flow aside, and as someone that's been talking about gold for years, and I expect I will be talking about it for years, we talked about central bank reserve ratios, and I mentioned China at 8% when Germany's at 80.
Ain't nobody got time for that shit over here, though.
At where gold has gone, and I think big round numbers like 5,000, I think an 83 RSI, I think the over-exuberance here, I think Davos, I think
What
Fed,
does
I
that
think
mean?
Venezuela, I think Iran, I think
I was wondering the same thing Captain said. I'm not gonna lie.
Before we see 51.
I really
think we're
was
gonna get a
wondering
5%
the
correction
same
in gold.
thing
I was selling
Captain
upside
was
calls
saying,
in
but
GDX.
yeah.
I'm not, again, it's a trade I'm really happy about. I think the miners continue to be more profitable, more efficient, and we're
Thought he
still
meant the Grinch.
not seeing the right
I've never
gold
heard that
price
before
input
either.
in models that's incredibly powerful in terms of the valuation. But again, I say be careful here. It doesn't mean that long term. I think every money management
I'm getting cooked
firm
for about
is wondering, do we
$800.
have
This
enough
tiny
gold?
ass
And I think
bounce.
the
I'm not gonna
retail
lie.
sector
Since
thinks they're
11:20,
very underweight gold.
the bounce is
I
not
think it's
fucking
going
tiny.
higher,
It's
but
like
I think this
straight
trade
up burning,
has gotten
cooking. Look
in
at gold
short
going a
run,
little bit
very
lower.
short run overdone.
Yeah, and I think everything that Tim was talking about with other countries, geopolitical, their sanctions have stopped people from moving money around, so they're using gold to do that. Diversifying away from U.S. Treasuries. China's been doing it for 12 years. Russia's probably been doing it for the same amount of time. India's doing it. It's shorter-term process in Japan as well. But when you look at
almost all things, NVIDIA,
silver's the only one that you could actually, because it's an industrial metal, and they miss by about 200 to 300 million ounces per year. So if you're looking for a reason to buy it at these levels, other than emotions, silver's probably the metal that you stick with.
It's an industrial metal, and also we were talking to John Ciampaglia of Sprott yesterday, and he was saying that there is some substitution effect because gold is so high. Indian customers, for instance, aren't buying gold; they're substituting it with silver, and I thought that was really interesting, Mike. That idea that some prices are so high, so you go down to the next level of metal. We're also seeing that when it comes to aluminum as a substitute for copper in some applications.
Well, yeah, we have exposure in one of the discretionary funds to basically the whole complex. We've got GDX, we have GLD, we have SILJ, we have Southern Copper. I will say that at some point I'm kind of with Tim here. It's getting into this moment where I'm really looking for that downside reversal day. That's that situation where you see it open, it gaps open to a new all-time high, and then closes sharply lower. When I was back on the NYMEX, that was typically the most bearish pattern that you could see.
Yeah, guys, make sure you hit the like and subscribe button if you're here for the first time. Thank you all very, very much.
They traded 2.9 million options contracts today. This is something that, a 500,000 contracts 6 months ago would have been a big day for this thing. So, there's a lot of exuberance, and I think that's something to keep an eye on.
Yeah, I mean, I'm not really surprised to see BRICS players continuing to look to diversify away from U.S. Treasuries. I don't think that's new. Clearly, with the Davos announcement, I think it's like front and center on everyone's mind. What concerns me, although I do understand the fundamentals around why we're seeing a rotation into real and hard assets, this is really a hedge to your portfolio. At least traditionally, that's the way it's been pitched.
That's what they're saying.
When you're kind of seeing these parabolic moves and what is supposed to be a hedge, you really wonder if you're going to start to see like one-like correlation on the downside, where you would expect the safe haven type of trade to happen within these metals. If we see a pullback in equities and other risk assets, if you continue to see a collapse across, and I think that's slightly concerning and seemingly kind of flying under the radar.
That's what they're saying. Metals.
Next guest, though, broaden out our focus. Joining us this morning, Dale Smothers, President and CEO at RDS Wealth Management. Dale, great to see you. I haven't seen you in the new year. Happy New Year to you. Alex,
Happy New Year.
Thank you. Alex and I were just talking about Alibaba, but really more focused on this, all these headlines we're getting in 26. It's very much a headline-focused market. We're driving through these headlines, but we also seem to be shrugging them off pretty easily. I mean, we see these moves,
I need the low of 1120
flip right
to
back.
break
What are
fast
some of your
and hard.
takeaways from the market action we've seen this year so far?
Marley, what a read on the market so far. It's exactly right. It's driven by headlines, then we shrug them off. So here's the word going into 2026. We talked about this right before 2025.
I don't know why IWM is stopping all of a sudden.
We've got to maintain discipline, stick with the plan. There are a lot of reasons that we are optimistic here. RDS Wealth is very optimistic going into 2026. We had a GDP print that was unlike anything we've seen in a long time. We've got an incoming Fed chair, at least by the admission of Donald Trump, that will not look at the GDP number as a reason to raise interest rates. So perhaps continued in a cutting trajectory here into 2026.
You're really hovering at the roof so hard.
Productivity like we've not seen. And earnings season is coming up on us. I think these headlines are going to be ones that we consume as an investor, and we see the market go higher on the backs of that, continuing to climb this wall of worry into 2026.
So as we continue to climb this wall of worry, you know, what are some of the risks? What would make us fall off here?
Yeah, the biggest underlying risk, I mean, theoretically, Greenland's behind us, right? So the biggest risk that's going to persist throughout 2026, Marley, is what if AI is either not profitable or companies realize that there's no need to continue to build out this infrastructure that they are currently doing. This AI infrastructure build out has produced what we've seen in 2025. Going into 2026, I think it continues. If the questions begin to be answered with, well, we're just not sure how we're going to turn this into profitable businesses, or how we're going to continue to consume as much energy as we need for these data centers, or maybe there's a more efficient way out in space, this could cause a little bit of a headwind for the market. And that is, in our opinion at least, one of the biggest underlying risks that we know today.
So if discipline is the most important way that we might handle that and combat that, how should we be approaching the potential that AI might not play out how it's expected? And also, where are you seeing opportunity that you do expect to play out how it's expected?
Certainly. I think some of
I ain't gonna lie, bro. People talk like crazy, which is good. But I mean, you gotta understand.
In a way of overreaction.
Is it talk or is it show?
Greenland announcement, and
who knows?
Within days we saw
but you gotta show yourself at some point or another.
In percentage points,
because
you
this
know
shit.
we're in a sell-off. And what that means is that a lot of the underlying stocks that make up that index have fallen significantly lower than the overall index. So here's our number one strategy that we have right now, is that we're heavy for optimistic money, for long-term growth money. We're heavy in the indexes, S&P 500, for instance, or the NASDAQ. We buy SPY, QQQ. We hold them and then buy into names that get oversold. For instance, a great example is Royal Caribbean. Royal Caribbean in their little bit of a downtick here. We've bought more of that. We've been buyers of Royal Caribbean for over a decade now. Good, strong dividends. Nice earnings.
Come on.
They are currently
fuck out.
cutting
15
their debt.
minutes.
That's a very good place that we see opportunity to not only get continued
$2 lower than VWAP.
But also a little bit of a dividend in return there as well. So there's one strategy that we use, is being heavy in the index and buy the names that get pulled down, perhaps due to a headline of some kind.
And Dale, you unknowingly picked one of my daughter's favorite companies. She's a big fan of Royal Caribbean Cruises.
Yeah.
So
why not?
Let's stay with Royal Caribbean here. You know, Royal Caribbean has had a bit of a pullback over the last 6 months. You know, what makes this one different than some of the others that we've seen in travel and leisure?
Yeah, you know, the reality is they've got the perfect mix where you've got a young couple that can take a trip there and have fun. You've got children that can take a trip there and have fun. And the reality is, in this industry, they are the leaders in terms of earnings and actually turning that into a profitable business. Not to mention the fact that they are currently actively trying to dial back their debt. They're paying back debt with their revenues. And they have a buyback program that they've recently announced. I think this is the time to take advantage of that business model and buy more of Royal Caribbean if you already own it. Now, clearly, that's not a recommendation for all. Let me be very clear here. Our book of business, what we are doing with our clients, is we're taking advantage of that dip for those who are long-term focused and want a little bit of a dividend in return.
And Dale, I want to talk about the Fed. You mentioned the Fed in your first answer, and obviously an important part of any outlook for the year, as we are getting a new Fed head in 26. The president seemingly signaling he has a pick in mind. We have some hints of who that might or might not be at this point. What do you think the overall market response is going to be when we do finally get that new Fed head? And what action will immediately follow this new placement?
Yeah, so Marley, the uncertainty is never a good thing for the market. And so, you know, I've got a pick and now I don't have a pick. I think right now the market's kind of tuning that out. As we get closer to the time, what does Chairman Powell do now? Does he stay with the Fed? That might cause a little bit of a headline. But when he is officially replaced, I think that particular certainty brings a little bit of ease to the market. And then once we realize what this particular Fed chairman initiative will be, if it's cutting into 2026 to get to what I believe is the more neutral rate, which here's a little bit of I guess we'll call it a guess more than anything, but I would say foreshadowing. I think the Fed's going to look to be around 100 points lower than where we are today, and the market will certainly find that favorable in terms of stock prices for sure.
All right, Dale. Well, I love to close out on a little bit of speculation. When we get that move, if we get it, we'll revisit this conversation and talk about how you got there. We'll pick it up. But Dale, thank you so much for being with us. Always a pleasure to see you and talk to you. Dale Smothers, President and CEO at RDS Wealth Management.
Market always on that pump. Back to the trend line up. We've been coiling here on QQQ though for literally like 4 months. That's crazy. Extending into January. That is wild. Every candle showing up, not fucking lower, is wild. One hour. Whitehouse press conference is coming live.
Joining me now, BlackRock U.S. Head of Equity ETFs, Jay Jacobs. First to the markets at, well, let's call it 10,000 feet. What a week here, and does anything surprise you about the market's behavior? The Dow is not holding up at the moment, but the rest are showing some resilience.
I think we're seeing a lot of resilience. We've seen pretty strong earnings coming out of the market this week. There continues to be a lot of investment across a variety of different strategies and asset classes. So right now, sentiment appears to be pretty strong, and people remain bullish on equities and broader commodities as well.
The earnings picture, let's not forget it, it is really going to come into play next week. Apple, Meta, we've got Tesla reporting, Microsoft reporting. Microsoft is really jumping today. But these names, how could they change sort of the narrative that has been very Davos, Switzerland focused from the World Economic Forum?
Well, there was a huge focus at Davos on artificial intelligence. Maybe no surprise. It continues to be the theme of perhaps the decade, if not the century. It's really going to come down to that for a lot of these companies. You look at the Mag 7, you look at a lot of these mega cap tech names, they are so tied to the growth of artificial intelligence. But if you look at last year, token usage, which is really the unit of account of how much computing power is being used for artificial intelligence, almost 20x last year. So AI is growing tremendously fast. We have a lot of conviction that this theme is going to continue to grow on a fast trajectory.
Is it enough anymore for our viewer investors, who many of whom have gotten a lot more sophisticated over the past couple of years, hopefully because you're watching us, but that said, is it enough anymore just to buy a basket of sort of the skimmed cream off the top, the biggest names in a certain thematic area, whether it is nuclear or AI or chips? Is it more important now to have a little bit more if you're buying an ETF?
I think that's right. So we really look at the opportunities in 3 buckets. One is, what are your growers in your portfolio? This could be artificial intelligence. It could be electricity and power infrastructure that's applying artificial intelligence. Those are the growers. But increasingly, we're getting a lot of questions from clients around where they're going to generate income, especially in this year where we might see more Fed rate cuts and income becomes maybe a little harder to find from traditional sources. And then finally, the third bucket is diversification. What can behave differently from stocks and bonds? Things like gold, Bitcoin, alternatives, other ways to get invested that are not going to have such high correlations to the market.
And to do that, you've got some ETFs that aren't just baskets of names. In fact, what they do is they have sort of option overlays where it's a lot more sophisticated, isn't it? And one of them is BALI, B-A-L-I. This is really focused on income-oriented. Well, we're all income-oriented. Who isn't at this point? But but it writes the calls, the index options, et cetera, so that it mitigates any major fluctuations.
That's right. So this is a very common strategy that people try to implement themselves. They'll buy U.S. equities and then write call options on top of it to generate additional income. Imagine all of that being wrapped into one ETF. So the focus of this strategy, Bali, which I know sounds nice in the middle of a snowstorm, that would Bali and a little bit of sun, it's wrapping that together. You can get some growth exposure from those U.S. equities in the portfolio, and you can get some additional income from writing those covered calls all in one sunny ETF.
And yet you've got another one, BAI, B-A-I. This is the largest AI ETF. It's actively managed. It has a more precise AI theme when it comes to exposure, not, again, just a bunch of the usual suspects. My question is, when we started to look at the most widely held names in these, there was a repeat here, and that was NVIDIA.
It's
now,
really
yes,
fucking
we
trapping.
do have the NVIDIA headlines today that China is basically, and this is a report from Bloomberg saying that they will be able to allow names of companies in China like Tencent, Alibaba.
Oh my God.
Anybody who needs to buy these chips, they can buy the NVIDIA H200 approved chips, but as sort of a precondition, they have to buy China-made chips first. But that said, aren't we, if we buy both of these funds, aren't we kind of doubling up on NVIDIA?
Well, interestingly, what we did recently was surveyed advisors and asked them, what are you looking for as a theme in 2026? And the majority of advisors said they're looking to diversify
70 cents is doing crazy
People still
work
have a lot
on
of
SPY.
conviction for the AI theme, but they want to own some other parts of the value chain that could see some strong returns this year. I think that actually points less to the mega cap names and to some areas like some of the smaller semiconductor stocks in the memory space, in the CPU space that could do quite well. We look at data companies that own a lot of proprietary data. So in a fund like BAI, yes, it has exposure to mega cap tech, but it's also really looking at kind of that next tranche of AI names that remain a little bit under the radar for how important this theme is.
One last thing. We cannot ignore what is happening right now in the metals markets. Gold surpassing $4,900 a troy ounce. Silver, did you guys see silver? Above $100 for the very first time ever. There are industrial metal uses for a lot of tech. I mean, how does BlackRock stand when it comes to, well, heck, let's just go into silver and silver miners?
Well, silver's in a really kind of nice area, right? Because there's the precious metals story, which is all about diversification and maybe a hedge against further inflation or geopolitical instability. But then you have this really strong industrial story of growing manufacturing, growing electricity. Silver really sits on both sides of that fence.
Jay Jacobs of BlackRock.
Just continuous up. Cool.
Get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, we've got the roundup from Barron's annual roundtable, what the smart money is buying. Plus, it's the 5-year anniversary of the meme trade, how GameStop permanently changed investing. We begin with our expert panel and 3 things investors ought to be thinking about right now. On the Barron's roundtable, my colleagues Al Root, Elizabeth O'Brien, and Josh Schaefer. So Josh, the volatility this past week wasn't crazy by historic standards, but it's the first time that I remember market-moving news coming out of the Alps.
Yeah, Jack. So we had some news coming out of Davos, right? And really who was driving that was President Trump. So President Trump coming out in that economic forum and speaking and talking about trying to acquire Greenland. And really the market-moving part of it seemed to be the tariffs, right? So he came out and said he wanted to place new tariffs starting February 1st on 8 NATO nations.
Doubling down on 693 right now.
For its worst day in 3 months on Tuesday. Then, you know, the dial, you know how it works. He shut it off. And stocks bounce back, and we basically close the week sort of flat. Something I think at this point we're a little bit used to. That's just sort of how this tariff back and forth has worked.
In fact, investors are getting so used to it, I think they started buying the dip even before he announced he was rolling it back. They kind of predicted that. Meanwhile, the small cap rally continues. It's getting to kind of a crazy level. Explain that.
Yeah, Jack. So we saw the Russell 2000 outperform the S&P 500 again this week. Russell had been on a 14-day winning streak. Ended on Friday. The Russell 2000 fell almost 2% on Friday. But that 14-day winning streak outperformance over the S&P 500, the longest streak since 1996. So that's over 28 years, 29 years that the S&P had been outperforming the Russell to that extent. And so what you see here is really sort of a cyclical shift in the market, right? The Russell kind of outperforming because perhaps people feel better about the economy. If you look at the Russell 2000, Jack, 75% of revenues are in the U.S., and then you look at the S&P 500, a little under 60% of revenues are in the U.S., so more of a U.S. tilt for that small cap index.
Yeah, I mean, most investors are probably underweight small caps if they have any exposure at all. What's the best way to get in?
So the broad way, Elizabeth, would be IWM, right? That's sort of your broad Russell 2000 ETF. But another thing we've been looking at in this rotation is a value play, right? So if you look at Vanguard's VBR, that gets you kind of that value tilt to rotate out of maybe AI tech stocks and get more small cap value. We've also seen the Barron's Investor Circle stock picks doing pretty well that we have within the small cap space. So that's Brunswick Corp. They're a boat maker. They sell boats, Option Care Health, and then Peabody Energy. Again, sort of cyclical plays that are more tied to maybe the consumer than just sort of buying AI data centers all day long.
And not just any boats. I think you're a New England guy, Boston.
I don't even know if it's HODS5.
We're going to talk earnings in just a minute, but otherwise, what are you looking for next week?
I think the Fed meeting is going to be huge. We're talking about this rotation in the market. What does Federal Reserve Chair Jerome Powell say about the state of the labor market and the economy? I care a little bit less about rate cuts at this point. I don't think that's why small caps are rallying. I think it's about the health of the U.S. economy and how sure he is that this labor market weakening we've seen is not going to get worse.
Yeah, they'll be parsing all that language. Elizabeth, Josh talked about the strength of the economy maybe driving small caps, but investors clearly are hedging their bet. Silver, gold soaring.
Yeah, absolutely. And it's rare to see stocks and gold go up together, but that's exactly what we've seen over the past year. Gold is up about 80%, S&P 500 is up 15%, and silver recently joined the party. It's up 37% in just this year alone. So why the rally? Gold is typically, thought of as a safe haven asset. It's rallying on geopolitical tensions and also buying by central banks. Silver, on the other hand, has more industrial uses. It's used in solar panels, so the demand is rising for those kind of uses. Now, it's a smaller market than gold. It's more volatile, and some advisors are cautious about getting in at these levels.
And also the dollar's falling. After Trump's comments, the dollar fell further, so that's always a tailwind for gold. So is it true that with commodity cycles, especially gold, they can last a long time? Can it last long enough for Elizabeth and Jack and Al to get in?
I hope so. I have real gold FOMO. I haven't gotten in yet. I'm hoping. And people say gold probably does have some more room to shine. Just don't overdo it,
Yeah, I have silver FOMO. I mean, I get gold just as a store of value, but silver is more of an industrial metal for me. I don't necessarily know why people pile into that one.
Well, they're certainly cashing in. People are selling their silver at these levels. I just took a spin through the Diamond District here near our office. There were lines out the door.
They're wedding silver.
Yes.
Grandma's rolling over in her grave.
Yeah.
Al, let's talk earnings real quick. This past week, we saw some big names not do so well.
Yeah, GE, Aerospace, Intel, Netflix, 3M. It was a bit of a wobbly week. They all reported earnings. They all fell. Intel got crushed. With the Netflix and the Intel, a bit of a special situation. Intel's a turnaround. It was up 145% coming into earnings. So I don't know if we can use those two as tech bellwethers, but it wasn't the start you'd want.
Yeah, and with Netflix, it's the possible purchase of Warner Brothers. Next week, we got the Mag 7 reporting.
Yeah, we have 100+ companies worth $20 trillion reporting. The big ones, like you say, Meta, Microsoft, Tesla, Apple, but you also get GE, Vernova, Honeywell, Cat, Lockheed, Visa. So it's really big deal. I would look for three things. On the Mag 7, we want AI momentum. It's the market. And then in some of the industrials and other companies, you want the 26 outlooks. And then third, and maybe even least important, I'd like to see a strong finish to 25. So we don't have to, buy the hope that 26 will improve in the second half. Investors hate that.
Yeah, every year you hear that story. Well, if these smaller companies can show they're actually using those AI products to become more productivity, and productivity is surging, maybe we'll get a good story.
That would be euphoric.
Alrighty, thanks, guys.
Man, 11:20, acting as 1/3, 2/3, 3/3, and cooked it all too. Into new HOD. I played into 3/3 and now I'm in the cycle like crazy. That's wild. New HOD. That is wild. It's 12. Fucking evil divergence clear at the roof too. Just going long with divergence all day long. Market is all fucking day long. It's the most fucking bullshit fucking rally. Just right back to the all-time high territories. Like, why does it feel like every time we go up so fucking easily, like gap fill and just go boom?
I want to get your take on what we've seen from the banks so far, because if you look at the numbers, investment banking deals were strong, equities, fixed income, et cetera. Consumer banking results were a bit mediocre, and there obviously was a lot of talk about the president and this idea of a 10% cap on credit cards. What was your take on it?
Sure. Well, right. Well, this is the K-shaped economy, right? Where higher earners and businesses that are doing mergers and acquisitions are driving the banking sector. And you can see that pretty clearly. And it's also in anticipation of lower rates. I don't know when lower rates are going to happen, but I know the Fed chairman's job is up for grabs. And I'm pretty sure that the president, who is an retired, maybe he's not retired, retired real estate developer, likes lower interest rates. So I think that has really calmed the thoughts of people doing mergers and acquisitions, and they are lining up to get ready to pull the trigger on more of those given a lower interest rate environment.
You also have a deregulatory environment that we're looking at right now, and I think that's kind of the other piece of the puzzle. I mean, like there are multitudes of policies that we can point to in the Trump administration that are actually good for markets, and then you have President Trump coming out and saying he's going to sue J.P. Morgan. So it's never boring, I guess.
Looks like the bulls are getting fucked since 12:10.
I want to go back to AI for a second with you, because we're still in the beginning of this build-out for AI. Many are calling for a clear vision for return on investment. Again, if you're going to have winners and losers, AI is the place where we've got to be the most cautious. What do you say about that?
I agree. I agree 100%. And it's because I sit in this chair because I used to work at AI companies in the late 90s. And they were unsuccessful because they didn't do the math. And by that I mean their solution to a problem was higher than the cost of the problem.
Let's see VWAP.
So
Come
what
on.
I took away from that, and I apply in every company that I look
Let's
at,
see VWAP.
is
$1 below
how are you gonna
VWAP.
make money off of this technology? And I think at this point, everybody's really dialed in on large language models, which consume large everything, right? Large data center, large money, large everything. I'm not sure that's the way. Actually, let me be more specific. I am sure that we are not going to have hundreds of large language model builders around here, but we are going to have smaller AI models. And all of this means semiconductors are going to be in demand, and fast semiconductors.
Yeah.
The timing, no one knows. So I am very circumspect of companies that are coming out saying they're going to spend like trillions of dollars and they don't have a clear path to get to the revenues that support that.
Yeah, no, I mean, you're right. If you look at like an Alphabet or an Amazon, these are companies that are throwing, to your point, Oracle, throwing out a ton of money out here. Now, you're watching for 3M, and this is a GDP story for you. Explain this one.
Right. Well, a lot of 3M's products, which I'm sure everybody just went right to Post-it notes, right? And glue and
there's a lot
tape
more.
And all that
I'm with you. No, there's a lot more at the company.
Yeah. Well, they actually have a lot of weird high-tech areas of material science there. And not that long ago, they were just driven higher and higher because
the RSI is trying to go bearish from neutral territory.
Whenever they were new, they were the company creating the film that allowed that to happen. So I think
RSI
that they are
bullish
returning
territory,
to
but
their
volume is trying
more
to go
scientific and exploring
bearish.
material science history under this new CEO. So I'm looking for high-tech products out of 3M. But in the meantime, they're probably going to get a boost because of GDP. Looks like worldwide, especially here in the United States, is going to be higher. And that's going to sell more Post-it notes and glue and whatever.
Yeah, Kevin Hassan on Friday was telling Maria Bartiromo that he's like, look, we're at 5%, easy. Real quick before you go, I just want to I got 10 seconds with you.
And
with
it's trapping the
Intel.
fuck
I
out
love
of
this line
puts.
that you have. If the company can make a chip that can run like those at NVIDIA, AMD, we might have something interesting.
Indeed. And your first guest was talking about packaging, and I'm not going to go down that road, but Intel has really world-class packaging. So they might be onto something here. And that's why I'd keep an eye on them. They're not dead yet.
Yeah, Kim, it's always, nobody's ever dead yet until they are, right? Kim, it's great to see you. I like your perspective on everything.
I mean, it's pretty unhealthy to think it's going to go to 690, 150 soon, but I really need 690, 150 soon. This shit is just fucking burning and going higher. 12 or 15 minutes later, we are trying to go higher. The fuck is this shit?
Welcome back. We have breaking news right now. The president just posted on Truth Social moments ago. He says, I am sending Tom home to Minnesota tonight. He has not been involved in that area, but knows and likes many of the people there. Tom is tough but fair, writes the president, and will report directly to me. Separately, a major investigation is going on with respect to the massive $20 billion plus welfare fraud that has taken place in Minnesota and is at least partially responsible for the violent organized protests going on in the streets. Additionally, the DOJ and Congress are looking at Congresswoman Ilhan Omar, who left Somalia with nothing and is now reportedly worth more than $44 million. Time will tell, writes the president. Meanwhile, there's this, 2026 starting with some volatility. Stocks holding on to gains this month, even though geopolitical tensions and tariff uncertainty, the rush to safe haven assets have pushed gold, silver, and copper to record highs. We are also hearing much expectation for a big boost in capital markets and investment banking, IPOs, and deal flow. Joining me now is Citigroup's global chairman of banking, Leon Calvaria. Leon, great to see you.
Welcome. To see you. Great to see you, Maria.
How would you assess the current market conditions in terms of deal activity? What are your expectations for 2026?
Great. Well, thank you for having me. A couple of things to think about. Firstly, if you look at the IPO backlog, there's probably at least 50 companies sitting in backlog that are going to get rolled out sometime this year. And in fact, if you listen to some of the rumors, whether it's someone like SpaceX or others, they will be incredibly large transactions. So the IPO market, if everything holds up, should be pretty robust. The second part about that is private equity needs exits. Their portfolios, I think, have an average life right now of 5.8 years. So they will obviously be a big supplier of IPOs in the market. And that in turn leads to M&A, where we had a strong year last year in the United States and globally. The market was up significantly with large transactions, and we do not see that holding up whatsoever. If anything, there will be more during this year, presuming conditions stay the way they are.
Yeah, I mean, the backdrop certainly feels good for IPOs and for deal flow. I'm wondering why we had a disappointment after the bank earnings. I mean, a lot of people were worried about all the spending. So, Leon, when you take a look at some of the spending that you're seeing in some of these companies, sure, we've got a big backlog and we're expecting a lot of business, but are investors focusing on all of the spending, particularly as it relates to data centers and AI?
Well, if you look at the spending in data centers and AI, you had Meta finance close to $30 billion. You had Alphabet finance close to $25 billion. There's going to be significant capital going into data centers over the next 2, 3, 4 years, I think the likes of which has never been seen. And that, in turn, is obviously going to help all the ancillary industries. Look at a company like Caterpillar, whose market cap, I think, exceeded $300 billion a few weeks ago. So whether it's construction, whether it's power, whether it's electrical, everything associated with data centers is going to have a very, very big impact. And I think at the moment, the capital markets are absorbing it, and we will see more to come here over the next few years.
I mean, we spoke with Jensen Huang when we were in Davos about the demand picture. The CEO of NVIDIA is doing deal after deal. Some of them are these so-called circular deals, but he says bottom line is the demand is soaring. Watch this.
Tell us about business and what you are seeing right now from customers.
We are seeing just incredible demand, and what's going on around the world is that AI, as you know, is a 5-layer cake. It starts at energy, then chips, the layer that we're at, infrastructure, cloud infrastructure, land, power, shell, building data centers. And then, of course, the AI models. This last year, AI startups, we call them AI natives. These startups raised $100 billion to build on top of the AI models. Their applications for healthcare, applications for drug discovery, for transportation, financial services, helping with making healthcare more efficient, all kinds of different applications. And so the demand is just incredible.
So, Leon, we're seeing this demand affect all sorts of industries. If you were to predict where you're going to see the most deal flow, I mean, I think the AI race has turned into a power race. So energy is real hot. You heard what he said about healthcare. And, of course, defense has been on fire. What would be the areas that you would expect the most consolidation or deal flow?
Well, I think healthcare is going to continue to see it right now. I think software, you will continue to see it, especially with companies that are going to be the absolute winners out of AI, because certain of them may not be. The energy sector is critical, and I think we haven't necessarily seen all the impact right now because demand is incredibly high. There are stresses on the grid, and all of these data centers being built are going to have to ensure that they have complete supply of energy. And obviously, as Jensen said, the demand for chips is incredible. And we have a number of clients that we don't need to get into here right now that are holding up supply of certain products because they don't have the chips. So all of these interrelated industries are going to continue on. I'm most bullish, frankly, in terms of what we're going to see in areas like healthcare, where I think we're just scratching the surface in terms of the impact on AI, on both drug discovery and the impact on patients being able to determine focused precision medicine.
Yeah, on the capacity of chips, Jensen was telling me that it's about a year until you actually upgrade. So he was talking about the H200 chips that the president is allowing to be sold to China. And then you've got the Blackwell chips. And now he's on to his next chip, which is the Rubin chip. He's actually talking to customers about 2027 and delivering that Rubin chip. What are some of the concerns and the priorities that you're hearing in the boardroom right now from leaders and chief executives in terms of shaping that outlook?
I think the biggest concern that you would see, and frankly, that's in the context of a lot of positivity, and that is ensuring that their businesses have fully utilized the capabilities of AI. Number one, protecting their business model, but number two, ensuring that the efficiencies within their companies have been fully explored in terms of AI, whether it is back office, whether it's agentic AI, whether it's inside the office of the CFO. I mean, we have observed stuff both inside of Citi and with our clients that is stunning in terms of the usage of it and the usage and impact of how you can interpret the data. Because I think one of the other areas that people are now starting to focus is we actually have a lot of data. That's not quite the issue. The issue is interpreting the data and using it for prediction purposes. And I think that, again, is early days here right now.
What about the Fed, Leon? The economy is doing so well, expanding at the fastest pace in 2 years in the third quarter, driven by strong consumer spending, AI investment. But the Federal Reserve is kicking off its first meeting of the year tomorrow. We're expecting that the Fed holds rates steady after 3 rate cuts, but we're going to be waiting on President Trump's decision
bullshit
on the
fucking
next
trap
chairman.
at 11:20.
What's your expectation for the Federal Reserve?
Could it even go fucking a little bit lower?
Look, obviously, we ended the fourth quarter with fantastic growth rates here right now. The momentum continues to be strong. The president has.
This is actually the most bullshit squeeze.
Gold and silver as if they needed it, getting a boost again today. This from geopolitical tensions. And let's listen, they've had a mind-boggling run. You can see right there on your screen. And you don't have to be a gold or silver bug to understand that this amazing move in precious metals has a lot of components to it. Now, of course, the big question is how much more room to the upside? Joining me now, Highcroft Mining President, CEO, Diane Garrett. Diane, first of all, you got a gargantuan fan base. They have been demanding that you come on this show for months now. The stock has been absolutely on fire. We're going to talk about your company and the stock in a moment, but let's talk bigger picture for a moment, because this move in gold seems to have been sparked. Maybe the invasion of Ukraine, we took Russia off the SWIFT system. Central banks around the world started buying up gold big time. In the last 3 years, it's really been China, but almost all of them. And so you've got that component. You got the debt issue, you know, the irresponsibility of sovereign governments around the world. There's no conviction about currency, fiat currency. I mean, there's a lot of factors right now, aren't there?
There's an awful lot of factors going on right now. I mean, as you say, the central banks were buying a lot of gold because it is a currency, and so it protects the reserves of other countries. They were leaving the U.S. dollar and focusing more on gold, and that's really fueling a lot of the surge that we're seeing in the gold sector.
It wasn't long ago if you said gold 4,000, people would be, okay, not bad, not a bad target, 4,500, a little bit aggressive, you know. And now I'm hearing people say it wouldn't be surprising to see gold at 10,000 in a couple of years.
Yes, we're hearing that. I mean, a year ago, you know, people were talking about $5,000 gold and they thought they were crazy, absolutely insane. And here we are. We're knocking on its door right now. And the same thing for silver. Nobody expected this as well.
Yeah, this silver move is interesting because you had gold that went crazy, you know, then all of a sudden silver, it's actually done better in the last year and in the last 3 years. Is it because there's also sort of an industrial need for it as well?
Yes, we're in a historic and explosive rally of commodities, and silver by far is leading the pack on all of that. Silver is not just a precious metal and a safe haven for investment and risk diversification in your portfolio, but it also serves a dual purpose with industrial metals. And when you have the supercomputers fueling the AI, and you've got, you know, every electrical component in your cars requiring silver, and this structural deficit we've been in silver for the last 5 years, that is what is really forcing this demand.
Let's talk about demand in your stock and your company, because I watched the stock closely. A couple of years ago, though, it did fall off my radar. I mean, the stock kind of collapsed. I know that they brought you in, you worked your magic behind the scenes, and I guess, are we seeing now the results of your magic? What's going on? Why is this stock up so much?
Well, we have the secret sauce here. With our stock, yes, it's being fueled in some part to commodity prices going up, but more so than that, we have among the world's largest precious metals deposits, over 10.5 million ounces of gold, almost 400 million ounces of silver. But we've had 2 very significant silver discoveries this past year, and that information is not yet captured in our resource. That report's coming out in the first quarter of this year. So it's the discoveries that we've had. It's really taken the market by storm. And if you want to play this silver rally, there's very few U.S.-based companies that you can participate in, because most silver is not primarily produced and is produced in other countries.
On your website, by the way, excellent information on the website. You do have a list of 2026 catalysts. So, you're looking at just what's gotten you here, but what's going to continue to help move maybe the company and the stock along.
Sure. Well, we've got a resource update coming out, which is going to include all of the success we've had. Yeah. And then we're going to have a lot of drill news out for the rest of the year. We're going to have technical reports coming out. And right now, we've got a phenomenal shareholder base that keeps fueling that and coming in for more.
Back
so
up.
it truly is.
Joining us now is former Kansas City Fed President Thomas Honig. It's great to have you back, Thomas. So I actually want to start with what I think is the biggest market story today, which is the strength in the Japanese yen on rumors and speculation of intervention by potentially the U.S. here at the same time where gold is making new highs and up another 2%. Is this something that you think will get discussed at the Fed meeting this week?
I'm almost certain it will be discussed at the Fed meeting, both on the international front, on its effect of the dollar as they're thinking of the rate cuts and possible rate cuts, I should say. So yeah, it's a big deal. And remember, the world is awash in fiscal stimulus, and I think that has something to do with the mixed signals from around the world. So yeah, it's a very uncertain time, and those kinds of movements aren't necessarily a surprise. And yes, they will be discussed.
And what do you think the upshot of discussions, this and everything else, will be? They're not expected to do anything on rates, but what will they signal?
Well, I think, yeah, you're right. They won't be doing anything on rates. The economy itself appears to be, for the most part, very strong. We're coming out of a very strong 2025 with the recent additional stimulus from tax cuts that were passed last year that take effect this year. There'll be a lot of demand created from that. And number three, I think you have to remember this is an election year, so there's going to be a lot of pressure on further stimulus. And I would remind people that when you look at real interest rates today, they're less than 1%, number one. And number two, the Fed has re-engaged in quantitative easing at $40 billion a month. We'll see how long that lasts. But those are all very stimulative and put pressure on the economy growing more rapidly than some people think. And I would be very surprised if the Fed were to move at this point.
What do you make of the combination, Thomas, of the stimulus that you speak of and the attempt to let the economy run warmer and the attempts to control prices, as you said, going into a midterm? Does it feel like you're stepping on the gas and the brake at the same time?
Well, I think mostly we're stepping on the gas. Controlling prices, they haven't yet put full price controls in place, and I would be surprised and disappointed if they were trying to do that. So it's mostly stimulative, I think, going forward. I think the first half to first 3 quarters of this year will be very stimulative. Now, looking beyond that becomes much more speculative, both in terms of what the inflationary impact might be or the distribution of wealth around that. So, but looking in the short term, 3 quarters ahead, we have a very strong economy I think to expect.
Do you think some of these predictions from some administration officials of getting, say, a 4 to 5 GDP print in Q1 and Q2 maybe, does that seem reasonable?
Well, 5% seems a little high. I think between 3 and 4, maybe 4% isn't out of the picture. I mean, the numbers coming in for the fourth quarter of last year, the estimates or guesstimates, I guess I'll call them, are for 4% or a little bit higher. There's a lot of stimulus in the first quarter, and there'll be more coming. So temporarily having real GDP growth rate in the 4% wouldn't necessarily surprise me, no, given how much fiscal and monetary stimulus is coming forward.
Yeah, I mean, how much can we get these kind of growth rates without getting more inflation?
Well, that will follow. I think inflation seems to come along more slowly, as we've learned. But once it kicks in, then it becomes more difficult for the FOMC and for fiscal policy to contain it. So I think it's likely to increase after the election this year. maybe before then, but certainly after that, given the stimulus, unless they pull back. So those are the sorts of things that this committee has to be thinking about as we move forward from here.
All right, welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in Michelle Gibley, Director of International Equity Research and Strategy, Schwab Center for Financial Research. Great day to have you on this morning, Michelle, as we are on, of course, yen intervention watch. Just talk us through the significance of this, but also with respect to the speculation in the market right now about a coordinated approach of the U.S. involvement as well here.
Yeah, I think, yen intervention isn't that abnormal in terms of Japan, particularly the Ministry of Finance is who carries that out. But coordinated intervention is rare. That's only happened 3 times. The last one was in 2011 after the earthquake and tsunami. So if the U.S. does come in, it's a signal that, the both sides, Japan and U.S., don't want the yen to be so weak. It's really disconnected from fundamentals in recent weeks. And so far, we're just seeing volatility focused in the currency markets, which I think is pretty interesting. Stock markets here are higher, and stocks in Europe are higher on a weaker dollar.
There's an algo range at 12.10.
We could see that volatility related to a yen carry trade spike
Looks
again.
like the bears are
because
trying
speculators have shifted from being long yen for the most part of last year to being short yen last month. And that's the same situation we had back in August of 2024 when we had, that spillover into markets globally. If it does happen, we could see more forceful moves by both officials on both sides of the Pacific. And the Bank of Japan could also restart QE. Now, currency intervention tends to only have a short-term impact, but a coordinated action could keep pressure
bears are
on
here.
for longer.
MACD volume going bearish.
Just give us a sense, as you say, it is rare to see coordinated intervention, particularly because we haven't seen this
POC
since
is in danger.
Times like the tsunami, as you point out. But what would be the appetite here from the U.S. side? Just give us an understanding of the intent here, because obviously we know that, a stronger yen, we've seen that with respect to how the exporters feel about that with the sell-off we saw overnight, but is better than for some of that imported inflation. Obviously a slightly weaker dollar here, many out there in the market do see that as, better for obviously a lot of the onshoring efforts that we're seeing, manufacturing here in the US, and some of the lines we've heard out of the Trump administration over the years. Just talk us through the significance of that and why we would see something like that.
We haven't actually heard the Trump administration say that they want a weaker dollar, but some of their actions seem to indicate that. And as you mentioned, it could be good for U.S. exporters. It could be good for consumer purchasing power. And it's certainly a more easy financial condition for the globe. So right now, and particularly in the case of the yen, it's really been quite extreme weakness and really, like I said, disconnected from fundamentals. And I think that's what's keeping the interest of both sides.
Right, got it. Just switching gears, obviously, to what we're seeing between Canada and China. Interesting developments over the weekend with Mark Carney saying that they're not going to pursue a free trade deal with China. This came off the back of President Trump then threatening to impose tariffs on Canada, even though there seemed to be, I was listening to a conversation this morning, some discussion around the fact that the U.S. was okay with a trade deal between China and Canada initially. Just talk us through a timeline here and the significance of what we're hearing with these developments.
Yeah, I think it's interesting. We've got this push and pull between the U.S. and China. I think both the U.S. and China need each other. And certainly the U.S. would like to do more trade with China. And that seems evident by the trade truce we have. And we've really got, in some cases, harsher tariffs on some other countries besides China. In terms of Canada, Canada is in a tough place. They are, trying to increase their trade with other countries outside of the U.S. but I guess they're seeing some resistance from the U.S. We don't really know how any of this is going to happen. There's just seems to be a lot of negotiations and threats to kind of come to something that's more mutually agreeable.
Okay, got it. We're going to be watching. Michelle, really appreciate your time this morning, getting us across some of the key stories in the market this morning with, of course, Canada, China, what's happening in the yen. Michelle Gibley, their Director of International Equity Research and Strategy, Schwab Center for Financial Research.
Cap. Well, we have this Whitehouse press conference at 1, so maybe it'll bring some sort of direction. Some fucking eating all day long, puts eating.
Is private equity, so to speak, going to actually deploy some of the capital that it's been sitting on for a long period of time? Will that become more active? I know it did last year, but year over year, the comparisons still are pretty minor in terms of the growth, in terms of what we're seeing deal-wise.
Yeah, on the sponsor side, I'd say two things. There's $4 trillion of dry powder is the number. It used to be almost 5, so it is smaller because the fundraising environment has been tougher. But you saw them continue to act last year, to be honest. I mean, they were a growing part of the market last year. There were globally almost 100 take-privates of public companies that were bought by private equity. So they've been deploying their money in that regard pretty consistently over the last couple of years as they seek out valuation disconnects with the public market of some of these smaller public companies. They're going to continue on corporate carve-outs. We will continue to see bigger companies shedding non-core businesses, and the private equity teams will be there to buy them, and we think an uptick in that activity. And then ultimately, what you haven't seen very much of is one sponsor buying a company from another sponsor. Right. And we are seeing that market start to come back.
You are.
Absolutely. And we do see that as 55% of portfolio companies are north of 5 years.
Yeah, they got to start moving on this stuff,
years.
Right? I mean,
so there's
start
a time
returning some of that capital. Yeah,
that's where the fundraising environment's been tougher. That will only improve once they monetize. So there's an element of time in this.
Can you get a cross-border deal done in this kind of geopolitical environment?
Particularly with Europe?
Yes. I'd say, cross-border, again, the geopolitical environment there was up, cross-border, cross-region was up 40% last year, so it was with the market. I think the U.S. was definitely the biggest target nation by a mile, maybe 3x the next country. So you've got very big interest in investing in the U.S. As global supply chains, as the tariffs have, put a little urgency on having assets in the U.S. So yes, you can absolutely get a deal done across. The geopolitical environment is tense. But frankly, it's been that way all through the course of 25 as well, and it continued to have a strong year in cross-border.
So no real concerns about a deal that might require EU approval, and given the recent upswing intentions?
In the moment, it feels that way. But if you just step back and look at the activity that's happened, and I go back to company strategies. Companies have defined strategies they're going to act on. Will the governments play a role? It's possible, but I think the defined strategies of growing the corporate footprint globally is what has won the day to date. So I'm going to continue to bet on history on this.
All right. Tom, appreciate you taking time. Thank you.
Thanks for having me.
Tom Miles, Global Co-Head of M&A at Morgan Stanley.
Can't even call this shit bearish. It hasn't broken. 12:35. Candles are tiny as fuck. This is Whitehouse press conference.
OpenAI teasing some new upgrades to its AI coding tool this week as rival Anthropic's Claude Code continues to gain traction, add some new features too. Our Deirdre Bosa has been hands-on with Claude for a few days now and has more in today's Tech Jack. Hey, Dee.
Hey, Carl, good morning. So OpenAI is playing catch up here because it's been win after win for Anthropic's Claude Code over the last few weeks, as I've been talking all about it. With Cowork, Claude made it possible to build fully functional apps with just a few prompts. Now with its Excel integration, anyone can do the work of a financial analyst with just a few prompts. Now we all, as CNBC anchors and reporters, we pour through sell-side notes on the daily.
All right, let's do our second poll today.
I could get at exactly the insight that I was looking for.
In your opinion, this is about to go higher or lower from right now, right here?
All without digging through 20 or 100 pages of someone else's framework. Now, for Alphabet, the question heading into earnings is the AI tax. AI search queries, they cost more to serve than traditional ones. And with AI mode, Google is serving them to 1 billion plus users. The big question is whether AI search expands or erodes the business. So I asked Claude to build a scenarios tab that you're looking at it right now. It shows the bull, bear, base cases that I can toggle between by just writing bull or bear in that cell. In less than 10 minutes, I had this analysis. You can see exactly where AI costs start to pressure margins, how much revenue has to grow to offset it, all without touching a single cell to build this. Now, with another prompt, Claude gave me this takeaway showing that the best case versus worst case scenario for Alphabet in this scenario is a nearly $11 billion difference on gross income. Now, guys, this does beg the question, why hasn't Microsoft or Google built this into Excel or Sheets itself? Now, legacy tech, one reason maybe it's because they're layering AI on top of old foundations. The sort of innovator's dilemma, whereas Anthropic is AI native. It's actually rebuilding how these tools get used. So it's not
I might
just
need to cut it a little bit. I'm not going to lie, it's looking real bad.
But it's reasoning with the numbers in the spreadsheet. Guys, I know that this sounds
the market and gold going higher together.
AI is moving from something that most people
going higher together
to something that you can actually build with. I mean, even without coding or Excel skills, I'm creating stuff that used to require a whole team or very specific training. So we'll see what OpenAI unveils today, but the race is no
votes counted in the YouTube
chatbot, and that is going to lead to a very, very interesting year.
We have one person that voted new HOD and 6 people that voted VWAP.
Thank you, Deirdre. There was a lot of discussion of Claude 3 at Davos last week.
Is this the bulls in control, man? New low volume. Or is this a squeeze? Do fake out and go lower. Bro. $15. It's actually showing so north. Like the candle is actually showing like so fucking north. Off of what? I don't fucking know. I don't even know. Maybe gold. I don't even know. It's just showing so north. Let's dump. Alright, come on, let's dump a little bit. Fuck.
And we welcome in our next guest. That's Matt Britton. He's an AI and consumer trend expert, as well as the author of Generation AI. Matt, good to speak with you. Hope you're having a nice Wednesday afternoon. This new ad model ChatGPT is leaning into, is this a big-time thing?
It's a huge thing. I think it's a harbinger of things to come. I think if you look back at when Facebook went public, right, they spent a lot of resources pre-IPO gathering an audience, tying into the network effect. But then once they went public, the street had demands and they turned on ads, and it really changed the marketing and advertising industry. And right now, Meta along with Alphabet really have a bit of a duopoly in the advertising space. And that's all about the change. If you think of the last 25 years, it was consumers finding out about things largely on Meta and Alphabet properties. And then when they were in the consideration phase, they would go to Google to search and learn more, and then they would purchase on Amazon. And now you have these AI chatbots that really have the ability to take consumers down the entire funnel.
Okay, so Matt, my first wonder then is, are we heading to a place where this maybe AI, let's call it 1.0, but I know it's probably not really that, is going to turn into a pay-for-play type of situation, kind of like we've seen the traditional search market? You go on Google, you type something in, the first few things are sponsored, and is that where some of these AI chatbots are headed? If you give them enough money, they're going to suggest you more often?
Well, here's the biggest difference is consumers are already paying for tools like ChatGPT and Claude. Consumers have never paid for Google, right? So the fact that these AI chatbots already have a paid user base really means that they can have a little bit more of a balanced approach to pushing advertising because it's not their only revenue stream.
That's a good point. And so, like I guess most things, though, is the general trend towards these things to see it become a little bit more ubiquitous, a little bit more commoditized, and maybe those initial fees for access to OpenAI's ChatGPT or another slowly but surely erode, or are we not there yet?
So I think the way you're going to, and it hasn't been announced yet in terms of how
1235 support is
access
breaking
this platform. And I know that Alphabet, through its Gemini product, is going to probably launch something similar. But it's likely going to be a programmatic platform.
Ain't no way, right?
It's going to be
Ain't no way this does it like this shit. Like, what
based
the
upon
fuck?
cost per thousand
So damn
impressions,
slow.
and obviously you're going to be able to hyper target.
At the last
but I
fucking
don't think
1
you're
minute.
going to see a traditional ad sales model like television, for example, out of the gate. That OpenAI. My experience in working with them is the company has grown so much faster than their ability to actually service customers that I think they're going to have to automate this and have a programmatic platform in terms of how the ads are bought on the platform.
Okay, so with that in mind then, if you're a brand who's trying to take advantage of the latest place to be, how do you respond as those marketing teams, or if you're an individual entrepreneur, maybe selling stuff on Instagram, how do you get involved here?
Well, the first thing I'm advising clients to do is something called AEO, or Answer Engine Optimization, which is the AI version of SEO, which was search engine optimization, which is it's a lot easier to have these AI chatbots recommend your brand natively than pay to get into the conversation. And to do that, you need the right content, you need specificity in content, and you need to make sure you understand the conversations where you're likely to pop up. And going down that approach will enable you to understand what's working, the type of conversations that consumers are more likely and prone to convert to your brand from having, and then those are the type of ads that you want to run. But we're moving from an era of interrupting, which is more of a traditional advertising model, to assisting. This is the shift. It's from selling at consumers to helping with consumers. In AI environments, the most effective ads feel like recommendations and not promotions.
Okay, well, that ties into my next question was what do consumers expect in this if it goes the way that you're sort of suggesting? And it sounds like it's just a really personalized experience, which sounds like a win.
Right.
They're about to trap everybody up here. Come on.
Yeah, I mean, some of the early screenshots that have leaked out show the normal ChatGPT experience, and then just simply a box at the bottom which has recommended options. And I think as long as that's the case and it doesn't detract from the value and tremendous utility that ChatGPT
Look at the amount of fucking
currently
bulls
provide to
like
consumers,
trap.
I think consumers are going to be fine for it. At the moment we hit a point, like you alluded to earlier, where these models, and ChatGPT, for example, is prioritizing advertising revenue over the consumer experience, and you're seeing just a bunch of paid links, well, then I think it changes things. But I do not expect that to happen, especially given the fact that, again, they have such a large built-in install base of paid users.
At least we're not there yet. So at least the rollout seems like it's going to be something that's quite different and maybe
Let's get 690.86. Fuck LOD. Fuck LOD. Let's get 690.86.
All right, we got a little bit of time, but we'll see what happens. Matt, we'll have you back soon. Matt Britton, always a pleasure. Author of Generation AI.
Oh my god. I don't know. It's so fucking easy looking. Come on.
On the Greenland issue, I disagree with the president. What we need to do is to bring down the temperature.
We live in an era of great power rivalry. The rules-based order is fading.
An endless accumulation of new tariffs that are fundamentally unacceptable.
The use of tariffs against allies is completely wrong.
When friends shake hands, it must mean something.
It looks like we have the concept of it. It gets everything we wanted, including especially real national security.
He again has been able to take leadership on this issue.
The process of getting to that agreement has clearly damaged trust amongst allies.
No doubt, the rhetoric we have heard the last year is unacceptable for us.
So here's the latest this morning. World leaders emerging from Davos with the world order tested. President Donald Trump saying he'll hit Canada with a 100% tariff if the country becomes a drop-off port for Chinese exports. Joining us now is Bloomberg's Tyler Kendall. Tyler, is there an appreciation for just how offended American allies actually are at the moment?
Well, John, at this point, considering the White House's staunch threats against our allies, I'm not totally sure that we did hear the U.S. Treasury Secretary Scott Bessent in an interview over the weekend appear to temper the president's threats when it does come to Canada, saying that if they do not pursue a free trade deal, as
I guess the market deciding right
Mark
now.
Carney said over the weekend, then these tariffs
At
wouldn't
the
end up
bottom of the
going
algo
into
range.
effect. So we have to keep in mind here that the relation between Trump and Carney has long been strained, right? Carney largely campaigned on countering this White House when it comes to trade, and there has been mounting frustration between both
Arsine
of the
bear
sides
territory.
amid a lack of
Candles trying to
progress
cross
on a trade
POC.
deal. While yes, a lot of the Canadian exports to the U.S. are shielded by the USMCA, there is still huge exposure when it comes to those sector-specific tariffs, particularly like steel, and that is why this escalation is likely previewing what is going to be months of positioning ahead of the renegotiation for the USMCA this summer. I spoke to one senior administration official over the weekend who told me that the U.S. is going to maintain the posture that this is only going to complicate matters for Canada going forward, that ultimately we're going to see more economic risk, they said, to Canada because their economy is smaller and less diversified, which brings us to the reason why President Trump is upset in the first place, because they are reaching out to those other trading partners like China. Though, just for quick context here, Canada does about 1/10 of the trade it does with the U.S. with China. So we're talking about a very small portion. This emerging deal is supposed to be a lot limited in scope. But John, to your question on whether or not this is materializing, the U.S. is realizing these deeper risks, I will say it's not necessarily deterring our allies. I'll point out that today, Canada's energy minister is actually in India to pursue some more trade agreements there.
And we welcome in our next guest.
Oh shit, sorry. Bears are coming. Time is 4 minutes before the White House press conference. bullish push that morning open. And they're burning my 1120 since what a cycle. It's like QQQ is like holding this bitch, not allowing it to go. If it breaks 625.75, it's fucked, but yeah, it's just holding this bitch. Man, the fucking giggles. Come on now. What a fucking way to cycle. Right. 2 people said new HOD, 8 people said VWAP at 12:42. Time is now 1:20 minutes ago. Pretty crazy cycles coming. Time is 1 p.m. Man, are the Bears trying, or are the Bulls trapping here? The Bears. No volume, sure. God knows they're doing this shit with no volume to begin with. Does the volume come down south, or does it stop? Popcorn MacD. playing with fate, bro. Fuck. This is the 3/3 since 12:10, so it's been 15 minutes, and we're playing in the 3/3. So, can you imagine how crazy this shit is? The risk. Bulls have been hoping for it to come back for the last 50 minutes. Bears have been hoping for the last 40 minutes for it to break lower. Like you can imagine, the amount of fucking crap that could change it in a single candle and volume. No volume coming in anywhere yet. Candles are just flipping up and down, green and red. It's burning a lot of time. Come on, brah. Let's get it over with. Let the crime begin after. Bearish 3/3, pushing lower. Bears are pushing with the volume now. Direction is south trying. POC is trying to flip downward. It's bearish, bearish, barrage, barrage. Dude, I can't even get my 693s back. Like, if this shit is... It's so sad. Why is it so fucking tiny and slow? And these dumbass little scalp, little cycles aren't just data burning at all. Trash candles. Trash candles. Trash cycles. Holy crap. Unless it drops $2. Then great cycles. Great all that, but like this is trash. Oh my. Oh my. Please. $2 lower. Oh my. Whitehouse press conference. Why is this shit right on the fucking White House press conference? Didn't even start. Why is it right on the fucking White House press conference? Hate that shit. I literally got caught in an artificial intelligence cycle at 11:20. And now I'm in the fucking cycle.
No, you should. You should reach out. He doesn't reply. I Hopefully I'm not blocking you. You're not getting a satisfactory answer. But find that out because I think you just told me.
Fucking deadly 3/3.
No, it's good. Yep, that's pretty fair. Yes, yeah, I got another shot. Carolyn could get it, possibly. I raised it high enough. Yeah,
You really can't break 693? Like, come on. I know once it loses 693, it'll go fucking fast, but like, it just won't fucking lose it. Like, come on. One. 1:15. There's like 2 hours left. Coraline. We need you, Coraline. Coraline! Get the fuck on now, Coraline. Now, Coraline. Oh my. Oh my. Oh, fucking the MACD just slowly. What the fuck? Drop it a little or burn it all, man. Come on. Drop it a little or burn it all. Let's fucking see it. Drop it a little. Fuck. Ooh. Just fucked. Just fucked on a bear strap. Like what? destroyed in 2 minutes.
Good afternoon, Jackie. Thank you for that. Thanks for coming in on a snow day for the rest of the government in the country. And as much of the country feels the impacts of that winter storm, President Trump continues to monitor the situation closely, and he has remained in constant contact with FEMA and emergency responders. President Trump also quickly approved 12 federal emergency disaster declarations within 24 hours for the states of Arkansas, Georgia, Indiana, Kentucky, Louisiana, Maryland, Mississippi, North Carolina, South Carolina, Tennessee, Virginia, and West Virginia, enabling these states to access critical federal resources to supplement their response efforts if needed. These declarations will help state-led efforts of turning power back on, clearing roads for emergency services, and keeping communities safe. The White House will continue to correspond directly with governors and local officials in the coming days, especially in those states that were harshly impacted by this storm. I would also like to address the chaotic scenes in Minnesota over the weekend. Nobody in the White House, including President Trump, wants to see people getting hurt or killed in America's streets. This includes Renee Good, Alex Preddy, the brave men and women of federal law enforcement, and the many Americans who have been victimized at the hands of illegal alien criminals. Saturday's shooting remains under active investigation by Homeland Security Investigations and the FBI. The Customs and Border Protection is also conducting their own internal review. As President Trump said yesterday, the administration is reviewing everything with respect to the shooting, and we will let that investigation play out. But let's be clear about the circumstances which led to that moment on Saturday. This tragedy occurred as a result of a deliberate and hostile resistance by Democrat leaders in Minnesota. For weeks, Governor Walz and the Mayor Jacob Fry and other elected Democrats were spreading lies about federal law enforcement officers who are risking their lives daily to remove the worst criminal illegal aliens from our streets: murderers, rapists, pedophiles, human traffickers, and gang members. Governor Walz and Mayor Fry have shamefully blocked local and state police from cooperating with ICE, actively inhibiting efforts to arrest violent criminals. They have also used their platforms to encourage left-wing agitators to stalk, record, confront, and obstruct federal officers who are just trying to lawfully perform their duties, which has created dangerous situations threatening both these officers and the general public and Minnesotans alike. This is precisely what unfolded in Minneapolis on Saturday morning. Obstructing federal law enforcement and inciting violence against officers is wrong and illegal. This used to be a universally accepted position in the United States. Amid the hysteria, we must remember how we got here to this moment today and what this Democrat opposition is about. Former President Joe Biden and the Democrats opened America's borders for 4 years, inviting tens of millions of illegal aliens from all over the world to flood into our country. Among them, violent criminals who terrorized American communities and have inflicted devastating, permanent pain and harm on law-abiding Americans and their families. Yet we never saw outrage from Democrats or their allies in the liberal media over these horrifying crimes against U.S. citizens. The pain of American angel families was ignored and dismissed because it undermined the Democrat narrative. Innocent Americans like Jocelyn Nungray, Laken Riley, and Rachel Morin are just a few of the many victims savagely murdered by illegal alien criminals. Earlier this month, an illegal alien from Mexico with a long criminal history who came into our country under Joe Biden's administration threw a baseball-sized stone at a school bus carrying children in New Jersey and fractured the skull of an 8-year-old innocent child. President Trump promised accountability to these American families by securing the border, deporting every illegal alien who has committed crimes, especially and most importantly, violent crimes. Nearly 80 million Americans voted for him to deliver on that very promise, and he is. As the duly elected president, the president is fulfilling the will of the people by arresting and removing these threats from our country in cities from Los Angeles to New York, and yes, Minneapolis. Yet Democrat leaders in Minnesota
Fucking way to
with
move the
sanctuary city
exact fucking
policies have
opposite way of
actively
everyone
defied
wants to fucking
federal immigration law and
literally
the
when the
will
shit starts,
of the
like,
people.
dude.
And as a result of that defiance, 2 Minnesotans have now tragically lost their lives on the streets of Tim Walz's state. It is President Trump's hope and wish and demand for the resistance and chaos to end today. That's why President Trump spoke with Governor Walz directly this morning, and he has outlined a clear and simple path to restoring law and order in Minnesota. Number 1, Governor Walz, Mayor Frey, and all Democrat leaders should turn over all criminal illegal aliens currently incarcerated in their prisons and jails to federal authorities, along with any illegal aliens with active warrants or known criminal histories for immediate deportation. Number 2, state and local law enforcement must agree to turn over all illegal aliens who are arrested by local police. And then thirdly, local police must assist federal law enforcement in apprehending and detaining illegal aliens who are wanted for crimes, especially violent crimes. If Governor Walz and Mayor Frey implement these common sense cooperative measures that I will add have already been implemented in nearly every single other state across the country, Customs and Border Patrol will not be needed to support ICE on the ground in Minnesota. ICE and local law enforcement can peacefully work together, as they are effectively doing in so many other states and jurisdictions. Additionally, President Trump is calling on the United States Congress to immediately pass legislation ending sanctuary cities once and for all. American cities should be safe sanctuaries for law-abiding citizens only, not for dangerous illegal alien criminals who broke our nation's laws and do not belong here. We hope Governor Walz will do the right thing and continue to work with President Trump to keep the American people safe following their call this morning. Americans overwhelmingly want exactly what President Trump is delivering: strong borders and strict immigration enforcement against the worst illegal aliens, of which there are still hundreds of thousands to deport from the interior of our country. The most peaceful way to carry out this vital public safety mission is for Republicans and Democrats to do it together, and for state and local law enforcement to work together with federal law enforcement. We want to let cops be cops. You wouldn't know this continues to be a very popular policy position from the biased media coverage over the course of the last few days, but polling shows huge support for this exact thing President Trump is calling for. More than 80% of Americans favor deporting illegal aliens convicted of violent crimes. A country unable to deport criminals who enter it illegally is no country at all. The open borders agenda of Kamala Harris, Tim Walz, and the Democrats was already on the ballot on November 5th, 2024, and it was resoundingly rejected.
Something with
President
IWM.
Trump will never back down from his promise to deport violent criminal illegal
0.618.
aliens and make America safe again, and he welcomes all cooperation in that effort. With that, I will answer your questions. And Jordan Conradson, why don't you kick us off today? Thank you for being here.
Thank you, Caroline. Jordan Conradson from Gateway Pundit. I have a few questions. First, with respect to the shooting in Minneapolis, we're seeing massive outrage from mainstream media and the left, but I'm just wondering, where was that outrage when Ashley Babbitt, an Air Force veteran, was executed by Capitol Police Officer Michael Byrd, who she posed no threat to in the U.S. Capitol?
Well, you raise a very important point, which I also believed I just raised as well in those opening remarks, in that there has no doubt been selective outrage by the liberal biased media in picking and choosing victims and highlighting their stories. And as I've said, President Trump does not want any Americans to lose their lives in the streets of America and in American communities across the country. He believes what happened on Saturday is a tragedy, but every life is equal to President Trump, and that's why the lives of Laken Riley and Jocelyn Nungray continue to matter to him and be an utmost priority to him to this very day. And it's unfortunate that we did not see the same type of sensationalist media coverage over the tragic deaths of those innocent American women and girls across the country as we are in the wake of this tragedy that took place on Saturday. Gabe. Sure, go ahead, Jordan.
I want to get your response to this. The Arizona Attorney General, just days before this shooting in Minneapolis, she seemingly encouraged rioters to go out, shoot, and kill ICE agents. And I'll quote her here. She said, "If you reasonably believe your life's in danger and you're in the house or in your car or on your property, you can defend yourself with lethal force." And she said that can't tell if ICE agents are law enforcement or imposters, and it becomes an issue of whether you reasonably believe they were law enforcement. Do you have a response to that, and does the White House believe that she should be held accountable for these remarks?
Such dangerous rhetoric, as I pointed out, is exactly what has brought us to this position today, where you have elected Democrat officials across the country who are encouraging left-wing agitators and crazy people to go out and unlawfully obstruct lawful immigration enforcement. Again, these brave men and women of ICE and Border Patrol and the federal enforcement are just trying to do their jobs to enforce our nation's immigration laws and to go after the worst of the worst in this country. I would encourage everyone in this room, and I would encourage the Arizona Attorney General to look at the video of an ICE agent in Minneapolis. He was approached by left-wing agitators who were honking their horns and were screaming slurs at him, and he rolled down his window and he said, "What are you doing? I am out here trying to catch a child predator, somebody who has convicted crimes against an innocent child, and you are trying to obstruct me from doing my job." This rhetoric against ICE, comparing them to Nazi Gestapo, Donald Trump's police force, is despicable, it is shameful, and it is precisely what has led to the escalation of tensions in Minneapolis and in other places across the country. Gabe, go ahead.
Her for justifying violence.
I would defer you to the Department of Justice on that.
Thank you, Caroline. Regarding Minnesota, on Saturday, the Department of Homeland Security posted that Preddy looks like he wanted to do maximum damage and massacre law enforcement. Stephen Miller on Saturday posted that, or called Preddy a would-be assassin. Why did administration officials jump to conclusions before an investigation had even been conducted?
Well, look, this has obviously been a very fluid and fast-moving situation throughout the weekend. As for President Trump, whom I speak for, he has said that he wants to let the investigation continue and let the facts lead in this case.
With regards to the deployment of Tom Homan to Minneapolis, should the deployment of Mr. Homan to Minneapolis be seen as a sign that the president is dissatisfied with how the officials on the ground had handled the incident?
No, Mr. Homan is doing an exceptional job, and he has been working with Secretary Noem and President Trump over the course of the last year. Secretary Noem still has the utmost confidence and trust of the President of the United States, and she's continuing to oversee the entire Department of Homeland Security and all of the immigration enforcement that's taking place across the whole entire country. Of course, Secretary Noem is also in charge of FEMA, and we are in the wake of a brutal winter storm where hundreds of thousands of Americans have been impacted by that. So Borders Are Homan is in a unique position to drop everything and go to Minnesota to continue having these productive conversations with state and local officials, and I know that he's catching a plane in just a few hours to do just that at the request of the president. Jennifer.
On Saturday's shooting, has the president been briefed, and have you been briefed on specific details of the shooting? How many shots were fired? How many guns discharged? And I mean, did the protesters' gun go off, or only the officers' guns? Do you have any of those details?
Again, the investigation is continuing, Jennifer, and we will let the facts lead, and we will let the facts play out in this investigation. I do know that HSI and FBI are conducting interviews with those that were involved and the agents who were involved in this unfortunate tragedy on Saturday.
Are they keeping the president up to date on all those details?
The president is obviously very much on the ball with respect to this investigation. I think he's made that quite clear with the various statements that you've seen him put out, and also the 4 points that the president has outlined as well to Governor Walz, and to encourage him to cooperate with ICE and with the administration. Mary.
Thanks, Caroline. To follow on Gabe's question, Secretary Noem said Alex Preddy committed an act of domestic terrorism. Stephen Miller labeled Preddy a domestic terrorist. Does the president agree with them?
Look, as I've said, I have not heard the president characterize Mr. Preddy in that way. However, I have heard the president say he wants to let the facts in the investigation lead itself.
Was he alarmed to hear his top officials referring to him in that way, rushing to that judgment?
Danny, go ahead.
Thanks, Caroline. On Stephen Miller's comments, will Stephen Miller be apologising to the family of Alex Preddy for calling him, quotes, an assassin who tried to murder federal agents, despite the fact that, as you say, this is still under investigation?
Look, again, this incident remains under investigation, and nobody here at the White House, including the President of the United States, wants to see Americans hurt or killed and losing their lives in American streets. And we mourn for the parents. As a mother myself, of course, I cannot imagine the loss of life, especially losing one's child. And that same empathy from the president goes for the parents of angel families, parents of victims of illegal alien crime across our country as well. And that's exactly why the president continues to be wholeheartedly committed to deporting the worst of the worst criminals from our country. Why don't we go to the back? Kelly.
Caroline, does the president believe that the killing, though, was a mistake? Has he expressed that at all?
Again, the president has said, you know, we have to review it, and this investigation needs to continue, and he's letting the facts on the investigation lead itself.
Does he want the body camera footage to be released to the public? Now,
that's not something I've heard the president commit to, so I won't do that from the podium. Sure.
Caroline, how serious is the administration taking allegations that local and state officials in Minnesota are actively coordinating with demonstrators through encrypted or non-encrypted communications, as well as providing government resources to impede immigration enforcement operations?
I'm sorry, Carrie, could you repeat your question?
How serious is the administration taking allegations that local and state Minnesota officials are communicating with demonstrators to basically impede immigration officials?
Well, we've definitely seen active organization amongst these left-wing groups, Carrie, and it is something that I know the FBI and the Department of Justice are looking into. Again, it is illegal to unlawfully obstruct lawful immigration enforcement in this country, and these agitators are making it nearly impossible for ICE to do their jobs and for federal law enforcement to carry out the will of the American people to deport the worst of the worst. I would just encourage everyone to please imagine in this room, all of you come to the White House every day to report on the President of the United States and the administration. You come into this briefing room, you walk through the gates of the White House. Just imagine if there were left-wing agitators or agitators of any kind who were in your face, who were doxing you, who were harassing you, who were physically threatening you, who were biting off your fingers. In the case of two Border Patrol agents we saw this past weekend in Minneapolis, that would make it very difficult for you to show up and do your job here at the White House every single day. That's what these officers in Minneapolis are facing. That's why the president is calling on Governor Walz and Mayor Frey for these three very simple and common sense points of cooperation so that ICE and local law enforcement can work together. Again, we are just asking for police to be police. And if you ask any law enforcement agent or official, they want to be able to work with their federal counterparts at the state and local level.
Maybe we are showing all-time highs next week or this week. Shit, maybe we are doing all-time highs.
Thanks a lot, Caroline. Two questions. One is looking forward. The role of Mr. Homan. Is he being sent by the president to diffuse the situation that exists right now on the ground? Is he the point person essentially for the White House in terms of trying to tamp down the tensions that exist right now in Minnesota?
Well, Mr. Homan is the point person for cooperating with state and local authorities and corresponding with them, again, to achieve this level of cooperation to subdue the chaos on the streets of Minneapolis. And I would just point out that Mr. Homan is someone who has been lauded for many, many decades for his experience working in law enforcement. In fact, this is a Washington Post headline from 9 years ago, 2016. Meet the man the White House has honored for deporting illegal immigrants. And I would remind everyone in this room that it was former President Barack Hussein Obama who awarded a medal to Mr. Homan. So he's obviously very qualified. He has the full trust and faith of the president. He will continue to have these meetings in the hopes that ICE and local law enforcement can cooperate and work together to have successful immigration enforcement, as we've seen in almost every other state across the country.
Secondly, Caroline, can you talk a little bit about tomorrow's trip by the president to Iowa, what the purpose of that trip is, what the goals of that trip are?
Sure, yes. Tomorrow, President Trump will be traveling to Des Moines, Iowa. He will be making a local visit at a local business, and then he will be giving a speech on affordability and on the economy. And I know he very much looks forward to being there, to meeting with the great people of Iowa, but also lawmakers as well. Jake.
Caroline, a couple quick questions. First, does the president remain fully confident in Kristi Noem's ability to lead the DHS?
Yes.
And then just secondly, just on that Wall Street Journal reporting that we saw yesterday, the president said at some point that the immigration enforcement officers would leave Minneapolis. Did the Saturday killing of Alex Pretty expedite that withdrawal at all?
To your first question, the answer is yes. He still has confidence and trust in Secretary Noem. To the second question, I would point you back to what I said earlier. If Governor Walz and Mayor Fry implement these common sense cooperative measures, CBP will no longer be needed to support ICE on the ground in Minnesota. ICE and local law enforcement will peacefully work together as they are effectively doing in so many other states and jurisdictions to remove violent criminals from American neighborhoods across the country.
Ask the president to remove the immigration enforcement officers?
He asked the president to scale down, and the president reiterated what the president put out in his statement yesterday and what I'm sharing with all of you as well. I would just add on this level of cooperation a few statistics that I think are very important. 7 of the top 10 safest cities in the United States cooperate with ICE. And we've seen historic turnaround in safety in cities that have chosen to cooperate with ICE, that are not just led by Republicans, but also look right here in Washington, D.C. We had a great level of cooperation with Mayor Bowser and the local government, and we have been able to remove thousands of illegal aliens from the District of Columbia, where you all live, so you can thank President Trump for that. The murder rate in Washington, D.C. has plummeted as a result. There were no riots, there were no protests, nobody was tragically killed as a result of that level of cooperation between federal and local authorities. And again, that's all the president is asking for in Minnesota. It's totally common sense. Jared, go ahead.
Thank you. Caroline, in this process, you continue to describe the situation in Minneapolis as chaos. Was there any mistake made by Secretary Noem that led the president to send Mr. Homan there?
I'm sorry, I don't understand your question. Did Secretary Noem make a mistake which led to...
If she made any mistake that could lead the president to send Mr. Homan to Minneapolis?
No, as I already mentioned, Mr. Homan has been working alongside Secretary Noem and for the president over the course of the last year. And again, he's uniquely positioned to hop on a flight to Minnesota today to continue this correspondence with state and local authorities, and that's what he's going to be doing. Fran.
Caroline, is it the White House's position that Americans have the right to show up to these ICE operations and film, document, or protest the law enforcement actions?
All Americans have a First Amendment constitutional right, of course, but Americans do not have a constitutional right to impede and obstruct lawful immigration enforcement operations. That is actually a crime, and it's something that we've seen taking place in the streets of Minneapolis, which again is leading to these dangerous circumstances that these federal law enforcement officers have been forced
None of what's going on right now makes any sense.
With Governor Walz this morning, the president described it as respectful. He said we seem to be on a similar wavelength, but you had strong criticism for the governor and the Minneapolis mayor, Jacob Frey, just now. So could you explain the difference in tone between what the president had said in his True Social post and I think some of the criticisms that you just levied from the podium?
Fran, I think the criticisms that I laid out, I'm painting the picture for all of you in this room, are what led to the moment that we are in today, where Governor Walz and President Trump are having a conversation, a constructive and productive conversation to end the chaos and the lawlessness that has taken place in Governor Walz's state. Chris,
thank you. I had a question. With Homan now going to Minnesota, is Gregory Bovino also going to remain in Minnesota?
Caroline! Makes no sense, Caroline.
Mr. Bovino is a wonderful man.
What the fuck, Caroline?
He is going to very much continue to lead Customs and Border Patrol throughout and across the country. Mr. Homan will be the main point of contact on the ground in Minneapolis.
And to follow up, given what we've heard from several Trump administration officials, people point out calling him a domestic terrorist, but saying that Preddy was out to massacre law enforcement. Why not require ICE agents to wear body cameras to clear up some of the disputes that we are hearing from witnesses and video footage versus what the administration has been saying?
Well, that's a policy question that I know the policy folks in the building are having with members on Capitol Hill, and I'll leave it to them and the president to make that decision.
And I just my final question is on, you were talking about the level of cooperation
the
president talked about with Governor
So
Walz.
volatile.
Will the administration commit to cooperating with local officials on this investigation into Alex Preddy?
The president spoke about this with
$3
Governor
up
Walz
today.
and said he would have a discussion about it. He did not make a commitment, and so therefore I won't make that commitment here. I would just remind all of you in the media, because I've seen a lack of reporting on this fact, there are investigations into what took place on Saturday. The Homeland Security investigations and the FBI have teamed up for an investigation, and there's also an internal CBP investigation, an internal review of what is happening on the ground in Minnesota. The president supports those investigations, and as I've said repeatedly, he wants to see them move forward.
Warline bullshit.
FBI Director Kash Patel said in a Sunday interview, quote, "You cannot bring a firearm loaded with multiple magazines to any sort of protest." Does the president believe the Second Amendment rights remain in effect even when protesting?
The president supports the Second Amendment rights of law-abiding American citizens. Absolutely. There has been no greater supporter or defender of the right to bear arms than President Donald J. Trump. So while Americans have a constitutional right to bear arms, Americans do not have a constitutional right to impede lawful immigration enforcement operations. And any gun owner knows that when you are carrying a weapon, when you are bearing arms, and you are confronted by law enforcement, you are raising the assumption of risk and the risk of force being used against you. And again, that's unfortunately what took place on Saturday.
Will his mission continue to be focusing on illegal immigrants with a criminal history, or will it be on illegal immigration generally?
Mr. Holman will continue to enforce our nation's immigration laws, especially deporting the worst of the worst criminals in Minnesota who have committed violent offenses. And I would just remind all of you that this important work is continuing to be carried out. In just the last few days, I'm happy to provide this packet to anyone in the room. ICE has arrested multiple violent criminals, illegal aliens within Minnesota. Many of them have convictions for assault, driving under the influence, fraud. This individual here I'm looking at was an aggravated felon with multiple convictions for larceny, fraud, and forgery of checks, vehicle theft, drug possession, domestic assault, inflicting bodily harm on another, criminal convictions of larceny, identity theft, again, charged with driving under the influence. These are extremely dangerous people who Governor Walz and Mayor Frey have allowed to roam on their streets, and all the president is asking for is cooperation to arrest individuals like this and deport them from the United States of America.
No time.
I'll take a couple more. Go ahead.
Okay. So this weekend the president posted that this is a cover-up of the fraud in the state of Minnesota. He also posted Minnesota is a cover-up. These both happened after the shooting. So, given that these came after the shooting, what is the this here? What is the cover-up?
Yes, it's a good question. I've spoken with the president about this at length. What the president is referring to is the fact that you have Governor Walz and, again, the mayor, who have been encouraging these left-wing agitators to come out and to harass and to dox and to threaten ICE and to make this conversation about and smear lies about federal law enforcement who, again, are just trying to do their jobs in an attempt to distract from the widespread, massive fraud that has taken place in their state. Billions and billions of dollars has been stolen from law-abiding taxpayers in Minnesota, and the administration continues to be very focused on getting to the bottom of it, especially, and the president raised a good question over the weekend, with respect to Congresswoman Ilhan Omar, who now has a net worth within the millions, and one must ask themselves, why and how is that possible? Is she connected to the fraud rings that we have seen taking place within her state and her own district? It's a question the American people are raising, and the president believes it's one worth answering. Haley.
Thanks, Caroline. I want to go back to some of the comments from Stephen Miller and Secretary Noe. You've made clear the president wants to see the investigation play out when answering some of the questions on the specific details. Is he concerned that some of those definitive statements made by other officials...
Can this shit really not drop $2? Does it really need to pump $2 again?
Again, the president believes that these investigations are credible.
Is it crazy to want a $2 drop right here? Like, fuck.
Alex.
Is the administration willing to separate DHS
What the fuck
funding
is
from other
this
funding bills
shape?
in order to avoid a broader shutdown?
What do you even call this shape on SPY?
At this point, the White House supports the bipartisan work that was done to advance the bipartisan appropriations package, and we want to see that passed. Policy discussions on immigration in Minnesota are happening. Look, the president is leading those discussions, as evidenced by his correspondence with Governor Walz this morning, but that should not be at the expense of government funding for the American people, which would include, as you know, Alex, FEMA funding, and we are in the midst of the storm that took place over the weekend, and many Americans are still being impacted by that. So we absolutely do not want to see that funding lapse, and we want the Senate to move forward with passing the bipartisan appropriations package that was negotiated negotiated on a bipartisan basis.
Secondly, there's another round of Russia-Ukraine talks this weekend, Sunday. I wonder if you can walk us through with the president, how he'll be involved in that, if at all. We'll be talking to President Putin, President Zelensky ahead of those meetings.
I'm not tracking any scheduled calls at this point in time. However, the president remains deeply involved, and of course he's being advised by his advisors, namely Jared Kushner and Special Envoy Witkoff, on these talks. They had a multilateral meeting this past weekend, which didn't get a ton of coverage, but that was historic in nature, where the president's team has really brought two sides of this war to the table together to move the ball closer towards peace. So the president is not giving up on the peace process. He obviously just met with President Zelensky when we were in Davos, Switzerland, but I'm not tracking any calls scheduled for this week. On one more foreign policy point, I will point out, as you all saw, the last remaining body of the hostages, Israeli hostages in Gaza, has been returned. This is a huge foreign policy feat for the President of the United States, for the State of Israel, and frankly for the whole world. The President made the impossible possible.
Man, market is just straight up melting now.
For the United States,
like
for our
straight
allies,
up
and
up
also
when
for
core
peace
line
in the
started
Middle
and
East.
now straight up
And I
down while
understand
she's
that more
talking.
than
Like
20
what the
new
fuck is
additional
going
countries
on?
have also signed up to join the newly established Board of Peace with respect to the rebuilding of Gaza, which is another historic
Straight
accomplishment
up news
for this
cycles.
president. So thank you all very much, and we'll see you in Iowa tomorrow.
Insane work. Insane work. That guy is fucking laughing because we just did all this shit and went nowhere. We are literally right back to where we were at the poll. Like, what the fuck?
Have also signed up to join the newly established Board of Peace with respect to the rebuilding of Gaza, which
We're
is another
literally right
historic
back to.
accomplishment.
We are literally right fucking back to where we were. Oh my. Core line. Fuck. Core line. Damn. Time is 1:50. This shit feels so fucking worked with. The MACD. I guess it was like that every fucking day. Like, what the fuck? What a crazy fucking pull. $130 HOD. What a crazy pull. Fuck. I need something big. Not these tiny ass going nowhere. Market holding super strong. Gold holding super strong. I thought one of them would fucking give by now. Today. Actually, none of them. Just pretty crazy.
Welcome to Morning Brief. I'm Julie Hyman, actually snowed in New Jersey, along with millions of real. Coming up next, we'll be digging more into that big move up in precious metals. We'll be right back. For joining me now, MarketGauge.com chief strategist outside of the snow zone. Luckily for you, Mish, down there in New Mexico. But I do want to talk to you about what's going on with the precious metals, because, I mean, the run has already been incredible. And now we have this breaking of $5,000. How significant do you think that level was, and what happens now?
Well, first of all, I think the most biggest takeaway from the gold market is that it has been a very reliable mirror in that it shows all the potential cracks. And at 5,000, what it's really saying is, are those cracks going to become more like fissures, right? And so you've mentioned some of the cracks already, obviously geopolitical situation being one. But on the other hand, we also have the silver market, right? And so essentially that gold to silver ratio is showing yet another potential crack that many people aren't talking about, which is, are we going from the prediction of disinflation into more of a super cycle of hyperinflation? Because all of a sudden, even with all the economic growth that's projected, the demand on commodities is also going to continue to grow. So I don't see gold or silver going down. That doesn't mean we can't have a correction. Would I be first buying at 5,000? Probably very expensive to do so. But with predictions of 6,000, 8,000 and beyond, we don't really know. What we do know, this should be a little bit alarming to people about what's going on.
Well, and the flip side of that, and maybe the flip side of the alarm over that, is also the dollar, right? Which is going down. So are we, as we continue to see metals move up, does that definitely mean that we're going to continue to see the dollar move down?
Well, we've certainly seen the metals go up while the dollar was actually trying to consolidate and even have a little bit of a pop. So this recent downward move in the dollar is certainly another concern. We aren't at points yet where we need to start to panic about it, but now DXY just broke down under 97. And there's a lot of different reasons for why the dollar is settling off. I think the biggest concern we have to have, not only our own purchasing power and this whole inflationary potential, but also what does it mean for our relationships geopolitically with foreign countries who may not necessarily want to support our dollar. And so I think the best way to look at all of this backdrop is we got to look at the glass half full and half empty. And the half full part, Julie, is that everything that's going on with the administration, with the deglobalization and the onshoring and the muscling that we have to get more materials into this country, plus demand that people pay us, or either that or we're going to produce in this country, could be good. But we also know that there's a lot of things that could go wrong. And that's why we're seeing the dollar fall and the metals really continue to have a lot of support. So the question is, what happens to the overall market? That's right now, I think, a little bit under question because the market is strong.
Right. And, the sort of, as all of this stuff has been unfolding really over the past year, whether it's tariff threats or the Greenland situation, most investors who are bulls say to me, earnings are fine, right? And that's really the thing that's going to matter in this market. Is that how you see it also? I mean, especially since we're going into a week that is going to be blockbuster earnings, between large cap tech and just a very busy week for earnings.
Well, I think the earnings, to me, have always been sort of backwards looking in a sense. because it's reporting what it did in the quarter before. So the question is what happens in the following quarter. And there's going to be things that are going to affect certain earnings and things that don't affect other companies. Obviously, interest rates, that's going to be a big topic this week with the Fed, is going to be part of it. Economic statistics, consumer confidence, which comes out tomorrow. So the earnings are not necessarily, to me, what's the most important thing. It's going to be the reaction. And I think we can just start with Netflix, right? The earnings were fine, but the reaction was negative.
Yeah, sadly,
So I
until
think we're going to see
POC
that in some of
breaks,
the
this bitch is
companies because
still
they're going to be looking
bullish.
at capex and how much more money can be spent without the consumer participating in getting those companies to grow. And then I think there'll be other companies that might do well. I think of the earnings coming out this week, I'm mostly interested in Meta and Microsoft, probably somewhat technical, but also because those have not necessarily been participating in the big run that we saw as we were coming into this year, like we saw in some of the other stocks, like Google, for example. So it'll be interesting to see, but the whole tech area is not really been my major focus right now. Anyway, I mean, we own Micron because the memory's gotten hot, but my
We've
God,
been
that
here
thing's
for
gone
fucking
parabolic. I think we're
4
seeing a big
hours.
shift,
Fuck.
rotation in this market right now.
We've been here for
It's
4
interesting that you
hours.
talk about that, Mish, because we've seen like little kind of attempts at that rotation over the past year. This one feels more real or sustainable, right? But how will we know? Is it just a matter of waiting to see if it keeps going? Or are there other sort of technical signs that you can read underlying the market that tell you that this one is a little more here to stay?
Well, first of all, we have seen already small caps outperform this year the NASDAQ. That's a new thing. We haven't seen that before. So we have to really not only see the small caps continue to do well, but we have to see some of those other inside sectors participate in order to keep the small caps going. From an economic standpoint, we have seen durable goods just came out very positive. So we are seeing growth in the US economy. That's what these are all about, right? This rotation is showing an optimism for the economy to continue to grow. Whether that optimism remains, of course, we don't know. But at this point, the also areas we have to look at in terms of where we're rotating is something like biotech, which has been under pressure for a long time. Now, all of a sudden, all these biotech companies are starting to perk up, not all, but many. And even from our own standpoint, where we do a lot of quantitative models off of trend strength indicators, we are rotating out of some retail names and smaller tech names into more biotech names. So this is all very interesting to me. We want to see small caps, IWM stay in the game. We want to see it get back over 267 and not fail the January lows. And if that happens, then we can continue to see that rotation. But again, with all the caveats that the mirror of our dear gold is showing constantly in your mind, you have to be really vigilant this year in terms of your own investing.
Well, and I'm curious, if we're talking about rotation, what does that imply for your positioning in big cap tech, right? If the rotation.
Someone said Trump is live. I don't think he is. Hmm. And my SPX is fucking bad. Gold is going, but SPX is bad now. Can't even fucking get halfway out or some shit at some point. Like, this shit is just fucking toast. I'm in SPY, fuck. I wanted to leave and go into fucking 1DTs, but like, we're into this week, but it's just so bad. How the fuck does shit not feel real? Like, what the fuck? What the fuck was that? 12 to 11, 20, 12. Data burnt to crisp. Sucks. $693.80. HOD testing. Saddest shit ever. It's literally just, oh, we're back at all-time highs. Like, bro. Like 7 times in one fucking month. I don't know how the market's not tired. I'm about to fucking go in, like, man, I'm losing like 5k on SP or SPY today alone. I added 2k on gold. I'm going in crazy on gold. Into Thursday. I'm in for fucking basically 7.5k now. Insane work. I DC'd on SPY today. I got fucking crushed. Like, this is fucking bad. This is bad. Man. I need a fucking miracle. I really need a miracle on Nvidia and fucking gold. And market, honestly, today. This is fucking crazy. This is super. Bruh. Miracle working fucking MACD. The fuck is this miracle working MACD literally? Base fucking hella sense. Shit moves crazy. Not gonna lie. It's been like 5 bounces.
Now a CNBC contributor, FundStrat's Tom Lee. Tom, it's great to have you react to the president and what's happening in the market. So, framework to a deal, no force, all is well now for the bulls?
Scott, I think so. You know, I'd say on Monday morning before the open, I think investors were very concerned about Greenland and what's happened in Japan. And they thought of 2025 when it took 8 weeks for stocks to find their low, down 20%. So I think there was a lot of fear. So today's news really does do a lot to diffuse a lot of that anxiety. And I think
this was a couple of days ago.
Wise to buy that dip.
Yeah, I mean, as part of this, of course, the president also saying no tariffs on Europe on February 1st, and that's what really upset the market. Are you still looking, though, Tom, as positive as you might sound for a bear market sometime around mid-year?
That's right, Scott. I think we have been pretty clear that we think that there is going to be a mid-year hiccup. It could be around policy or it could be around the new Fed being challenged. But that's coming from us markets being at a higher level. And I think one of the mistakes people make whenever they hear that commentary is they think it means to go to cash. Now, as you know, we've advised to stay invested and to buy the dip. But yes, there is a lot of good taking place in 2026, but we do have a lot that's already been priced in because of 3 good years of market gains.
What dip would you be buying specifically?
Well, for instance, I would be buying the dip on companies that have good earnings visibility or a structural reason to be long, because those that got sold yesterday, for instance, they're still the same great company. They were just 10% cheaper. I mean, to me, that's a stock I'd want to buy. The names I'd want to avoid are companies that are in the bullseye of White House policy, because we know last year the White House picked winners and losers. You know,
Gold went
created
down a
problems for
little bit.
healthcare and consulting companies. This year it's credit card issuers, you know, institutional buyers of single-family homes, and it's, you know, some countries too. So I think that's the stocks to avoid. But I think fundamentally strong names, you still want to buy the dip.
I mean, it's complicated, though. You say that. You don't know who's in the so-called bullseye next. That's one of the problems.
100%. You're right, because if the White House decides that there's a company or a series of companies that are creating problems for Americans right now, whether it's credit card bills or electricity bills, you know, there could be action. As you know, one of the potential, quote, risks is data centers and their consumption of electricity. So that is something to watch.
I mean, you're gonna say, don't buy the home builders, because what if the home builders, he doesn't like home builders building homes and charging the prices they're charging? I'm just saying it's a slippery slope to start going down, where, in your words, you have an administration picking winners and losers. It certainly complicates the picture a bit, doesn't it?
It does, Scott. I mean, every administration picks winners and losers. You know, Tom Block, our policy strategist, has pointed out that's what Washington's talent is, that they tend to pick winners and losers. But we do have a White House that is quite ambitious. They've accomplished a lot, but they're trying to accomplish a lot. So you're right, that's the risk. And perhaps one of these is enough of a tipping point to cause a broader pullback in markets. I mean, that's another possibility for why we'd have a drawdown that feels like a bear market.
But you still feel as though whatever upset we see or feel is going to be reversed, and we end up having a pretty strong year?
Yes. You know, in 2025, that 20% decline.
What is pullback?
Did not lead to a recession. And as we pointed out, that since 1950, waterfall declines that are now followed by a recession, and particularly a VIX hitting 60, have been symmetric recoveries. So I think if we have a, you know, 6-week drawdown, investors shouldn't sell, because unless they're great at timing, we can recover all of that loss within 6 weeks, and we are expecting a really strong finish for the year. So,
Tom,
I think it's just.
Where does the Fed factor in to all of this? You heard the president with his obvious criticism of the current chair, Jay Powell, and some commentary on where the next chair may come from. How much does this matter to your outlook?
It's important, Scott. The Federal Reserve is the single most important entity in the world, and its independence is incredibly important because markets respect the Fed and they fear the Fed.
Gold going lower.
So the independence matters. I think the process, and Steve Reisman made some good points. I think we're at odds increasing that it's a Fed that will be respected.
Crazy ass fucking candle.
The multiple things taking place at the Fed now kind of limit how the White House can proceed to pick the new Fed chair. And actually, that's probably a good thing.
$220. POC just shifting up and down. SPY sucks today. Gold is going to the gap below, trying This shit sucks. Gold is good. SPY saw. Unless it drops $2. It's holding crazy. Oh my god. What a fucking burn, though. All fucking half of last week, and then now today too, Monday. Drop it at 2, come on. Time is 2:25. Oh, crazy work. 0 DT today, crazy work. Man, gold going lower and lower and lower. I want to fucking add more. I'm just fucking. Dude. Can't even get $1 fucking down on SPY. That would change a lot. I got trapped so hard at 11:20. I'm not gonna lie, I don't even want to do 0 DT, but I want to fucking get quick, and it got fucking real bad. Look at this shit. What the fuck, cycle? This is insane. She went up, but she also ate calls as she went up, but she ate all puts. Like, what the fuck? Gap below on SPX and QQQ for literally 1, 2, 3 days now. Bet. It's incredible.
You bring up a really good point in the sense that we need to, or business leaders need to prioritize, and we're sort of moving past the experimentation phase when it comes to AI, right? In terms of realizing and showing the ROI. I mean, is this going to be the show me the money year, 2026, Jake?
I don't think it's going to be the show me the money year, although we talk
Not yet?
about it. We talk
Well,
about
I
as
disagree
if,
with that,
as,
but we'll add on.
as if it's, I think there's just too much hype in the market still, and I think large investors still have about like 18 months before they really get upset and tired of like the hype. And I still think there's like, there's still froth. And I don't think the froth is necessarily like unjustified. There's just going to be a few winners. And I think the best executives are going to be the ones that are able to interrogate like which companies are able to actually produce ROI and not. But I don't think from an investment standpoint, I don't think we're done for the next 12 months. But I do think there's a hyper focus. I'd like to hear your disagreement too, but there's a hyper focus like, there's a hyper focus on infrastructure right now. And that will drive the conversation towards ROI, which I think is great. And I think it's going to, it's going to really separate like the big winners and losers. And so I think, both like CEOs that I talk to here, the best ones are the ones that actually understand like there's applications that we are all familiar with that is being talked about mostly here. And those applications are mostly for the executive level and a few layers below. But we don't really talk about like how artificial intelligence is actually helping and improving the condition of the folks on the ground that are running, the companies and the GDP drivers, whether it's like in these like physical jobs. And so I think it's, we talk about the AI displacing white collar workforce. We don't talk about maybe as much like how's the blue collar doing in terms of like its robotics and AI's ability to help them. And I think this comes down to this fundamental problem of, look, a lot of the information data doesn't exist, and Silicon Valley was not, there's a reason why we build technology companies that look like they do, specifically off of the internet and off of like, building it for these certain individuals. We just, like, because I'm in Pittsburgh, I get to see steel workers and I get to see power plant power plant workers, and it's a completely different world, which means I get to see a bunch of different problems that no one else gets to see in Silicon Valley. And I think, as long as you got the right talent, like that's a really great advantage. But, I think this conversation, I think like the more impact you can have for the folks that are actually running the world, the more that's where like the ROI is going to emerge from more organically. And that's the companies you got to look at.
Right, I haven't really thought about that angle, to be honest. So that's so great for you to bring that perspective. Gentlemen, do you want to sound off on the frothiness in the market?
Well, first of all, I think it is really important that we separate out the macro, the ROI of all the investments that we are making in GPUs and data centers and power, are they going to yield fruit or not? It's a useful question for the market. It's a useful question for the policymakers.
Alright, I'm in for $12,000 on gold. Sounds a little bit fucking crazy, but yeah, into Thursday and Friday.
Very much with how does AI affect us? Sure. I'll give two examples. At Snowflake,
Spy, I'm about to
my
leave.
reductive view of what we do for a living is we make software, we run software, we sell software,
4+K
deploy software.
loss.
In each of these functions, especially
did not leave earlier.
make software and deploy software.
I thought it was gonna fucking dump
AI
at some
coding
point.
agents have had a massive
I thought it was gonna
impact.
fucking go at
Our ability to
11:20. I got
deploy new
fucking
products,
trapped.
like the ones that create
And shit
agents,
ran up on me, and I
have
thought it was
them
gonna
deliver
dump at
value
1:15,
10
and shit fucking
times
got
faster,
fucked.
not
I mean,
10%
this is
faster,
literally just
has been
fucking just
truly, truly
manipulation, though. I ain't gonna lie.
and with respect to customers,
12:30 to
AstraZeneca, for
1:15
example,
felt so
use some of these
fucking
products
goddamn
to make
manipulated.
the act of creating data products go a whole lot faster with far fewer people. They save $10 million. Super concrete ROI.
I don't give a
Back to
fuck.
blue-collar
I'm in
workers,
gold heavy.
Siemens
I don't
is
give a
also a
fuck.
customer.
This shit ran up every
Do
day.
something actually quite simple.
I
They
refuse
built
to
a
believe this
chatbot
bitch is gonna go every day
on
too,
PDF
so I'm
manuals
fucking taking a
of
chance on gold. Fuck it.
150,000 devices that they make and gave it to all of the folks on
At
the
this
field.
point,
Now, anyone that's tried to
it's
fix, I don't know, a washing machine, a
fucking
fan, anything else
bad.
at home, knows the
SPY,
joy of like finding the
SPX.
PDF
I
and
mean,
finding
can
the
you
right
fucking
page and
imagine?
it's impossible.
Every time this
But
bitch goes
yet
up,
having a
it's right
chatbot
back at
is hugely
all-time
meaningful
highs.
to all of the folks out on the field that Siemens is deploying.
I don't know.
And
That's
so I
something.
very much think that AI is generating ROI
It's like fucking
today,
pre-planned.
and
Like,
that
what the
actually,
fuck are we
as
talking
company
about?
leaders, it
1,
behooves
2,
us
3,
to
4
keep
days, and
asking
1,
this
2,
question
3,
and
4
keep
days.
demanding this incremental
Right. This
proof.
literal
Again, it's
this
back
day
to
was when I
don't
went
ever
in the
get into
video.
all or nothing stories about these
It's
kinds of
4% down on the video on Tesla,
pricing that
turning
might be
into a
different
fucking
story,
buy the
but,
dip
you know,
type
what
of
you're
bullshit.
seeing is
Like,
real. And same with
haha,
the industries
haha,
that you're working with. Give us
haha,
some of the
my
most
ass.
powerful examples here.
I will, but let me just
my
quickly
ass.
kind of just talk a little bit
4
about what
fucking
Jake said
percent
and what
down. I
Steve
mean, I
said.
guess
And
that's when I
will
fucked up.
try
I'm
and
not gonna
bridge
lie.
the two, because
Because if I look at the
think
bigger
the
picture,
efficacy
right?
of
Look,
AI has
this
been
is the
proven,
3/3 of the
but
1
the
or
real
2 week
ROI
cycle shit.
which the enterprise
This, I guess,
side
people could
wants to
argue
see,
this is the 3/3
is
too.
still to be delivered.
And the thing
And
turned into a cup
it's
and handle
visible,
from the
but
top of
it's not really
193.
been kind of adopted, because
180, and it bounced on
2025
180
is supposed to
huge.
be the
So yeah,
inflection
true.
point on the
Setup
use
was
of
there,
AI, moving
and
away from
I got trapped
POCs
on setup.
and
But
applying AI enterprise-wide.
whatever
That
the
did not
fuck
happen,
this is on
and it's
SPY
taking a
though,
little bit longer. But 2026 could
this
very
shit
well be
is
the year
some
where that
sort
shift
of
really takes place.
smoking.
One of the fundamental issues associated
We're
with
back
that
on this
is
purple box for
today
literally 1,
AI
2,
is being
3,
applied
4,
as
5 times now.
bolt-on AI. And what I mean by
It's
that
smoking
is
something.
AI gets applied to be
This
able
is fucking
to automate
on
or
fucking smoking
apply
something.
intelligence into a part of a process,
Smoking
and
something.
only that part gets improved
Market
upon.
is smoking.
So when you talk about a CEO looking at their P&L and saying, did I get the benefit of $10 million or $100 million, it doesn't fall through, because you have to change the underlying process. And start doing, and you have to start doing work in a different way, which comes back to the point of talent, which needs to be proficient with using AI. It comes to the problem of actually deploying a different business
Guys, you
model
know what's fucking
and
crazy?
using AI
A couple
in
of
a
days
manner
ago,
that's going to be
I got
producing the
hit
ROI
and
that
ran
you
by
get.
somebody on the highway.
So
And I
I'll
have
give
his
you an
license, so I
example.
gave it to the
You know,
cops.
one example
But I literally
is
got into
work
a
that
car
we do with
crash
clients
literally a
in the
week
healthcare
ago. A week ago.
we do a process
Like,
called payment
I don't know
integrity.
what the
So in
fuck is
healthcare,
going
which is
on.
a large industry in the
But
US,
man,
5% of
I hope
all
this dude
claims
has
that are paid
insurance, because I'm
are
about to
subject
fucking go after
fraud,
him. But like,
waste, and
this is
abuse.
fucking
Just
crazy.
think of the magnitude
He
of
just
that.
hit and ran.
In the past, we would have
He was like,
thrown
let's
a
just
lot
pull
of
over.
people
And he
to
just
take
dipped.
a look at where that leakage is taking place and identify
I don't even know,
areas,
man.
and then be able to recover that money back for our clients.
Hopefully I can
Today, we've got now a
recover
data
my
lake
money
which
from
has
the
got
hit and
all of
hit and
this
run.
data
Hopefully it's not
stored
out of my
in
own
for the
pocket.
last 10, 15
'Cause that's
years.
crazy.
And we can apply AI algorithms to that data, and AI is beautiful
So much
at
shit going
identifying
on.
patterns. So you can, when you identify that a particular hospital or a particular medical practitioner is applying a different way of, applying reimbursement as opposed to the code, you can identify that and you can quickly replicate that across the entire spectrum. So that's been a huge advantage, and we've been able to kind of help our payers save tens of billions of dollars associated with that.
It's time now for our 360 round. For that, let's bring in our panel to discuss Mag 7 earnings, which of course kicking off this week. week. Joining us right now, Shai Balor, Chief Market Strategist at Future Room Equities, and Angelo Zeno, the Senior Equity Analyst at CFRA Research. Thank you both for being with us today. I hope we have you guys. Can you guys hear me okay?
Yeah, I can hear you.
Okay, wonderful, great. Oh, and I can see you now. Amazing. All right, so we're kicking off this week. We got more than 90 companies from the S&P 500
This shit is
reporting this
cooking
week.
to
Of course,
close.
with the Mag
This is
7
so
this
fucked.
week, we've got Meta, Microsoft, Tesla, and Apple all coming our way.
My
So, Shai, let's just
693's
kick things
got
off with
cooked
you
like
here.
crazy
Who
all
are you
day.
most excited for and why?
I mean, I'm most excited for Amazon because I think they've been penalized for being that AWS
Back
plus
out
the
all-time
consumer
highs.
type of company where they trade cheaper than any other
Ant
AI
cycle,
agent
just
because it carries
straight
a
up
massive
north.
retail business that moves with the economy. That, which means the market is watching two things at once, as well as myself. Is
Straight up
AWS
north.
going to show any kind of
Literally back out
to
all-time
21%
highs in
plus?
4 days.
And
3
is the
days.
consumer going to hold up? Also, advertising is an underappreciated stabilizer here with Amazon.
I mean,
because
this is the
it's
term,
already a $65
taco
billion
trading, but
business
like, what
growing
the
at
fuck?
24%.
Trump
And
always
they
cancels.
have a unique ability
Chickens out.
to be able to sell ads right next to a purchase intent, which makes them much more resilient when brands do tighten the budget elsewhere. So that's one name that's top of radar.
Taco
I
trading.
know that you don't specifically cover Amazon or Tesla. So as far as who you're most looking for either an upside or a downside move, which report are you most looking for?
Yeah, I mean, I think the one that's going to move the most here is likely going to be Meta, and that's because you just don't know what you're going to get from this one, and it really comes down to what Zuckerberg's plans are at this moment in time. But you think about Meta at this point in time, clearly it's among the most affordable from a valuation perspective, still trading less than 20 times our 2027 estimate. The digital ad market looks extremely healthy right now. There's a lot of catalysts that could move the top line here for Meta over the next couple of quarters. Whether it be tied to those, the drivers on the digital ad side, like the World Cup, the Olympics, the midterm elections, but more importantly is the fact that they're going to ramp up, Threads advertising,
This thing
among
is
other
holding.
things, greater AI-related ad revenue as well. But what I would say is it really comes down to the cost and what they do here. I mean, I think they kind of gave a sneak preview a couple of weeks ago in terms
Like
of saying
barely any
we're gonna ramp
correlation
up
with
some,
IWM in the market right now.
opportunities on the compute
Like
side,
barely any
potentially looking at
correlation.
sovereign AI opportunities. So the CapEx
Looking
spend
wild.
number, I think, probably disappoints being higher than expected. And then
Just
the
like more
OpEx number, though,
correlation
I
with
think is
gold
where
in the
there's some
market
real
right now.
room.
What
And
the
if
fuck?
they show, ways to actually reduce that OpEx number. I think despite the higher CapEx, this is a name that could potentially surprise to the upside and gain some further steam that you saw here over the last 4 or 5 trading days.
And Shai, Angelo just mentioned this sort of the cost of what these companies do. And I know you highlighted in the notes that you sent over that this quarter is one where they sort of have to prove the economics behind some of this big spending. Do you think that market patience is starting to run out here for how astronomical these numbers are if it's not starting to show up in some way as meaningful growth?
Yeah, I mean, I think right now we're in the phase of the AI cycle where data center deals just don't move the needle anymore. I think there needs to be some kind of conversation of like, where's the ROI going to start showing up? And that's why second engines among all the Mag 7 matter a ton now this cycle. I mean, for Alphabet specifically, the second engine is going to be their Google Cloud business. I think everyone is feeling comfortable that search and YouTube don't need to surprise that the AI tsunami is not coming for them. It's going to be, can the Google Cloud revenue still maintain 35% year-over-year growth while also being able to fulfill that $155 billion backlog? I mean, they were the most impressive Mag 7 name that reported last cycle, mainly because they said that they landed more 1 billion plus deals in the first 3 quarters of this year than all of 2023 and 2024 combined. So that combined with also like, I mean, Meta is transitioning from being the world's biggest social media company to becoming the AI compute platform wrapped in social engagement. And that's going to incur a lot of higher expenses and margin compression. And they don't really have that second engine they can rely on like the other, the Amazons, Googles, and Microsofts, because they all have a cloud business. So Meta really has to be able to justify this AI investment by making their own products more engaging. And their second engine is a little trickier, but I do believe Threads could be that dark horse in that race.
And Angela, what are your thoughts on what Shai just said? Specifically as they relate to Alphabet here, because I did see that you have a price target increase on Alphabet. You're now up to 370 as far as your outlook for them.
Zero DT, so fucking damn dangerous.
I think Alphabet's got the highest bar at this point in time going into this earnings season. I mean, clearly they have been the winner over the last couple of months. I think the market has said, hey, listen, they've got AI right, and they're a clear cut winner. But the issue here, I think, for Alphabet is again going to be potentially them spending more than the street anticipates that they will. I do agree in the sense, hey, listen, they've got it seems like search is running on all cylinders. They've got more ways to monetize that via AI. Same with YouTube. Cloud is a business that I think they'll continue to see north of 30% annualized growth here over the next 2 to 3 years. So we're not necessarily worried on that side of things. I'd say where I'm a little bit worried about for Alphabet is that the multiple has expanded, and you could potentially see some disappointment if they spend a little bit more than the street. I think we're in an environment right now where
it's going higher and higher. Bookings anymore. It's kind of crazy.
Execution, and when you look at the execution, there's a lot of
back at all-time highs. Tomorrow's title is literally all-time highs, break all-time highs, ha ha ha, back at all-time highs. Like it's some fucking bullshit. Market is always on some fucking crack shit, dude. Can you fucking imagine? Imagine people that were in gold for literally the last month. They wake up every day, right? All these bears wake up every single day in gold, and they're up a fucking 2%, 1%. Every single day on gold, 1%, 2%, 1%, 2%, 1%. Like, bro, imagine the fucking amount of fuming shit going on right now around the market. You can't even fucking believe it. You can't even fucking make this shit up. It's fucking crazy. Right? They just go up, down, up, down, up, down like fucking nothing. Gold goes up, 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 up. Fucking, it's like nothing. Like nothing. No problem. No problem at all in the fundamentals. In the nothing. Just right back up to where it was. Right fucking pump up. Like, dude. I mean, that. I don't know, dude. This is the second fucking time, I'm not gonna lie, that I got caught big time going up, so. This is just. How many times do we do this shit? Like. 1, 2, 3, 4, 5, 6, 7, and 8th. So. This is. Man, we did 1, 2, 3, 4, 5, 6, 7 in like 1 month. This is disgusting. HOD test, like HOD break all-time highs like 7 times. Look at how many times we went down. 1, 2, 3, 4, 5. 5 times we went down major and we came straight back up. 5 times, like what? In like 5 fucking weeks. Oh, and the fucking shit they rotated is like insane. IWM, tech, like financials, like SOXL, like, NVIDIA, like, this just, bro. It's actually super fucking hard to stay on top of fucking everything every time. Like, it's insane. It's like different shit every fucking time, and a different shit fucking dumping, and different shit pumping every fucking time. It's insane. How the fuck? Yo. Oh my lord. Oh my lord. Can't even fucking believe how crazy QQQ. Look, QQQ in 1 week, this shit went from 610, 609 to like 626. How does it have the power to do that? Does anyone else feel me? Like, no? Is this really called fucking taco trade, fucking market rotation? Like, gold is dumping. Look at gold. Look at gold, though. the one fucking thing that's actually fucking dumping to the gap. Gold. Right, this is the one fucking thing I was thinking. One fucking thing is not gonna be able to hold. And finally, it's fucking gold. That's crazy. We were at 609 and we're at 627 in 4 or 5 days. I don't know, man. Something is cooking here. Look at gold though. Holy fuck. This might be the one fucking thing that's actually giving me all my shit back. Holy fuck. SPY gone. Man. It's pretty crazy. I'm up 100% on literally all my gold puts from the morning, but I am cooked on SPY, so I'm still red. I'm in fucking huge on gold here. I lost so much on SPY today. Holy fuck. Literally on 693 alone. Holy fuck. 693 cooked me for like 4 point something K. Man, my gold though, I put in 3K in the morning. That shit went up 100%. But now, yeah, I think I'm gonna ride this shit because I really need some sort of fucking momentum back, money back, and I am afraid. I mean, I feel good with gold, but like, it's just this shit moves crazy. I feel good that it could actually pull back a little bit. A little bit. Market is really just running though. Can't lie. I mean, never in my point where I have been alive where the market is going all-time highs, breaking down, going all-time highs, breaking down, going all-time highs, breaking down 5 or 6 times. So I gotta just call it for what it is. You know what I mean? I've never been alive when it done that in my life. So I'm just like I ain't gonna lie, like this is the first time for me. It's probably the first time for a lot of fucking people. Yeah, I'm just speechless. All right, I'm watching it, being experienced, but too, this is the first time ever. I mean, said I was short from Friday. I gave up, dude. If you are short from Friday, you were probably fucking hurt way more than 500. I'm not gonna lie, bro. Cause look at this shit. Friday we were at 619. We're at 670. This is like fucking $10 up in one day. It's not even like one like what? We started where we fucking were playing at 625. Okay. It's not too bad, but like this is crazy on SPY. At the top, man, look at SPY. Like this is 50 points on SPX. This is a big ass move. I did not imagine SPY could just fucking go and go and go and go and go like this. Some time we live in though. This is some other different time. IWM is actually rejecting and the market is just at the roof. Can you imagine IWM is rejecting right now? Right? IWM is rejecting from 230 and market is just running at the roof. That makes no fucking sense. That makes no fucking sense. Make that shit make any sense? It's so stupid. Now, what I don't need is the market to go down and dump and gold to rally up into tomorrow. That is the worst thing that could happen to me at this point. But I mean, yeah, it could happen. Today's Monday, so shit. We wake up tomorrow, gold's at new all-time highs, and SPY is fucking down a little bit. That could be a possibility. The fifth Buddha says, I love when gold and SPY have zero correlation. Like, there is some sort of correlation. It's just, we feel at this point, in this moment in history right now, in this point in time today, that there's no correlation, right? But for sure there is correlation. It's just not showing right now. Alright, now the market's rejecting and gold's going up. What if that is a fucking correlation? I have no clue. It could be. Right at 150. Right at 150. Market rejecting. Gold. Probably no correlation right now, but I mean, yeah, there could be some sort of correlation. Like one goes down, one goes up, or some weird shit. That's what I thought too. But I think if there's any sort of correlation, it might be one holds and one doesn't type of thing. One stays up and one pulls back a little bit type of thing, maybe, but I could say confidently though, for the last 3 days, SPY has been eating the motherfucking greedy. And the greedy is like the bears eating the greedy, bulls eating the greedy, and like this shit is just crazy, but at the end of the day, I'm not gonna lie, every single day for the last a long time has been chasing kilt, right? Bullish chase kilt, bearish chase kilt, bearish chase kilt, like, and then it just went bullish, so the market is crazy. Like, look at this shit, just going fucking up, up, and then killing the too much greed, and then gone down, down, and then killing the too much down, and then up for 1, 2, 3, 4, 5 or 6 days, a whole week or some shit, and then just straight up down, bro. And then it gets even worse. It gets even worse. Like up, down, up, like wow. Ain't gonna lie. Wow. Back up. That's crazy. I gave up on SPY. Fuck this shit, dude. I'm in gold heavy. I gave up on SPY. SPY is fucked. If this shit didn't go here, didn't go here, didn't go here. If it drops $4, then I mean, oh sure, 2% chance they got fucking lucky and all that, but like yeah, at this point, this is just brainless. Brainless moves on SPY. Fucking incredible. Burned every single majority of the bears. Channel trading too, going up all day long. Fucking sick. How perfectly, like I don't even know how that's possible, but so perfectly This is why I felt so manipulated, because it's so goddamn perfectly down and the perfect bounce up and perfect down, and like this is just, you know, it feels so structured, and it is structured. It's just chaotic structured. Chaotic structured. All right, let's do some polls. End of day polls, folks. Right? I'm curious. If you are personally bullish or bearish on the market, please say I am bullish or bearish into the week. If you are bullish or bearish on gold, say I am bullish or bearish on gold. We're going to do 2 polls going into the day. This is the 2 last polls of the day. Right? Alright, SPY and QQQ first. On SPY, QQQ, SPX, today is making you feel bullish. Today is making you feel bearish. Okay. And on gold, going into this week, bullish or bearish? All right, let's do it. Let's let everyone do the poll for maybe 5-10 minutes and see what the poll does. Let's see what the poll says. Okay. There's 2 different questions. One on SPX, SPY, QQQ, and then one on gold. So everybody do your polls, please. If you are bearish or bullish, say, hey, I am bearish or bullish on the market. And then say, I am blah, blah, blah on gold. If you don't want to do anything, you don't have to do shit. This is, yeah. I mean, I was really thinking, right, in retrospect, how Thursday and Friday was ultimately just burning and burning. But like today, I ain't gonna lie, this shit is even worse because it's one-sided and I was not able to see the channel up and down, just channel trading ascending. But like this is just straight up even worse for me. Now going lower trying, but yeah, this is crazy. Let's see if anything happens off this shit, I ain't gonna lie. But I mean, yeah, this is completely, it just felt so manipulated for me because it's just so perfect. Perfect rejections, perfect bounces, perfect rejections, and just straight up put burning all day. Put burning all fucking day long. Every single time they went lower, I got excited, yes. So did every other bear in the world, but that's literally how they do it. But like, it's fucking nuts how there is a channel for 4 hours. It looks like we went a lot, but we didn't go anywhere. Like, that's the craziest part. Just burning 693 with time. 6,960. We literally absolutely went nowhere, basically, ultimately. Except the morning push up. That morning it was bullish, and then morning bullish, and then just never looked back. And then now we're in a blink of an eye. Close your eyes and you open up your eyes at the end of the day. We're at all-time high territory. And now 6 people says this is making me feel bullish into the week. 5 people says it's making me feel bearish into the week. And 4 people says they're bullish on gold. And 3 people says they're bearish on gold in the market. This is insane. I'm going to vote bullish on the market and bearish into gold, but I could be completely wrong. See, in the YouTube chat, I don't know if anyone voted on the YouTube chat. Gifford put a bear emoji. Willie said I'm bearish. LVL says I'm bearish. Sparky says I'm bearish on the market, I'm guessing. Bullish. Lucky One says I'm bullish on QQQ. Neutral on SPY. I don't know how you're bullish on QQQ, but neutral on SPY. Be bullish on gold and SPY, no? Mike says bearish tomorrow, bullish at the end of the week. bullish on QQQ, flat on SPY, bearish on gold. These are all interesting combinations, but I mean they work. I genuinely thought if you're bullish on the market, you'll be bearish on gold. If you're bearish on the gold, you'll be bullish on market. But correlations could absolutely not be like that. Yeah. It's been an absolute run for the last 4 or 5 days on QQQ. That is for certain. If you look at the last 4 days, it shows 1, 2, 3, 4 days. As they run from 605, we're at 627, so that's 22 points on QQQ alone. Gold never got filled, but regained some sort of level. Market is pulling back before close from 130. Still horrendous cycling, still horrendous candles, but here they are. Yeah, we'll see people's votes again in 2-3 minutes. Some people are still voting now.
Let's do some calls of the day. So Goldman has an interesting gaming call today. They say expect another tough quarter for Vegas. They still name Las Vegas Sands their top pick. They reiterate their buy, 80 bucks is the price target there. However, they do lower Wynn's target to 140 from 148, and they reiterate the buy there as well. Jimmy, we go to you first, because I've ended on Wynn, and that's your big winner.
Yeah, well,
has been one.
It has been. I mean, it's come off a little bit. I'm thinking of adding to it. I had trimmed it not that long ago. But the thought process here is, let's be clear, Las Vegas is not doing so well. In part, that's because the comps were unbelievably difficult in the few years after the pandemic. I mean, everybody was there. And that has died off. There's questions about whether that's cyclical or secular. But if you look at Wynn, the reason to own Wynn, and also, Joe, to your Las Vegas Sands, is the Macau exposure. And even more than that, the Dubai resort, which is going to open up in less than a year, maybe a year, but should be less than a year. And that's where the real boost in earnings is going to come from. That's why I own it.
Joe?
So for us, the better trade is in Las Vegas Sands, and that's because of the balance sheet. We looked at Wynn. Unfortunately, for Wynn, you have negative return on equity, negative debt to equity. So for the quality factor, it didn't qualify in that regard. Las Vegas Sands, a newer position, established at the end of October. I think it's up somewhere around 2.5% since then. So I agree with Jimmy. It looked like they had really strong momentum. Each one of these stocks is kind of pulling back right now from the early December highs. And we'll see where it goes from here.
Okay, let's take Cummins. Take a look at this stock. They've downgraded it to peer perform over at Wolf. It was at Outperform. Joe, you own this name as well. They talk about it having material.
Time is 3:10. SPY is still
couple of years, but they do
at the roof.
lower the rating. They expect strong earnings.
IWM is bouncing, trying since 3. Time is 3:10. See if the bounce sticks or not.
Not that extreme if I look at it. I've got it at 30 times.
I mean, if they somehow go lower like crazy today, that's a fucking miracle. There's maybe a 2%, 5% chance.
It's all these industrial names.
Into the week is a whole fucking different game, different ball game. So
in the power gen business, they've got strong momentum and they're delivering on earnings.
Tactical outperform.
Gold is reverting again.
Scientific, you own that one.
Was down
It's been underperforming recently.
Sorry, was down to plus 0.6 and now is back up to 1.2%.
Recently.
This thing is not an easy ride down either. It is actually bear trapping on the way down trying.
Oh, okay, good. We'll look forward to that. What about AppLovin? Got upgraded today, 700 bucks at
Tesla back into the setup box. NVIDIA above the purple box. QQQ is bullish. So SMH semi still bullish.
You get in, it does, because it
Market
leaves
is
us
at
with a lot of
BOC.
room. July of
I think people are
24
pissed
December
off right now in the
but
market
the
because
stock
it
has pulled back
went nowhere since
significantly.
where it
And
actually
it's
went
had several
nowhere since
attempts to
12:10.
try
So
and reestablish the positive momentum.
4
It
hours.
just continues every time. It fails to do so. So that's indicative to me of a situation where more people are looking to exit than they are to actually enter. One thing to mention, 200-day moving average sits at 489. That would be an
algo
interesting
range
challenge
it's been
if it does
stuck
that.
at since 12:10. It's been some bull.
96 from 87 overweight, reiterated
Shit.
at Morgan Stanley. What do you think there?
3 consumer staple names that we own: Monster, Walmart, and Costco, which is kind of recovering nicely from really a fall of underperformance. I like the consumer staple sector
IWM
right now,
doesn't
and I think
bounce
these 3
anymore.
names, are the names that could be the driving force towards a good year in 2026 for the sector.
All right.
Yes, back to the markets, please. I like the look of this. Plenty of green. Dow's up 150, Nasdaq's up 130, and Jason Katz joined me now. Jason, I really want to talk about gold because that's making the headlines. $5,138 an ounce, and silver well above $100. Okay, precious metals way up there. Why is Bitcoin?
If you think
not
all-time
sharing
high
in
is
this
going to
safe
break,
haven status?
then puts are fucked.
Well,
if you think they're going to
Bitcoin is
reject
a
all-time
risk
highs,
asset. And frankly,
then that shit's
gold
going to
and
happen
silver
mad
may
fast.
not be
So
too far behind.
that's the question.
To take a step back,
and the question
investors
changes
are on edge.
everything.
Despite the
And
strength
the question is hard, yes, but the question becomes, right? The question truly now becomes, right? Do you really think this shit's going to pump up tomorrow and break all-time highs? Because if then pullback is literally no point. It's a dream, right? Or if you think all-time high is going to reject somehow on something, whether it's to close, whether it's to tonight or tomorrow, then that's going to be super fast and it's going to be a real fucking quick question. But I mean, it's just, there's a lot happening, clearly. A lot happening every fucking day, but I mean, a lot happening, clearly. So, look, gold back up 1.34%. This shit is bear trapping every fucking body now from the lows of 250 now showing. Not gonna lie, I'm fucking scared now on gold too because this bitch is reverting. I don't even know what's gonna happen anymore now. Gold's fucking, man, this thing moves so fast too. Now back at 1.4% up. 1.8% to 0.6% to 1.4%, like no correlation with the market either, so I don't even know anymore with gold, bro. This bitch, the gold surge past 5,100.
Many feel we're at a tipping point geopolitically and frankly domestically. And the concern is
11 people said I am bullish into this week's SPY, QQQ, and SPX. 5 people said I'm bearish into this week and into the week on gold. There are 5 people bullish and 6 people bearish.
Assets that can't be sanctioned or printed.
Okay, well, I mean, that makes more sense, though. More people are bullish on SPY and QQQ and SPX.
Not so much like a hedge, but actually
all-time
like
high
a
is
risk
testing,
asset.
so it's basically this pull times 200,000 to 101 million or something,
be very
right?
careful here not to chase.
Got it. You say we're back to a, and I'm quoting now, run it hot economy and tune out the noise market. First of all, explain that. And second, which sectors should people focus on?
So markets are getting their mojo back post the Greenland threat. And that's because the administration's tension will be narrowly focused on letting the economy rip. The one big beautiful bill is stimulative. It's a tax cut. Deregulation is going
Look
to
at
lead to
IWM
major
pulling
capital
back. There's a
market
gap at
activities,
269,
IPOs,
and the market
mergers,
is just at
acquisitions. And
nothing.
now
Doesn't
you're
even
probably
care.
going to get a shadow Fed
They
chair.
don't care that
Whether it's,
IWM's pulling
one of
back
the Kevins
$6
or
from
maybe it's
all-time
Rick Rieger,
highs.
but
It
you know
just
they're going
doesn't
to be
matter.
dovish. And then we have the
Don't
midterms
care.
around the corner.
They don't give
What
a
does
fuck.
that mean? It's all going to be about affordability.
So what?
Mortgage
So
affordability,
what?
using your 401k to make a down payment on a home. As a result,
So what?
you're going to see earnings grow at least 10%, and the economy can grow at 5%. Put it all together, you want to be long this market. You want to be long the economically sensitive parts of this market, Stu.
I am long, and I'm staying long. Jason Katz, thanks for joining us. We'll see you again real soon.
Thanks, Stu.
And Lucas Downey's with us, co-founder at moneyflows.com. I'm glad you're with us. So what do we think is happening? Are we having a lot of rotation? I know you focus a lot on tech sometimes. I mean,
Man, look at that shit.
the rotation
Monumental
seems to be
rotation
happening more
into small and
quickly. Is
mid
that what's
caps.
happening?
Memory chips to run higher.
Thanks for having me, Nicole.
Memory
It
chips
is
are like
a
the new
monumental rotation.
South Sea
and
China
in my
company, bro.
latest note, I was really describing what's happening because a lot of people may not be aware of this. If you look at the Russell 2000 on a year-to-date basis, 3-month basis, 6-month, 12-month basis, it's outperforming both the NASDAQ 100 and the S&P 500, and strikingly year-to-date. So it is a very big, vicious rotation. There's a lot of new leadership.
Crazy.
And
You're
also,
saying the Russell is
the
up like
interesting
10,
fact
or
is,
was
as
up
I was
10%
digging, if you look
since the
year-to-date,
beginning of the
this
year.
is
Like,
as of Thursday, S&P was up 0.5%.
oh my God, look at that.
The average stock in the index was up 4%. 64% of the index was outperforming the index of the consensus.
The average
So
stock
to show
in the
you
index was up
strong breadth
4%.
under the surface. A lot of portfolios are looking a lot different than the S&P 500. And I think people really like this. I think this is a good situation for stock pickers.
So if we're in the violent leadership shift and small caps have been leading the way, really wowing Wall Street, without a doubt, I think you're 100% right there. When you look at the numbers, these small caps
All right,
outperform,
let's see a
and
poll
does that
in our group,
continue
man.
for 2026?
We totally think it can. The
This is a
main
positional
reason
poll.
is if you look at valuations, S&P forward.
You're
earnings
personally into the
expectations,
market short or
PE
long into this
22
week.
times. You look at small caps and even mid caps because it's more of a broadening theme that's happening. Small caps, S&P 600 is in the mid-teens. So the forward PE
Or none.
is at about
You
15.7.
could vote none if you aren't either.
And then for mid caps, they're also at 16.6. So I think there's a lot of value to be had. Also, I'm in the camp that we could have lower rates than what the crowd expects.
This is the last
I think,
official
again,
poll
like
of
your
our
prior
group.
guest was talking about how
The
lower rates
WhatsApp
is
group.
very beneficial for smaller companies. So we think that smaller caps can do very well in 2026.
I'm in on gold, so I guess I have to vote.
That was my
I don't even know. I vote short, but like,
I mean, that lower rate environment would help us more.
I guess this poll is on the market. So
Yes, it
3 people said
certainly
they're
could.
short
In
on the week
fact,
personally
we
into
were
the week.
extra
0
bullish
people are long
on
into the week
small
personally,
caps
and 4
many
people
months
are
ago,
nothing.
really
None.
talking about when
Neither.
the Fed cuts
Nada.
rates. We did this historical study. We're not in a recession. We don't fall into a recession. A year later, small caps just really lead out of the gate. So again, if they continue to lower rates, they continue to focus on the consumer. You know, with all the policies that are coming out from, you know, Trump
We have
administration.
3
he's
people that are
going after
short
credit cards, he's
personally into the
going
week.
after,
1 person that
you
is
know,
long
mortgage interest rates,
into
all
the
of that.
week,
I think
and
it just
5 people that
benefits
is
a lot
nada.
more stocks than the mega caps 7.
If anyone wants to vote in the
And
YouTube
then when
chat,
we look at tech overall, we
this
talked
is
a little
just
bit
a
about the Mag 7,
personal
but we're
positional
also
poll.
looking at memory stocks
Nothing
really
more, nothing
closely.
else.
Why is that?
If you
Where
would
do
like to
think they're headed?
participate,
It's
do.
all about
If
earnings.
not,
If you look
it's
at
okay.
Micron, you look at
If
Lam
not, just say
Research,
nada. That's
I've
fine.
owned them
Neither.
for a number of years.
Doesn't even matter.
You can see that the earnings
I
continue
am
to
right now in the video into Friday.
be
I'm
revised
fucked.
higher by
Gold,
analysts. So
I'm in
it's
heavy,
really this earnings story. So
and
as
I'm
long
in
as this
nothing on the
bottleneck
market. I'm
continues,
scared as
some are
fuck. I
estimating
can't
out
even
to
fucking
2028.
try anymore on gold or SPY
These stocks have
because
further to go, and this has been a trade
SPY
that has
without
been in
setup
place
has
really
been
since
my,
October. So,
honestly,
you know,
my
some of the
biggest
gains that we're
mistake
starting to
this
see, they're
thus year,
starting to play out. But this is a big
2025. Every
trend.
time I try
Money has been
SPY without a
pouring
big
into
ass
this
setup
group.
that I
We're
have
coming
side by
out of some of
side
the
with
software
Nvidia or
stocks and some of
Tesla,
the
it
Mac
always goes to shit
7.
because
So that's
without
part of
setup,
this
the
whole
market never
leadership
drops.
trend. It's
Without
all
setup, the
related.
market never
Just
rallies
the
for
average
real,
stock in
for like
general is
really
just
good
doing
time
better,
or like a
especially
temporary
memory
time
stocks.
for me to be able to
So at
catch a
this
real
point
good,
now, if you
like a
had a
true move
go-to,
out
you
of.
know,
So
you're trying to,
yeah,
it's so hard to time the market or guess what the next
I'd
leg of the
rather just stick
rotation
to
is,
setup.
but you would
True,
definitely
true,
be in what
deductible momentums.
stocks
This
or
shit
what type
sucks,
of
but I
stocks?
mean,
Well, since we have
can't
earnings
lie.
coming up,
Right
I'd
now, it's
really like
very
to hear what
dangerous. The
some
market
of
be
these
going
memory
up and down to
firms are going
all-time
to be
highs
saying
like
about earnings as
nothing
far as it
every
is
single
for
other week.
guidance.
So
I still think these stocks have a lot further to go. I think
we
they're,
have
you
5
know, it's
people
had
that is
a
short
big
into the
run,
week
but I mean,
personally.
we're
We
talking
have
about
4
a
people that
very
is
big
long
catch-up
personally
trade
into
for
the
a
week,
lot
and
of
we have
these
5
stocks
people
that
that
have
is
been
nothing.
penalized for many years.
That's as
So
mixed as we
I
can get.
really like the
YouTube
memory
DSTs
space.
as I
I
am.
really like, you know, precious
Downside,
metals
Bears
has
is
been great. I
Davis is
think
long
it's
side.
very extended. I'd
Nada,
love for a healthy
downside. So
pullback, then to reload into
6,
that area. But
6.
really, it's all about earnings. So
Here
whatever
we have
companies
7 and
guide
5.
higher, those are going to be the stocks that are going to benefit after earnings season.
And do you think that the fundamentals and the earnings improve, right? Some are saying 15%, some are saying 10%. Is that enough to move the major averages to new highs this first half of the year?
I'm
or
feeling that if market pulls back,
I definitely
gold will go higher.
I know that, listen, if some of these
I
larger
feel
companies,
that
even
if
they
gold goes
disappoint,
higher,
I still think that it's possible that some of these smaller companies, right, that
market
are
might go
still
lower.
doing well, that are up
But
very high in 2026,
I could be completely
still think
wrong.
the index can continue to power higher with different leadership like industrials, like materials, like energy.
Gold is
Financials are
moving
doing
hard
well.
though,
So
I will not
yeah,
lie,
I
and I
do
guess the
think that
market's
earnings are
starting
going
to
to
move
pull
a little bit
through. I
harder
do think we're
now,
going
or
to have
maybe
a
not.
very
It's starting to
big year
look
for
like it,
stocks. I
so
just
I
think
don't
it's
know.
not
But
going
this
to
thing is
look
moving
like it
like
has the past
0.10%
few
every
years
single
where you just had
candle.
a few handful of
Gold is
stocks
moving
that have just
0.10% every
really
single
benefited
candle.
the indexes so much.
SPX is barely
All
moved.
right, so we got to hold on.
It moved 8
Seems
points
like a
from the
wild
top.
ride. Lucas Downey, thank you,
So
co-founder of moneyflows.com. Thank you,
I don't
Lucas.
know.
Great
I
to
guess
see you.
it looked like it was gonna go lower, but I mean, it's just not fucking going lower for the last 40 minutes too. So time is 3:20. That's actually crazy. It's just burning puts all fucking day long. Can't even go lower. Maybe just setup is just people hoping on, thinking on overnight shit, gold and SPY market, and just doing whatever the hell it needs to not do whatever the hell it needs to until then.
So it feels like there's a lot riding, maybe not just on these numbers, but on Tesla execution generally. I mean, the shares have doubled since last April, but they've kind of gone sideways. It kind of tread water since September. So what, in your view, would sort of move the needle more substantially in terms of these numbers?
Yeah, in our view, it's all about risk reward. And given the run up that the
Tesla
stock had
earnings
had
is Wednesday.
really since last April, caused us to go to a sell last fall. We just felt like the risk reward was no longer
Look at what they're
favorable
doing
and
on
in fact
Tesla
unfavorable.
into
So
earnings.
our current price target is $350. You know, if you look back over the last
Man, we should have done a
quarters,
poll on
Tesla has
Tesla.
not had a very good
We
earnings
should have
track
fucking done
record.
a poll on
In
Tesla.
fact, they've missed on the bottom line in 7
Not
of
the
the
market
past
or
9
gold.
quarters. So I think what you're seeing with the shares, both today and leading up to this release last week,
Tesla
on
fucking
Wednesday
bullish or
is
bearish.
there's really
That thing
a
is
lot
down
of caution.
minus 3% today.
We know Tesla's earnings were down
Nvidia is down
31% year over
0.8.
year in the first 3 quarters of last year. And now they're getting ready to report the fourth quarter, the first quarter in which the U.S. EV market
Oh,
was no longer
volatile, getting all
subsidized by
bears,
federal
getting
EV
all
tax credits.
bulls,
So
just
we're expecting a more
trapped and ready.
substantial year-over-year drop in
Trapped and
earnings.
ready.
If you look at consensus, they're expecting earnings to be down 38% year over year. And, we think that
Market
earnings,
is bouncing.
really this earnings malaise is going to carry over into 2026, which is our primary
2020.
concern. It's just the disconnect between what the stock price has done over the last several months and the earnings trajectory that we see in the coming quarters.
So, and in your view, is that elimination of those
It's
tax credits
crazy
sort
how
of
much
twofold? On
time
the one
they
hand,
used to do
maybe
shit.
reduce demand for
1:30.
Tesla
This was the
vehicles. On the
HOD.
other hand, they
3:20.
sold
This is
those tax
literally 2
credits, right? Or
hours.
and that was a
Can you
source of
believe
revenue
that?
for them too.
I can't
So
believe that. It's two
what
fucking
sort of
hours.
combined
Did
effect?
nothing, but
How
I
should
mean,
we be looking at that?
what the fuck did that do?
Sure.
Really
So we
just
know
burn all
exactly
puts?
what Tesla's vehicle sales were
All
in the
calls
fourth
too,
quarter.
I
They
guess. That's
reported that
really high up,
in
but I
early
mean,
January, and their sales were down 16%
they pulled back
year
enough
over year.
for smart money
But
bulls to
you know,
be
our
like,
bigger
oh, this
concern with
is
Tesla is
enough,
just the
enough, and
sale
this
of these
is, too
regulatory
much, and like this is
emissions
just nothing
credits
but just
under
doing holding.
CAFE standards of the U.S. government, and that's been a very fast-growing, high-margin revenue stream for the company in recent years. And essentially, that market largely went away overnight with the signing of the One Big Beautiful Bill Act, because CAFE standards were no longer enforced. And so these emissions credits, which Tesla would sell to other automakers which didn't have as much EV exposure, was a very profitable source of revenue
bull flag?
and
Like, this shit is sick.
earnings for the company. And so that largely will go away, and that's going to really affect Tesla's bottom line, in our opinion. So, and
The
then
MACD just
you
coming
look
in
at
crazy now too.
2026,
Like,
and
what even is this shit?
this is a year where Tesla really has a lot to prove from an execution standpoint. They've promised volume production of the Cybercab.
Look,
The
we're
Semi and
showing
the Megapack
7,000
3,
SPX for
this year.
literally
And
1, 2,
and so
3, 4,
you know, it's a
5,
big year
6,
from an execution
6
standpoint,
times
and
now.
we think
6
that
times
management really
now.
has a lot to prove here.
Oh my
And on that
God.
front, what is your
7,000
outlook for
SPX.
robo-taxis? I think Morgan Stanley
We're gonna
sees
be bitching about
1,000 of them
7,000
on the road by
SPX
the end of
for the
this
7th
year.
time now.
Is that reasonable?
In a month and a
Our
half.
outlook is it's a
Shit,
very impressive
maybe it's really
technology,
coming.
but that the rollout is going to be
here
a lot
we are,
slower
back
than
at
what
7,000
management
SPX.
is forecasting to. Already, since they went
Fucking
live
Tom
in
Lee.
Austin in June of last year, the rollout has been much slower than what they had promised.
It's already February.
We
It's
think
already
that will
February
continue. Even last week
2026.
when they announced that,
Mike says I'm
they've gone
bearish on Tesla.
fully unsupervised.
Are you going
in
into
Austin.
earnings? Do we have any brave souls in chat that is going into earnings on Tesla, man?
With
if so,
other Tesla vehicles, which
how fucking much do
did
you
have a
want? And what do
driver.
you
So,
want? Do you want
that wasn't
450 on
really
Tesla,
true.
or
We
do you
just
want
think the rollout to
420 on
other
Tesla, or do
markets
you want
is going to be a
400s on
lot slower
Tesla,
than
or
expected.
470s
Based on
and
our
shit?
channel checks
Let's see
in
if there's
other
any
states
brave
like
souls on
Nevada,
Tesla.
they're well
Am I a
behind
brave
in
soul
terms
on
of
Tesla?
filing
No.
the necessary paperwork.
If I was
in
playing
terms of
Tesla,
getting
I would be
permitting.
playing south to maybe
And so we
420,
think it's going to be
425-ish,
much
but
slower than
I'm
what
scared
they're
as shit.
expecting,
I don't know.
Which is a
Maybe
big
I
risk.
should be more scared on gold. Maybe that's
So
true,
we
but
spent
I don't.
all
For
of our
some
time
reason,
talking about Tesla, not surprisingly. Well, I got to ask you a question about GM
I don't
though
know.
too, because
Maybe.
it reports tomorrow morning.
I'm not
There you
playing
have
Tesla
a hold
though.
equivalent rating, and it feels like both Ford and GM have really been.
I feel like I'll be cursing
struggling
myself because I'm going into earnings every single
to
time they
just
do
correct,
Tesla and
correct their
Palantir. Then, so
trajectories right now. So what does
I can't
GM's need to
find
do?
myself.
How do they need to deliver?
Last time they did deliveries,
Well,
last time they did earnings on
GM
Tesla,
has had
man,
a great run. You look back, they've
I had a
beat
heart attack.
on the
So
bottom line for 13
last
straight
time they
quarters.
did Palantir, shit, I had
The
a heart
stock
attack.
was
Last
the
time
best
they did Nvidia,
performing
shit, I had a
auto
heart attack.
manufacturer last
They're
year.
doing Nvidia shit right
GM
now.
shares
I'm
were
having
up
a heart attack.
54%.
So
Compare that to Tesla, which Tesla shares were up only
it's
11%
okay to be a little
last year.
bit.
So it's had a great run.
Not heart
This was
attacked.
one of our top picks in 2025, and we just went to a hold on valuation in mid-December, and so many things have gone right for GM. They've grown their market share in the U.S. significantly over the last 3 to 4 years.
Interesting.
But really, it's their large EV exposure which gives us some pause here, and was really the reason why we head to the sideline. They've become the second largest company seller of EVs in the United States in recent years.
Neutral territory.
And we've seen where they've already taken some write-downs related to their significant EV assets and investments that they've made. And while EVs have been a major growth driver for the company in recent years, we think there's going to be a reversal of that, where they're actually going to lose some market share this year, due to the EV tax credit expiring. So we're a little more cautious, and again, it was a risk-reward call. The stock had a big run-up, and we just no longer saw a favorable risk-reward, a risk-reward that really appears more balanced here in our view.
Garrett, thanks. Appreciate it. Good to see you.
Thanks for having me.
Man. I'm really about to lose all my profit on gold. That's fucking crazy. They're bouncing, trying like crazy into close. There ain't no such thing as easy fucking real quick in the market, huh? Gold just fucking reverting like nothing. It dropped like fucking 1 point something %. Reverting crazy fast. Ain't no jack shit. As hold it. Just
Tom Lee, as I said, is with me now as we turn back to the markets. He is a CNBC contributor, of course, Fundstrat Global Advisors. So it's good to see you.
Great to see you, Scott.
It's been a turbulent week.
It has.
Is it portend something that's going to come forward
465. Like this is the halfway point of the drop.
Part of it is, of course, as you know, we're in earnings season and markets tend to be volatile around earnings. I'd say that some of the high-profile declines.
God damn! Look, it's coming back up crazy. Gold.
Intel was $17 a year
oh
ago.
my!
So to me, it doesn't surprise me that you could see some of those.
We're about to see something crazy tomorrow. Either gold's going to be up another 2%, or either the market's going to be at all-time highs.
It's a hard one to say it's representative of anything. I mean, you know, the company's obviously been challenged. The other government backstop.
Chris, are you bullish or bearish on IWM into the week? We want to know.
As we turn
into tomorrow, or you have no thoughts. If you have no thoughts on IWM, that's fair too.
Which you still love, but not quite as much.
I mean, we still like the Mag 7 and the mega caps because they're great
Nvidia bouncing,
stories and they have a lot of visibility.
IWM just completely no direction now.
Basic materials, but
look at this shit. It just dropped off from 6,271 and it's just at the 0.618, 264.
Materials are the two top sectors. Why were you leaning that direction as the year began?
What a fucking nuke.
You know, we were
this thing nuked crazy.
A bit of mean reversion taking place in 2026. One of the things we identified in our 2026 outlook
the one day MACD,
was that energy
they were not joking when they said the bulls are here on IWM. Look at the MACD. This is the day I tried to short and they fucking squeezed what all-time highs.
So much of the bad news was baked in that they could have okay fundamental years, but the stocks could do really well.
I feel like you're on the right path as it pertains to small caps and the Russell just a little early.
So crazy.
I mean, remember, let's remind people, last year you told me up here that we're going to have a 50% gain in the Russell.
Last thing people expect is bulls on Russell coming back into tomorrow, maybe. Yeah, the thing is back up. Man.
In 1 month, it's up 5%.
Who knows?
Is that going to continue?
Yeah.
But the last thing people expecting is Russell to be green tomorrow. It's minus 0.22% right now. So maybe fucking tomorrow Russell is at 269 and the shit's back at all-time
caps. And on a relative price to sales last year or price to they were at the exact same point they were in 2001. That was a launch point for 12 years of relative
on IWM.
So
all right.
I think small caps benefit from a Fed turning dovish, possible M&A wave coming, an ISM turning back above 50, and then catching up to where EM, because EM did really well last year, but and small caps usually track that. It didn't.
Fed turning dovish. You know, we have a meeting next week, in case you didn't know.
What happened to the VIX today? Got completely crushed.
So maybe not as dovish as people thought.
Damn.
Several months ago. And by the way,
1.53
as we look at prediction markets, as we think about who might be the next
back up
chair,
to
BlackRock's Rick Reeder is now the leading contender in prediction
trying
markets.
To go.
There's Kalshi. We have, of course,
market
have a
is bouncing too.
With them, 52%. Leaning towards
right back up to where we were. Time is 3:30. 3:45 is coming in 15 minutes, and they truly are burning most of the puts into close.
It reflects the market.
Maybe calls too, since 12:10 and 1:30. I don't even know, but I mean the way they're doing this shit, they literally be coming in with a 5-minute pop and then dump off for 50 minutes, a minute, or an hour and 10 minutes. Pump up for 5 minutes, go to the top of the channel. Dump off for 45 minutes, pump up for 10 minutes, back to the top of the channel. Like it's some crazy shit.
I'm not, but I'm also expecting the Fed to reiterate that they are focused on no longer fighting inflation, but looking at the job market. That's a Fed put on the economy. To me, that's a dovish tilt. And as long as they're not fighting inflation, to me,
They'd
that's
really
a
be
dovish
coming in with the flash 5-minute bounce.
Equal weight S&P is up 4% so far this
Look,
year.
12 to
compared
12,
to the
10,
S&P, which
115
is up 1, and
to
the Nasdaq, which is only up
130.
1.5%.
Yeah.
This shit is
I
not a
think
joke
so,
today.
because,
This
as you
is
know,
just,
not only is the Fed no longer
I don't even know if you want to call that
trying to
shit
establish
planned or
inflation
not.
credibility,
110
which is
to
hawkish.
110, 10,
QT
10,
has
20,
ended,
10,
which
45,
to
10,
me is the same
55.
as
It's just once it
before
does,
there's
there's no
QE
looking back.
starting. So we are
Going
facing a
jack shit
dovish
nowhere.
Fed. Even if there
Just
aren't
perfect
cuts,
timing.
it's still a Fed that wants the economy to do well.
I'm not sure everybody sees every appearance that you have, and people generally think you skew bullish, which you obviously do. That said, you're
Tesla
still
trying
looking
to
for
break the
what
gray
you've
box.
said could be a bear market
Gold
in the
going
middle
bullish.
of the year. Do you want to
Nvidia
explain one more
bouncing.
time why,
SPX
even in the
going
midst
up.
of this bullishness we
IWM
hear from
bouncing.
you still think stocks could have a bit of a rocky road at some point?
Yeah, I think 2026 has the same contours as last year. So in 2026, I think there's a good fundamental earnings story, earnings growth accelerating. But we have two transitions to deal with. One is the Fed, a new Fed. The market always tests a new Fed. So from confirmation, let's say that starts in March, a new Fed happens, and then the market tests him. That's one source of a drawdown. The second is, of course, policy. The White House is much more deliberate this year in picking winners and losers, and there's some uncertainty around the tariffs. Last year, that was enough to drive a 20% decline in the S&P. So I think the combination of policy uncertainty along with Fed could create a drawdown that feels like a bear market, but that's from higher levels as well.
Did it make you nervous, the events of earlier this week, speaking of policy uncertainty? You just don't really know what's coming anywhere, for that matter, whether social media or policy by post or what have you. What did you learn, if anything, about Tuesday's events and then how the market acted subsequently?
Well, I think it's a prelude to what a bigger drawdown looks like, because just a social media post about Denmark caused a 2% decline in the S&P.
I need gold to come through today. I got ran up hard on SP or on SPY today. So
but imagine a scenario where there's a series of policy
I need,
headlines
when I wake up, I need this
that
shit
markets
back
get
to
anxious about. It could easily
650
lead to a
somewhere.
larger drawdown.
Which some
Sorry,
expect more
450.
volatility. Let's find out
452
what others
somewhere.
think as well. Let's bring in Keith Lerner. He is of Truist Wealth and a CNBC contributor. Malcolm Etheridge of Capital Area Planning. Guys, good to have you.
Flip the entire day over today, but it is really bad.
Ahead after this turbulent week?
Data burned, fucking ran up.
I think we're certainly
like this cycle being this tight at 11:20 today.
The entire year, but possibly this quarter.
Went down 1/3, 2/3, and then went up, and then did a 1/3, 2/3 again, and then they trapped everything at VWAP, and then just nuked
he's
it.
going to want to get enacted before the midterms happen.
That's some fucking strategic fucking
years where
bullshit.
the Fed chair comes in and what the market's reaction is to that
Look at that.
immediately following. So I think that there's definitely a ton of volatility coming, but more specifically next
bullshit.
week, I think sets the
Bullish
stage
flag
for some
and
of that
nuke up in the
volatility.
middle of the
Any
day.
of the four Mag
12
7
p.m.
companies that
nuke
we're
2,
scheduled to hear
destroy
from,
puts and
Microsoft,
never look
Apple,
back.
Tesla, and I'm blanking on the fourth one,
Never
sorry. But
look
that's 15% of the
Apple.
S&P 500's. Apple, thank you. I don't know how I could forget them. But that's 15% of the S&P 500's waiting.
Never went
and
higher either.
that is very important because it's going to determine whether the rotation away from tech continues, or if we hear guidance from those four companies that backs up what we heard from TSMC a little bit ago, that basically bookings are sold out through the entire year, and the money that these companies have been spending is not going to slow down anytime soon. That is very helpful for materials, construction, utilities, those kinds of names. And so I think it helps to keep the party going within tech. Or if we do hear some weakness in that guidance,
all-time highs
maybe it starts to
chopping,
show that
all-time highs
more of
moving a
rotation
little bit.
into IWM, the small caps, things like that Tom's getting excited about.
Isn't it interesting that you forgot to mention Apple? The stock's poised for 8 straight down weeks. A lot of investors have forgot about it lately because it hasn't given them, Malcolm, much reason to think about it. Certainly, you know, relative to what their AI story has been, and when you compare it to some of the other names.
Well, yeah, and it's also very telling that Apple has decided to, I won't say throw in the towel, but go in a different direction and work with Google once again for their AI
That is
platform.
true. Sometimes there's no setup. Sometimes the cycle is so damn one-sided that Michael Burry says to not participate
Either
is
they're
to
delaying that
win
or
and
they've
to
completely
participate.
stepped away from Apple Intelligence being the
It's
power
some
of
fucking
the
shit
device,
he
and
says,
now
but
they're
I
focused
mean,
on partnering with names like Google
I
and
ain't
others
gonna lie.
to help bring that
He
along,
ain't
and that's
capping.
really disappointing to Apple
Right,
shareholders
Michael,
like myself.
Dr. Burry
Keith,
ain't
what's at
capping.
stake, do you think, next
Matter
week?
of fact,
this happens at an
Dr.
interesting
Burry
time where these stocks, for a
is
change, are not leading going into their prints in many respects.
He's doing the cap.
Yeah, great
He is
to
the
be
capper.
with you and to
Shit,
join the
so.
discussion. So, I mean, I agree with some of the points
Matter of
brought
fact,
up. I mean, so far we've had this
sometimes,
consensus rotation into
man, I said that saying to my fucking mom. That's the crazy part. Like, my mom told me she was in leverage BTC when that shit was going down, and I was like, oh, Dr. Burry said not to participate. It's literally the same shit happened to me today. Can't lie. Like, the thing fucking goes up and down one direction, and when it does, hear me out. When it does go one direction, right? The bitch goes bullish or bearish for fucking like 2 or 3 days. This goes bullish or bearish for like 2 to 4 days, like fully one directional. It's so fucking hard because it's so fucking one directional. It doesn't even matter if it's near all-time highs or going or not. It's just so many people are trying to short, trying to go long or whatever the fuck. They just keep pulling back, bump up, down, bump up, down, bump up, down. Oh, now we're at 6,000. KG says, oh, what, 6,900? Ah, ha, ha, 6,900, and then boom up, nuke up on QQQ. Dude.
The industrial sector, the energy sector,
I'll just say something, all right?
Philosophy today is
we're setting up for a big move. Whether that's up to 630, whether that's back down to 622, I guarantee you by the end of this week, we're going to be looking back at this week and we're going to be like, what the fuck just happened? Because we already did that in 2 days.
Tom, I mean,
hope you realize that we were at 615 2 days ago. We were at 609 3 days ago. We're at 626. So I mean, the thing moves.
Yeah. I mean,
and she moves
and
hard.
It could be a mixed bag that I think you know,
the thing fucking moves 60 points every day, 50 points every day.
And maybe there's a couple stumbles here and there.
Sometimes I ain't gonna lie, this shit was so choppy, but
linked to the AI trade, and I think it's.
I was saying in the I was gonna say in the WhatsApp group yesterday, right, that we've been consolidating, chopping, burning bulls and bears so much for the last 2 days that we are gonna have some sort of a breakout or breakdown. But I didn't want to say it because I don't want to make people like bias based, right? But like what happened today, morning push up, and that is just, I feel like that's a clear tell sign. The consolidation, and then they either break up or break down, and then that just move happens. I don't know if that means higher than here or lower, but all I can say is they did chop at 6,902, which is some place that they did chop a long fucking time ago, a couple of times, not even once, a couple of times.
We historically would expect it to do, with yields continuing to rise.
Man, did they gap fill too? They gap filled today, right? SPX gap above, and then they never look back. Now we're at quote-unquote all-time highs territories if you look at the shit in the one-day candle. And this is why the market goes up and down, up and down, up and down, because it has 6,900 every single time.
Combination of things. I think
you fucking just go right up and down, up and down, up and down.
Central banks are buying some diversification outside
that's
of the
a
US.
Bravo.
We've been bullish on gold all last year, and we still are this
fucking
year.
Bravo.
I will note at least,
and we'll see what happens into the market.
I do think
to close, but that's
trades are getting a little bit stretched, and you know, with commodities,
can't even lie, it's burning the bulls too since 1:30.
When we looked at silver just last week,
not even burning them that much, sure, but I mean, it for sure is burning.
Since the Hunt brothers
bulls and bears together.
And when we've seen about 5 other
there's a lot of bears down here. That's for fucking certain. Why? Because I kept fucking trying and I didn't even leave here. I just kept waiting. So it's terrible. But I mean,
that's causing that maybe a little bit different, but
a whole ass fucking dollar. We won't even drop a dollar because today's all-time highs territory nearby. Every time we're near all-time highs, they move cents on the dollar, and then they're like, "Oh, we're near all-time highs. We can't drop $2. Oh, we can't drop the dollar." And then when they do, they do. So
now than the alleged digital gold, Bitcoin. What's going on there? Risk on, it doesn't really do anything now. Risk off, it doesn't do anything either. What's it correlated to, if anything?
I think crypto has been suffering from deleveraging. You know, in October 10th, there was that one-time price shock that was the biggest deleveraging of crypto in history. And then this week, crypto was doing well until the Greenland announcement, which triggered the move in JGB yields and a deleveraging of crypto. So I think crypto unfortunately, is sort of would track gold, but you have to subtract deleveraging, and I think that's really what's been hurting crypto.
I mean, people these calls it, oh, it's the the new reserve currency, break out the gong on that. That it's the new gold, break out the gong on that. I mean, have you rethought where you thought that this could go over a period of time? Because your targets on it were so unbelievably lofty. And now I question as to whether they could ever be reached.
Yeah, well, I think Davos was pretty eye-opening.
Time is 3:45. It might be a sin to say they're coming to try now. So
tokenized onto a common blockchain.
Even though SPX might look like it's rolling down, I will not say the word. Tesla is bouncing at the bottom of the gray box right now.
Wall Street are going to merge.
Market close maybe. I have no idea what's going to happen tomorrow, but it is going lower from yesterday's high at 452. 2 days ago, 450s. Somebody in the chat was like, "What's going on Tesla?" Right?
Because there's some concerns about quantum
435,
being able
and now it's
steal or
435. Deciding
capture a third of the Bitcoin legacy wallets. I don't think Bitcoin's story is broken. I think it is waiting for clarity, but institutional adoption's growing. So I still don't think $200,000 Bitcoin is that crazy. It is just a doubling in price. And think about where gold was and how silver's moved. Historically, those big parabolic moves in crypto follow parabolic moves in precious metals. So I don't think that this is a broken story unless it doesn't happen in the next couple of years.
Okay. Don't sound as though your conviction is as resolute.
Well, it's those gongs, Scott, the gongs.
I mean, it's the truth,
They're still ringing in my ear.
Well,
yeah.
You're too young for the gong show. You should go back and check it out.
Yeah.
We'll see. Tom, thanks. That's Tom Lee. Malcolm, thank you. Keith, you as well.
I love Tom Lee. We love a Tom Lee. Market loves a Tom Lee.
Here to discuss it all is Tom Lee. He's FundStrat's head of
Oh my
research
God,
at a
my
CNBC
baby's
trader.
back on
I
live.
kinda wanna
My
start, Tom, with
baby.
what's been going on in the metals, because a lot of people are pointing to this and saying the dollar's collapsing and metals are soaring, and should they feel good about owning stocks in $5,000? Can you kind of just unpack for us what you think is going on here?
Yeah, I mean, I think metals
Say some crazy ass shit
to
on
be
metals.
a real genuine asset class, because I think for many years maybe people thought only gold bags should own gold, but now, especially the last 3 years, metals.
Can't lie.
I think
All the
proven to be a bit
Reddit
of a
gold
juggernaut.
people that were
And it's hard to
perma-bullish
tell
on
how much
gold,
of it is
they won.
geopolitical
Gotta give it to them. It
dollar
only took
and
them
currency
6
weakness
years,
versus
7
dovish
years,
central
but gotta
banks.
give
But
it to
maybe
them.
if it's all three,
They're all laughing.
that explains
They're all
why gold's
posting.
done so well.
They're all
I don't
fucking
think that
happy
those are
with their
bad for
neighborhood
equities,
gold
because
chains
if
now
this is
on Reddit gold.
anticipating dollar weakness
That's
or
for sure.
more dovish moves by central banks, then it's good for asset prices. So I almost think the gold
That's
move could
for
be
sure.
sort of a glimpse into sort of risk appetite.
Who
growing
loves
for
gold
stocks.
at this all-time highs? Who loves silver at this all-time highs? Anybody?
Into more riskier assets or ones that are diversified away from there.
Do
If
we
you
have
look
any
at
Reddit
that, though,
golders
with the
in
dollar
our
weakness
chat,
intact,
folks?
Kelly also mentioned the Mag 7 stocks and the slew of earnings we've got coming up. Weaker dollar has typically in the past, from a conventional wisdom standpoint, meant better for large multinational companies. It helps their overall revenue profile, especially outside the U.S. Is that still something that we want to look towards as a true tailwind for this market?
This shit is
other
no
than
joke,
just
though.
saying
It's so
maybe risk
goddamn
assets
bullish
are in
that,
vogue and we just wanna
like,
play
next
the
time
AI
it
trade
drops,
ad
it's
nauseam
making me
for the
feel
rest
like
of this
mentally
year?
that I want to be bullish.
yeah,
But
I mean, in some ways,
I
think
know
one of
that
the
that's
big
the
sort of
program that they're
real
drilling
stories
into
this
me
year
right
is
now.
earnings
But like,
growth
it's
is
actually
accelerating.
crazy that I'm
And
feeling
that
it
was
right now before it even
because
already
of
happens that we're at
onshoring,
all-time highs. Like,
um,
I'm being
tariff
brutally
headwinds
real right now.
disappearing.
That's
Now, if we have dollar
it's
weakness, I
crazy
think
the
it
fact
puts
that
more
I'm even
upside
thinking
to the
this
earnings
mentally, and we're
story.
at fucking bullish right now
Investors
today,
aren't
and we're
necessarily
going
paying
higher.
for that
That's
right now because
I'm
multiples
just
have been
saying.
compressing, but
I'm
I
just
think
saying.
it
I
really
can't
helps
be the
anchor
only one.
stocks. So between now and the end of the year, I think there can be a lot of reasons for speed bumps, but I think as we exit the year,
I'm
the
just saying.
earnings
Think
story
about
is
that.
anchoring, I'd say, upside to our 7,700 target.
That's fucking crazy, dude.
I mean, we're starting to look at.
Before
we've
we're
seen
literally
one
bullish as fuck
100
right now, but
falling
like
for
before we
gold and
even
the
go
like. So you
down, it's
wonder if
making
we're
me
finally
think
gonna
that the
get back
next
to
time we
talking
have
about
a little
S&P
decent
7,000
drop,
and
I
Dow
want to be
52
bullish
and all of
because
that.
we're
But so
doing
you're not
this.
worried there's going to be
We're doing this shit for the 7th time in a month and a half.
Like that. Does the government shutdown matter? I mean, we just had one at the end of the year, and yet here we are with equities.
Yeah. In the short term, of course, shutdowns create uncertainty, and we just, like as you said, went through the longest one. Those have all proven to be buying opportunities, but it's hard to ignore the fact that gold and silver are like sucking oxygen out of everything.
Yes.
Right.
Yeah. So what do you do with? I mean, Carter Worth, for what it's worth, I want to know what all the technicians, what everyone thinks about this. He's now put out a note and saying sell all of it, the silver, right? Just sell all of it. I mean, it's up.
It's parabolic. It's parabolic.
Yeah,
and it's just in the last 2 to 3 months.
Yeah.
Yeah, and as you know, like when you look at extensions like this, it's dangerous to fade it because you don't know how long it will go. But you're right, a parabolic move probably marks the end of the move, not the beginning of the move. So it's a good question of like timing, but it sure seems like commodities, especially precious metals, needs to have a place in people's portfolios.
If you look at the way that the earnings story is going to shape up, since you brought it up, if we want to look towards this season, we've kind of established the fact that we're
how fucking cooked they did a fucking hold gold above
is going to be
460 fucking gold on
given the future
SPDR
macro tailwinds that
for
the
more than a
market
day.
may have. In your mind,
fucking cooked
are
they
there
to
certain
manipulate
key
this
parts
bitch.
of the market that you should be more exposed to? You had in the past talked about banks and financials being there. We saw the run
At this
last
point,
year, and
I think
since
gold's
the
gonna fucking
earnings
pull
season
back.
has started, those
But
banks
I mean,
have kind of sold the news. So
look
to
at
speak.
this shit
so are
too.
the banks still one of those places you want to be?
Yeah. From FundStrat's perspective, when we did our outlook, our top sector picks this year.
I think it was this date when I was like, I'm gonna go bear, or I am bearish on gold, but I'm not going in or some shit. I think it was last week on Thursday or Friday.
Small caps. I think the
450,
financials are being
457,
buffeted because the White House is
470
choosing
today.
winners and losers, and right now they want to reduce the burden on consumers by potentially capping credit card rates and
historical as
maybe
fuck.
making it harder for institutional buying of homes. So I think this is hurting the banks to an extent, but the bank fundamentals are so good, and I think tokenization and sort of blockchain are really big productivity drivers, and AI is a huge tailwind that I think banks are in the process of re-rating more like tech stocks over time. So I mean, I would use any
Video
of
holding bullish. Coming in with a fucking horn down, cornucopia downwards. QQQ, trying lower, SPX rejection. What happened? What the fuck is going on? Alright, power hour, 350, lotto time. What is going on right now? Let us see. The nitty gritty. Wow. Why can't they have done this at 11:20, right? Some bullshit. Why can't they have done this right at 1:15? Exactly, because it's fucking just perfectly structured to be on some shit until everything burnt and then dead. And then the fucking little tuna whales. Tunas are little squirming on the floor, out of breath. Do some stupid ass shit end the day. Why can't they have done that in the middle of the day, man? Nine minutes left. If they wipe out this whole shit in 9 minutes, I'm gonna be so fucking pissed off. VWAP dropping off. Market is going lower and gold is going higher, trying. Wow, maybe it really is doing that. I don't know. SPX and QQQ. No, I really want the market to bounce now. I'm not gonna lie. I want the market to bounce and gold to go lower. I'm biased right now, so I don't know what's gonna happen into tomorrow. It's just fucking all over the place. There's not that much setup, to be honest, that I see going into close, going into tomorrow. It's just we did set up today. We pushed up. It was north, and now it's just since 1:30 it's been south. But 130, yeah, 130. And there's a divergence at the roof. Let's see. There probably is a divergence at the roof because they're that evil. They, as in the market, we are that evil, and we want to confuse that hard. And there is 130. That's the fucking crazy part. I gotta check. 627.55, 627.60. So there is a divergence at the roof by 5 cents. That's how nasty this shit is. And then they rejected. So that's how crazy bullish they wanted to show today. Or they was. I don't even know what the hell this shit is going on, but something's going on, I guess. Market is rejecting and gold is bouncing. 693 played with all day long though. That is true. Played with all day long. Man, why can't I have gold go down? That's fucking flying. Fuck. Yeah, I might be fucked. I did not take 100% on gold puts at the bottom, and now it's reverting into close. Oh nah. Oh nah. $355. And of course it wants to close that VWAP because why the fuck not? Bro. After everything closed. That is sick. Tech Bradson said I capitulated. What the fuck does that mean? what does that mean? I capitulated? Like you fell into their traps, or like you gave up on what does that mean? I capitulated. you said I capitulated and went upwards. A few stocks I've been flying. I've been watching fly without me. Oh my god, the market's dumping, bro. The fucking gold is flying and market is dumping. Oh nah. Oh nah. Nah, dude, that's nah. What? Nah, what? I mean, it burned all puts anyway, but like, what? What? It's burning all calls anyway, too. What a fucking way to chop. I mean, they did go bullish today, I'm not gonna lie. Since open. Right off open. But what a nasty ass cycle now. Does that mean I capitulated? Man. This really couldn't have came 1 hour, or this couldn't have came midday. This had to fucking come right before it closed. The volume coming in so damn easily released now, like this really couldn't have happened at 1:15, or it could not have happened at 11:20. It had to have happened after every single thing trapped. But this is the most craziest though. 1/3, 2/3, 3/3, and then holy fuck. What a dump. This is actually turning into a dump now. I mean, though, the only thing the only thing doing any real good is 1DT. Can't lie, 1DT plus 0 DT. I don't even know. Only from here somewhere, but like this shit's sick. See, the WhatsApp group said there was 10 people that was short into the week from the top. Crazy. 7 people that was long from the top, and 8 people that was nada. And they pulled back into close. So now they're showing bearish on everybody, and maybe it's 80%, 90% that is bearish into the week, or maybe this is the real direction into tomorrow, but it for sure is doing it after all the 0 DTs burnt. Bruh. That's fucked up. Quite honestly. Quite honestly fucked up. I think these candles here was like algo range candles too. I just didn't draw it, but like, yeah, these are algo range candles and holding it. Oh, well, now I'm trapped on gold a little bit. This is fucked. I'm not trapped on gold, but like, I added on the way down. I'm like, now if this shit opens above today's close, I'm low-key fucked on gold. And I'm down pretty bad on NVIDIA and SPY. So, man, this shit needs to open tomorrow here on gold. If not, it might be cha-ching, cha-ching, ba-bang, ba-bang. Man, is this really how the market rejects from all-time highs again? Oh, I don't know. Let's look at the 5-minute. What a way to come in at the end of the day. Just nonchalantly pulling back with the 5-minute actually going bearish. What a fucking way. 350 going into 4 p.m. Look at the SPX, right? Look at this shit just pulling back all day long since 1050, and we went higher, 10 higher and higher and higher and higher and higher. And the MACD finally went into bear territory at 350 into 4. They're probably going to close like this, but like, yeah, that's great. That's some shit. Market closed. Wow. Well, toodaloo. I'll see you guys tomorrow. Today has been... What the fuck? It's been a bullish day, but also... so goddamn trappy. What a fucking shithole. VWAP into close, man. You know, people could still do SPX into 5 p.m. now. That's the crazy thing. It changed now. The world is changing. Robinhood, shit moves big as fuck until 5 p.m. now. Not 0 DT, but 1 DT. I found that out last week. Times have changed. Yeah, take care, everybody. Have a good one. But yeah, swing trading on SPX is fucking completely different now. It's like they show bullish and bearish like fuck into 5, and then they use that shit on purpose too. Like, I low-key didn't think they were gonna do it, but they did last week. Low-key. Last week. Thursday. Look at this shit. Into Thursday. Thursday pullback. And then Friday went higher again. So they did it literally not even Wednesday. Wednesday and Thursday and Friday. So they did it 3 days in a row. Realized they did it 5 days in a row. Realized that, right? All day long went down. 1. Went down and 2. Closed. 2. Up. 3. Down. Up. 4. Down. Up. And this is the 5th day showing down. What a fucking goddamn cycle, man. Crazy work. Crazy work. What else do you fucking describe this shit? Like, crazy work. They're working. Yeah, SPY until 4:15, SPX until 5 p.m. Then futures people come in like crazy from 6 to 8, and then the Asian people come in. I'm Asian, so it's okay. The Asians come in from 8 to 8 to 12, and then the midnighters come in from 12 to 4, and the crazy power comes in at 4, and then from 7 to 9:30. It's a whole different world too. But yeah. It's just slow as shit. Everything will be probably kind of volatile because we're at all-time highs again, but best believe we're about to see something crazy overnight. Wow. I'm gonna stay for like 10 more minutes. I want to see what happens. I'm going to be watching gold overnight. I'm in gold, so gold futures. 5,000 testing to close, and then bounce up with 5,000. 5,050. That's so crazy, dude. 1:30 into 4 p.m. Like, that's a whole fucking 3 hours. 3 hours and 30 minutes. Burnt the fuck out of puts today, and then went lower. It's so sick. DSD said crazy day. Stayed up top all day, never seen nothing like it, really. I mean, I feel like we've all seen some sort of variation like this, but like, you can't lie, yeah, it is nasty as shit. And every time they do it, it's like it looks completely different. And I won't lie, I've never seen some shit like this too, where it's like barely lower at 3/3, and then because it goes at least a little bit lower than VWAP or some shit, but this is just so perfectly structured. 1220, and the only thing that is this makes sense in my head. This 1220 shit, this channel, I don't even know. I guess this 1220 perfect, right? 1220, 1120, sorry, 1120, 1040. Like, this is, I mean, I'm speechless. But yeah, true. Just some sort of crazy ass fucking way. They just waterfall this bitch into close, and then nobody knows what happens because they waterfall into close. That's a crazy fast dip though. I mean, like, if we look at the past couple of days, they kind of took their time going into close, wouldn't you say, or no? Maybe they didn't. Right, 2:55 into 4 p.m. all day long. This is 2:35 into 4 p.m. This is all day long, bear trap. So the fact that they did it really close to close like that, super fast, might mean that all these bulls are now trapped. But I mean, that also doesn't mean shit, right? That really doesn't mean shit. So, I mean, it actually does mean something. It happened fast. So maybe the Bears are in control tonight, or maybe they pop this bitch up and gold goes down. But all I can say is, yeah, it is wild out here. They did it so nonchalantly. 350. Everything burnt to crisp anyway. Everything except going fucking upside at 9:30 off of jack shit. IWM. IWM in its own world, so gap fill played and then just did its own thing. Wild how fucking volume just holds like that, bruh. What the fuck? That Tom Lee video from 20 minutes ago has 1.5K views already. That's wild. Everybody's interested in metals right now. And they're saying metal shit is explaining a lot of the bullishness of the market, or has a lot of way in it or something. Interesting. Interesting.
All right, let's start with this move that we've seen in nat gas. And when we talk about the Widowmaker trade, especially when you start to come into March, how does this compare to some of the volatility we've seen in the past?
It's been quite volatile. We haven't seen this since the last polar vortex in 2018. The duration of the cold and the intensity of cold pushing south has frozen off about 10% of the gas, and we're at record demand. You got to realize that over the past 10 years, we haven't really grown storage maybe 13 BCF, but we've grown flowing gas by over 50%. And so when you have disruptions like this type of cold event, the market tends to rock.
So when we talk about 10% of production impacted, how long does it take for that to come back online?
That depends on the weather. We watch the weather, all the models. AccuWeather's talking about it lingering, and that's the concerns in the market, not necessarily the immediate impact, which sent prices into $20 in the cash market, $60 in the Northeast, and will remain that way for the week. What we're really worried about is how long will this last, and how much will that draw down stocks?
The fact that we did see this, I would dare to call it a parabolic move in nat gas over the past week. I mean, there's been a lot of talk that a lot of folks have been positioned short ahead of this. How much of this is a short squeeze and that unwind? And if so, how does that ripple out to other parts of commodities if it does?
Well, I think, it ripples out to the power markets. As you know, the gas generation is a significant and necessary part of the electricity markets. And so those prices start rocking, but they have scarcity issues themselves. We also haven't put down that many power plants as we've grown population and GDP. And so we have some scarcity in the electricity markets. And so that's where it's rippling for this week. The real concern is how long will it last? Will we run out of storage? Right now we have a deliverability problem. Will we have a refill problem in the summer?
Who benefits from all of this? I guess just from an investor take, looking across the energy complex, the producers, the infrastructure players, who's best positioned to benefit from this?
I think Expand Energy, if you're looking at equities, I know most of the viewers love equities, not commodities. They seem to be the least hedged, right, and most exposed to higher prices. And so prior to this cold shot, and you talked about people being short, the market looked a little bearish. We had a lot of flowing supply, storage was high, looked like we might even go into containment in the summer. That is off the table right now, and now we may be looking at, do we have a problem refilling?
Does this mean that we're going to see, I guess, a repricing in nat gas? And I realize crude is moved by different dynamics, but if you just look at the energy complex overall, could we see higher prices this year?
Yeah, definitely. The problem is will it warm up and become a heat fest like we usually have in the winters, or as of late, or does this cold continue for weeks? If it continues for weeks, we will have a complete repricing of the natural gas curve.
Well, joined by Ben Barron, who's the CEO and Principal Analyst, Creative Strategies. Hello to you, Ben. Thanks so much for joining us, and sorry about the mispronunciation earlier. What are you expecting to hear from these Mag 7 members, particularly because the four that we hear from this week are all very, very different companies?
Yeah, I think the main conversation is just going to be the shape of demand, right? I think across the board, you're looking at whether that's semiconductors, software, or related to Apple and others, and consumer hardware. There's always a curiosity of what are we seeing in terms of demand? I think in semis and obviously cloud software, there's elements of sustained demand that continue to come out across the industry. I think there's a big question mark around what are memory prices and storage prices doing to end consumer hardware. So I think there'll be a lot of questions from analysts on the commentary call for Apple on what they're seeing, if they're seeing softness, maybe some strategies about how to absorb some of those in their margins, which we think, again, Apple's well positioned because of their margins to absorb.
Is it bad that I want a bear trap tonight?
I think the shape of the demand It's really the continual thing that people
Is
want
it
to
bad that I want
and
gold to
have
go lower
answered
somehow?
relative
And
to
I
these
want the
earnings.
market to just stay, not like go higher, but
Okay,
like,
so the shape of the
damn.
demand, but so far as who we've heard from, it's been Intel, it's been TSM, which don't seem to have a demand problem.
This is such a
It's what
push.
they're able to pump out that seems to be the challenge here. So what have they told us, which is likely to give us some clues about what we're going to hear from the next ones that are up to bat?
Yeah, I think when it comes to AI
volume
infrastructure,
today.
there's just no doubt at this point that this is an up and to the right situation. You know, one of the things that we think is interesting to look at is how much of that is priced into now. It feels
what
like
a
the constraints
crazy
are
ass
well
push.
understood at this
What
point,
a
whereas
world we
last
live in.
year
Like, it's just
when we were
pushing up,
looking at
down and up
investment
every
dollars,
day like
we were
nothing.
not so clear as to
How the
kind of
fuck
what
does
those
volume just come in like
end
that, like
constraints were.
nothing?
So it seemed like there was still upside in earnings. We think now most people on the investors
Right, have a good day, everybody. That's
that
it.
there's constraints, and I think the question is
I
going to be
guess
how
that's
much
it.
of this is really priced in, how much of this can surprise to the upside. But again, it doesn't feel like
Market
the
is
demand
reverting
environment
into
is going down,
3, 4,
especially relative to
15,
AI.
sorry,
Software, I think, is another one. You know, we want to see enterprises continue to adopt AI, and I think that'll
I don't want to
translate
sit here
itself
and
to
watch
big
this
cloud
shit till
earnings,
5.
the
I'm
CSPs
gone.
like Amazon,
I gotta go
AWS,
out.
and Google.
It's
But
cold
they've
as
had
shit.
big backlogs, and I think they want to see that commercialize. That part, again, I think is
want some
less
fucking food.
less of a concern from the demand point. Again, like you said, the challenge is the ability to meet that demand with their supply.
If the constraints are pretty much
Everything's so
well
shut
baked in
down.
at this point then, Ben, I mean, does it get harder from here? I mean, what have these companies then got to say?
Yeah, I think the names that we typically talk about, it's gotten a lot harder. I think right now when we talk to investors, there's a lot of conversations around where are pockets of the industry that might not be as kind of baked in terms of earnings, might be lower in the adoption cycle, but well positioned. You know, again, fringe parts of the supply chain. You hear this come up a lot about folks in co-packaged optics types of names. So there are parts of the market. I think, again, the big names, you know, like we're talking about, most of that is being well baked in, with, I think, some exceptions around, you know, the Microsoft, Google, and Amazon, where, you know, they could again surprise to the upside in the conversion of their backlog to those dollars and outgrow their AI expectations. So that, I think, has more opportunity on the suffer side. I think, you know, again, in semis and infrastructure,
oh my God,
we largely know what those constraints are for the rest of the year, and I do feel a lot of that is already baked into most estimates at this point.
Yeah, the Microsoft, Google, and Amazon's the three names that you mentioned. I mean, it certainly seemed like the narrative last earnings quarter was one that they had better sort of spending discipline. When you come to a name like Meta, do you think that we see the sort of response that we saw previously with that capex indigestion, for lack of a better phrase, or do you think it'll be different this time given what they've been able to do over the last few months with obviously moving some parts of the business, reallocating capital to, you know, things that aren't working, from things that aren't working to things that are working, and then also doubling down on nuclear?
Yeah, and to be honest with you, I think that's a continual sort of question that we're going to look at regarding their CapEx, all the companies that we're talking about throughout this year, right? I think everybody wants to see them spending on things that return ROI. So whether that's part of the AI CapEx or, again, parts of hardware, or in Meta's case, more toward what they're doing in AI and in
I don't see a
advertising,
way gold
how
can
they'll
go
allocate
lower.
infrastructure
The market
versus their
goes
own
lower
chips
tonight.
versus
That's
maybe
the reason
partnering
why I
with
said what I
others, which
said.
is, again, a part of that discussion. So I think
It's
the
just
expectation
fucking
is that everybody in there will
speculation,
make
correlation
infrastructure and
based on
CapEx
gold and
decisions
SPY means
based on
jack
where they're seeing
shit.
those dollars. If they see slowdowns in parts of their business,
dude.
they'll shift money to other places. So,
Fuck
and
knows.
I think that most people want to hear that sort of
New world.
not
New
just
all-time
patience,
high.
but also just smart
Market trying to
allocation
make.
of capital as a part of that narrative. So I expect all four names to be relatively disciplined, but also good in their commentary about where they say they're spending because they're seeing an ROI on those dollars.
Yeah, we certainly saw those questions in the market last quarter with respect to, you know, show me proof of all this spend, and we'll no doubt see a continuation of that as well. You know, a lot of what we talk about is what these companies are going to say. Do you suspect there's anything as far as an elephant in the room with some of these companies? I mean, you mentioned some of these memory prices. Obviously, everybody's wanting to know how long this is going to go on for. But is there anything you suspect that could be a risk on the horizon for some of these names?
I mean, I think the power one comes up a lot. We get into a lot of these conversations about, are we up against a wall where we just don't have power for a lot of this infrastructure, despite the demand from enterprises to continue to adopt this and spend, and they need to be running this on cloud software. There's another element that I think is equally interesting to all of this. If you look at not just the narratives from TSMC, but also Intel, and I expect you'll hear this from AMD and others, we're seeing this incredibly strong demand for just general purpose cloud CPUs. So that's, the former business, right, of just running cloud software. Everybody likes to talk about AI workloads, but just cloud software itself needs to have an upgrade cycle. And so I think there's just so much coming into this space that there's questions of where do they balance, right, that infrastructure with both AI and their general purpose clouds, and then how can they continue to build out power infrastructure, power shelves to be filled with new capacity when we're up against a power constrained, situation. So I think that's still going to be a huge topic of this year, because we continue to forecast power constraints as well, just at the ability to power these shelves where AI infrastructure is going.
Yeah, and you wonder if they have the visibility to do that. Obviously, as you say, power is a pretty big elephant. You need a lot of energy to power all of this stuff. Really appreciate it. Thanks so much for joining us today, Ben.